okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors, okay? So you might see a setup that looks similar to price might come up, it might rally past the resistance, you know, come back down, and then mirror the resistance, you know? Very common. You have setups like this for a downtrend type of setup. And then for an uptrend type of setup, could definitely look like this. Price might bounce here. And then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart. That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. And price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again, boom. This area of support made this area of resistance created here, okay? So I make it simple for you guys, man. I do not want you guys to be struggling, okay? There's going to be times, life is going to be hard, the charts are going to be hard, people are going to be doubting you, people are going to be hating you, and there's going to be times you might not even believe in yourself. And all that doubt has to be killed, okay? And indicators equal doubt. If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this, okay, for a year. No indicators, okay? No indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay? That's what I need you guys to do. So for a year, no indicators. And I want you guys to just go hard, man. Go hard. Put in 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level, and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God, and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay, if God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay, whatever's inside of your heart, you got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay, follow your heart and follow your setup. Okay, you tell yourself, I'm only going to play break and retest. Okay, if you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. Very, very passionate about teaching this, and if you want to learn more about it, and if you want to get a free stock watch list, should see you at stackmode.net. Say prayer to God, keep grinding. Catch you in the next one. Peace. Hey class, so I want you guys to turn off indicators, okay? So we got a candlestick chart here, all right? Let me just go ahead and draw it in a line format, okay? If you have squiggly lines going through a vertical chart, you have to understand that it was not designed that way. And if you continue to rely on said squiggly lines, such as EMAs, MACD, SMA, if you continue to rely on these things, you will not be successful. You will not be successful on the charts. You have to understand that the charts can only go one of two ways, up or down, okay? The candlestick. I want you guys to understand that these candlesticks can only move in two directions, up or down. And everything is based off of levels. Why do you think you see price reacting at the same area? For example, say you have market going in an uptrend, okay? And market found an area of resistance, okay? So an area of resistance is going to be an area where people decide to sell at, Okay, so you're gonna have sellers here. If price decides to come back up, price has a good chance to short at that same area, okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors, okay? So you might see a setup that looks similar to price might come up, it might rally past the resistance, you know, come back down, and then mirror the resistance, you know? Very common. You have setups like this for a downtrend type of setup. And then for an uptrend type of setup, could definitely look like this. Price might bounce here. And then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart. That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. And price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again, boom. This area of support made this area of resistance created here, okay? So I make it simple for you guys, man. I do not want you guys to be struggling, okay? There's going to be times, life is going to be hard, the charts are going to be hard, people are going to be doubting you, people are going to be hating you, and there's going to be times you might not even believe in yourself. And all that doubt has to be killed, okay? And indicators equal doubt. If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this. Okay, for a year. No indicators. Okay. No indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay. That's what I need you guys to do. So for a year, no indicators. And I want you guys to just go hard, man. Go hard. Put in 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay, if God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay, whatever's inside of your heart, you got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay, follow your heart and follow your setup. Okay, you tell yourself, I'm only going to play break and retest. Okay, if you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. I'm very, very passionate about teaching this, and if you want to learn more about it, and if you want to get a free stock watch list, I should see you at stackmode.net. Stay prayed up to God, keep grinding. Catch you in the next one. Peace. After you've been grinding for years, really busting your tail, you want your money to work harder than you do. And dividend investing might be the easiest way to build passive income. But most beginners overthink it. But dividend investing is really simple. You just buy shares of strong, established companies, and they pay you cash just for holding them. And that's it. So imagine waking up to deposits monthly, weekly, and certain dividends pay out in different ratios and frequencies, and they hit your account while you sleep. That's the power of dividends. Let's go and let's jump into it. Let's understand what dividend investing is and how you guys can start building some passive income for you and your families. Inshallah. Let's talk about dividend investing. Making our money work for us is going to be the most ample way to, one, get our mental health back. Okay, I understand we're grinding hard, working year after year after year after year, but let's at least make our money make us some money. Okay, we're not just grinding. Okay, no more exchanging time for money. Okay, it's time to start exchanging money for money. Okay, this way you guys are going to be a lot mentally healthier. You guys are going to have time to get closer to God, work on your family relationships, work on yourself, work on your business, and understand that when you have your money flowing within that asset river constantly, you're using your cash and buying more assets with it, and it's flowing in the river, flowing in the river, you could pretty much never work again. Okay, so when people talk about passive income retiring, it's about putting your money within that income river. let's go and let's talk about how to make our money work for us. Inshallah. So what is a dividend in the first place? A dividend is going to pretty much be a thank you payment. Okay. And they pretty much just tell you, hey, you've been investing in us for a long time. You've been believing in us. And I'm going to go ahead and give you some money back because we've been crushing it on the company side. So a dividend is a thank you payment. Okay. So whenever you invest into a company that pays out dividends, or you're invested into an exchange trader fund, okay, which is a compilation of companies just put into one big giant fund, then you could also get dividend payments from there if the fund pays it out. Okay. So let's say, imagine you lend money to a friend, right, to start their lemonade stand. Okay. You believe in them. You think it's going to turn up. And every month they start giving you $10 from the profits as a thank you because he started turning up, started making tons of money. Okay. So that friend who started the lemonade stand decided to give you a portion of the income because since you gave him that initial investment to believe in him, okay, and you funded his company, he did the right thing and gave you some profits back because you had his back and you believed in him. And that's what a dividend payment is. When you believe in these companies, when you believe in these ETFs, then we're able to get some profit back, inshallah. And that's a dividend. It's real cash paid to you just for owning a piece of the company, okay? And it's passive. Okay, you don't got to do no work for this money. All you got to do is buy. Okay, all you're doing is turning money into more money. Okay, dividends is going to be one of the most extreme forms of passive income, especially after you guys have grinded out 6 to 7 figures. Okay, being able to plant that 6 to 7 figures into some dividends and get paid $5,000 to $25,000 a month just for having your money parked is going to be a really, really good way to just chill in life. Okay, and it could be regularly. Okay, it's usually paid every 3 months. Okay, so quarterly, and it's very, very safe. So usually only strong, profitable companies pay them. Okay, it's not a lot of broke companies paying out dividends because they can't afford it. Okay, a lot of companies paying out dividends are companies that have it all based out. They know that you investing into the stock market, okay, is going to go ahead and give them more income. They're then going to be able to turn that income into bigger buildings, hire better and more employees. Okay, which should lead to them making more income. Okay, better products, faster products being made, etc. So that way their income can skyrocket. Okay, and when that happens, we benefit from it too. And a lot of the times too, dividend payments, okay, have certain dates set to them. Okay, sometimes you get dividend payments monthly, sometimes you get dividend payments quarterly, a few times a year. Okay, and every single company and ETF is going to have its own different dividend payment cycle. So before you invest into something, make sure you're doing your research. So here's an example, okay, just one more time to make sure we understand it. Let's say you own 1 share of Apple, okay. For 1 share of Apple, Apple pays you 24 cents, okay. You can check your phone, okay, and that money is sitting in your account, chilling, okay. You didn't have to sell the stock to get it, okay. All you have to do is just have your money chilling in stocks. So you get paid for turning your assets into more assets. Okay. So after all the day trading is done, after grinding your business hard for years, after grinding corporate hard for years, take that money and you guys can easily park it into some dividends and start getting yourself some monthly cash flow. Okay. Put some mental health back into yourself and take some of your money and let's try and get some passive income from the money we already have and we've been working hard for. Let's go to the next slide. So let's go and let's talk about the dividend yield. So the dividend yield tells you the return on your money right now. Okay. And it's kind of like the interest rate number on your savings account. Okay. So as you know, for APY accounts, okay, interest though, is a reason why God says not to do it. It's not something that'll leave you profitable in the end anyways. Okay. So focus on things outside of interest. But let's say annual percentage yield. Let's say there's an account that'll give you like 3% per year. Okay. With inflation and taxes though, that's not anything. Okay, so when you're focusing on dividends though, something like that, okay, then you're going to be able to get a lot better bang for your buck and for your value. Okay, so average yield, right, around a 2 to 5% average yield is going to be healthy. Okay, and a red flag, if the average yield is over 8%, okay, be careful. Okay, it might be a trap and the company could fall off later, even if they're paying out big dividend payments right now. Okay, you want to try and have your dividend payments be as consistent as possible. Okay, you don't want your dividend payments to go down. Okay, if you're getting $5K a month for the money you have invested, that's how much you want to be getting. Okay, you don't want it to go down to $3K 1 month and then your bills and calculations are all thrown off. You don't want it to happen. It can be really, really frustrating. Okay, so let's do the math. So let's say the stock price of something is going to be $100. Okay. And then they pay you $4 per year. Okay. So the yield, okay, is 4, since they're paying you $4 a year, divided by 100. Okay. And that's the stock price. And that's going to equal a 4% return. Okay. And that's how the dividend yield is going to go ahead and be broken down. Let's go over to the next slide. So is it safe, right? The payout ratio. So let's talk about the pizza analogy. So think of a company's total profits as a whole pizza, okay? And the payout ratio, it's how many slices they decide to give you, okay? And that's going to go ahead and be exemplary for the shareholders versus how many they keep to grow the business, okay? So how many slices of pizza are they going to give to you? And then how many slices of pizza are they going to try and hold on to, okay? And safe, okay? So under 60%, okay? If they give you 6 slices and they keep 4, okay, that's safe, okay? That's safe. Why? Because they were able to pay you a little piece of the pie, okay? Make sure you eat and make sure they eat too, okay? Because they got to be logical. They can't feed you if they're not feeding themselves, okay? So they be logical. So, but it can be dangerous if they're giving away over 90% of their pizza. If they're giving away their whole pizza every single time, then they're going to have no food left over for tomorrow. Okay, so you have to watch and look at the payout ratio percentages. Okay, so let's say company A, right? Let's say earn $10. Okay, and then they give you $2. Okay, they would have $8 left. Okay, and that's going to be pretty safe. Now, let's say company B, right? Let's say they also earn $10. Okay, and let's say company B paid you 9.99. Okay, they paid you $9.99. Okay, they would be left with 1 penny left. Okay, what type of investments or growth can they do then? Okay, so focusing on the payout ratio of the dividend you're looking at is going to be extremely imperative to making sure that you're not making any random decisions unnecessarily. Okay, focus on companies with safe payout ratios, because that way you can see that they have their math baked in for consistent scaling year after year after year after year, not just random sporadic payments being sent out and then they have a possibility of going broke and then there's really going to be no more dividend payments. Okay, so in order to avoid all of that, avoid the hardships, try and focus on dividends and companies and ETFs that pay out very safe ratios so that they don't go broke, so that they can continue to pay out dividends so you can continue to feed your family and yourself, inshallah. Let's go to the next slide. So let's go and let's break down the snowball effect, okay? The compounding effect, stacking dollars, okay? Get into stack mode, okay? Stay down. I don't care if you got to wear the same clothes every single day, okay? Keep driving that old car, okay? It's not time to get a new car right now. Stack it up, okay? Set some parameters. Tell yourself, you know what? Until I have 100,000 stacked up, I'm not going to get X, Y, and Z. Until I have 1 million stacked up, I'm not going to get X, Y, and Z. All this just takes a couple months and a couple years, okay? You guys got it. Go hard. Go hard. Go hard, because it's really time to automate your wealth. Okay, and it's going to be the secret sauce. Instead of spending your dividend cash on coffee or random other things, okay, you can press a button called drip. Okay, so what drip is going to do is take your dividend income. Okay, so say you're making $100 a month from dividend income. Okay, you could take that $100 a month and buy some more dividend shares with that. Okay, so that way that $100 a month will turn into $150 a month. You keep doing that, it'll turn into $200 a month. Okay, and then it keeps stacking up over time. As long as you're in stack mode, your account will be in stack mode right with you. Just know that. Okay, so drip equals dividend reinvestment plan. A lot of brokers have it to where you can automatically just reinvest your dividend income back into more shares. Okay, so the computer or whatever broker you're using uses your dividend cash to buy more shares automatically. Okay, and next time you'll have more shares, so you get a bigger bag, bigger check. Then that bigger check buys even more shares and it spirals upwards. Okay, so trying to have your life together outside of the market, okay, the more you have your life together outside of the market, the more money you'll be able to generate from the market. Okay, just keep cycling your money back into shares, back into more shares, back into more shares, and keep upping that income. So let's say year 1, you own 100 shares. Okay, you invested super duper heavy. Then by year 10, okay, you own 150 shares. Okay, and let's say you didn't even pay for the extra 50 shares. It was just stacking up over time. Okay, so once you start planting that seed of ownership, your tree can do nothing but sprout and grow, inshallah. So plant your seed today so you can start sprouting. You guys can start dropping fruit everywhere. Okay, but you gotta plant your seed. You cannot start dropping fruit everywhere until you plant your seed. Okay, so then from year 30, 20, then from there you're earning a full salary from dividends alone. And then you could chill out. Okay, you still have your money parked away in the dividend, and you're getting paid for having your money parked away. It's crazy. Okay, if you make the right financial decisions, you stay focused on God, and you don't feed your flesh, you guys can get out of poverty. Okay, you guys can be rich forever. You can never go broke again as long as you maneuver your wealth into that constant asset river. You have to continue to flow your money in that asset river. Otherwise, things can get hard. Okay, so throw your money into the river and start flowing so you guys can grow like the big oak tree. Plant all your seeds today. Let's head over to the next slide. So let's jump into royalty stocks, right? Dividend aristocrats. So these are going to be the MVPs of the stock market. Okay, and to be on the list, a company must have been in the S&P 500, okay, which is accumulation of like the most powerful stocks, okay, put into one index, okay, known as the S&P 500. And two, okay, they must increase their dividend every year for 25 plus years straight. So if a company is paying, right, 20 cents per share, okay, in 2010, okay, and then in 2011, let's say they're paying 25 cents per share, okay, that's going to be a 5-cent increase, okay? So if they're increasing their dividend amount every year for 25 years straight, then that's going to be a big MVP. And that means that these companies have survived recessions, wars, bubbles, and still paid their investors more money, which means that a lot of these companies are going to be constant investments due to the fact that it seems like that these companies have become a staple in human lifestyle. Okay, companies such as Coca-Cola, okay, or Johnson & Johnson, the Band-Aid company, for example, okay? So companies that incorporate into lifestyle, okay, really are going to be the ones that will survive year after year after year. So let's go and let's talk about the risk with everything, okay? Pay attention to that yield trap, just like we talked about on the previous slides. The yield trap is going to be really important to pay attention to. Sometimes you see a stock paying 15%. Okay, you think you're about to be making bands every single month just by investing into a simple dividend. Okay, and they might pay you out for a couple of months. Okay, you might be getting 5K a month payments, for example. Okay, for 3 months, and the next thing you know, they start losing profit. Things start getting shambles, and then boom, and then the high yield decides to stop paying you out what you're used to getting paid out. And if a company runs out of cash, I'm telling you, they're gonna cut that dividend to zero. Okay, so just with the pizza analogy, okay. You can't help anybody in the world if you're not helping yourself first, okay? So if you have a box of pizza, right, there's 10 slices of pizza, okay? If you give away 6 slices of pizza, okay, you'll still have 4 slices of pizza for yourself, okay? You can still eat, you're not gonna be starving, and you're gonna be chilling, okay? But then take person B, okay? If person B gives away all their pizza, they're gonna have no pizza left over, okay? And that might seem like a good thing instantly, okay, because they fed everybody and ignored themselves, but that's not, okay. That'll turn into later frustration, later hunger on that person, regret on that person, okay, and they're going to be like, well, you know, people might not have fed me in certain type of ways, okay, leading into certain type of mindsets, okay. So even in dividends, it tells us it's really important, okay, to keep our bag right. Before we can help anybody else, our bag has to be right, okay. And dividends show us this. If a company is giving away all their money, they're not going to have enough money to reinvest into more ads, into more workers, into better factories, etc. And they're not going to be able to scale at the way that they would like to, if at all. Okay. So if a company runs out of cash, they're going to cut the dividend to zero. So be wary of new companies, especially paying out big dividends, because it might not be consistently for long. And that's when the crash comes. Okay. And when they cut the dividend, the stock price drops even more because it's going to go ahead and lose value, which means you lose twice. So not only would you lose money on your base, money that's parked in there, your dividend payments are going to go ahead and get cut as well. So a golden rule, right? So a safe 3% return is better than a 15% risky return that has a chance of going to zero, okay? Don't be greedy. Focus on consistency. The name of the game in trading, investing in general, is consistency. Treat yourself like an oak tree, and you gotta plant yourself in the ground. You gotta give yourself water and sun, okay? if you're not planting your seeds and you're just trying to hit the big 0 to 100, you're just trying to go buy an oak tree and plant it in the ground, it might not be stable. Okay, it didn't get time to connect to the roots, to the soil, and it might topple over. Okay, but when you're the tree and you grow it day by day, limb by limb, okay, root by root, okay, you're going to know the field, and your money is going to be planted within the soil. It's going to have a lot better baseline to it. Okay, even if stock prices were to start dipping down, since you have so much baseline planted, okay, stuff isn't really going to affect you. Okay, your dividend payments are still going to be pretty consistent, and your profit fluctuation isn't going to be as bad because you planted your seeds. So focus on planting your seeds over a quick win. So how do you start today? Okay, I'm going to give you guys a 3-step plan. So the account, open up your broker. Okay, you guys can do Webull, Robinhood, Fidelity, Schwab, Vanguard, so many different options. Okay, open a brokerage account. Okay, then from there, okay, you can buy ETFs. ETF stands for Exchange Traded Fund, and they're pretty much going to be a bunch of companies put into one big giant company, for example. Okay, so you could buy really consistent ETFs like SCHD that pay out really good dividends, or VIWM, for example. Okay, and it's a basket of 100+ dividend stocks that give instant safety. Okay, or you could pick individual stocks as well too. Okay, and then the button. So find settings for your dividend reinvestment and turn it on. This way, all your dividends are going to go back into shares consistently, instead of you guys just having random cash, and then you're going to have to go buy dividends, instead of you just having it all in that DCA consistent flow mode. Okay, so don't forget, diversify. Okay, and a good way to diversify is to really invest into ETFs as well too. Okay, let's head over to the next slide. So dividend investing is really like going to be the ending to everything. Okay, it's the furthest thing from a get rich quick scheme. But after you run up 5 figures, 6 figures, 7 figures, you've been grinding, you've been putting in the work, you've been praying to God, really staying down. Once you have some money stacked up, dividends is going to be a good place to park your money in, and you guys are still going to get that monthly income and that monthly reward from it. But make sure you guys are choosing to invest into things that pay you out consistently, and be patient, be consistent, and start now. Okay, start now. That's going to be the most important thing. Start generating your business now. Start generating income now. Start doing whatever you need to do now. If you say you want to invest into certain assets, if you have $5 in your account right now, take that $5 and invest. Okay, start planting your seeds today, and that's going to be the most important thing. It's not really about the money. It's about your lifestyle, your consistency, okay, and how disciplined and focused you are when it comes to stacking your assets. All right, if you want help with it, head over to Stackmode.net. Stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. Peace. Keep going hard. Don't ever give up. All my day traders out there, there's going to be a completely different world to trading, and that's going to be long-term investing. Take some of your profits and siphon that back into shares, certain stocks that you believe in, into certain cryptocurrency plays, into ETFs that pay out dividends, so that you can generate passive income. Use your money as a tool, and that way you're always going to be using your money to generate some more money. Okay, so trading, it's really going to be more of a career, more of a wealth generating tool, as far as day trading, weekly trading, options trading, and just swing trading, closing a position from between 1 day to a couple of months, 2 weeks. And the other one is going to be holding positions for year after year. There's also going to be some long-term tax benefits that come into play as well too. So you actually get some benefits for holding trades for over a year. So I recommend you guys have 2 portfolios, one portfolio for your day trading portfolio and another portfolio for your long-term investing portfolio. It's really going to help you break everything down. And when it's time to do taxes, you're going to be able to calculate and differentiate everything pretty quickly, easily. So let's jump into it. So class, even if you start making 3 figures a day, 4 figures a day, 5 figures a day off of day trading, don't lose yourself. Okay, it's really easy to be reset back to zero, especially after a season of like a long wing streak and market, say for example, swaps the trend. Okay, you might get into some kind of ego horizons certain time, not being able to accept certain losses, especially after you just streak like that. So you had a really good month, you just won pretty much every single day of the one, and then when you take your loss, you might end up taking 2 or 3 trades okay, losing 3 times in that day because of the fact you just won so many times. So your brain can kind of get skewed. This is why it's really important to be with God and really just be humble at all times. Focus on the discipline and just forget about P&L. Update your contract size as your P&L grows, of course, but you can't just think money, 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 money. Okay, focus on the consistency in the process and the infrastructure around the type of trades that you're taking in the first place. So once you start making your day trading income as well too, take 50% of that away. Okay, say you make $100 in a day, for example. Take that $50, okay, and then you're going to take that $50, whatever the withdrawal amount is, okay, or say you make $1,000 in a day, okay, then you're going to go ahead and withdraw 500. Okay, so that $500, you're then going to take 30% of that $500, and you're going to go ahead and put that away. Okay, that 30% of $500 is going to be for taxes. Okay, and then whatever you have left over of whatever your withdrawal amount is, okay, take 30% of that, put it away for taxes. And then whatever you have left over, or you can honestly just split it 50-50 if you want. You could go ahead and do 50% of your initial withdrawal profit and then break that down into half as well too. Split that into 2 separate accounts, and that way when you pay your taxes, you're gonna have some overhead money. So you can go do whatever you want, either reinvest it or ball out, do whatever you want to do, because your stuff is going to be together, taxes are paid, and anything that's overhead you can either use to get further ahead or just spend on it if you want. Okay, and that's kind of going to be your reward account, especially when you have overhead after paying your taxes. It's okay to go ahead and ball out. You know, we're still only here for one life, so do that, especially in your tax account. You can use that as a reward for being on top of your finances. So when it comes to long-term investing, and that really means holding position for over 1 year, because remember, there's going to be long-term tax benefits for holding positions over 1 year. And the goal of that is really going to be to just build wealth, security, and you're not going to be trading your time for money at this point. Okay. In hindsight, you are, because you're going to be waiting for things to go up, but you're not going to be wasting physical human exertion in order to gain income. So at this point, your account's going to be built up. Let's say you have around 50K. Okay, let's say you have $50,000, right, inside of a ETF paying you dividends. Let's say that dividend pays you $2,000 or $1,500 a month. So if you have $50,000 invested, right, so that's a pretty average income, right? $50,000. If you have that invested into a dividend, say that dividend is paying you $1,500 quarterly. That's all of your rent, your expenses, etc., paid just because you invested. Okay, so you can actually get $2,000 a month for just being invested. So start working on your dividend portfolio, keep siphoning money into that. And once you have enough investment, the shareholders will pay you out what's called dividends, and you can make like $1,500 a month, $2,000 a month, and have your money put up securely and safely. So forget 401k, Roth IRAs, all this slow type of wealth. There's a lot of wealth you can really be building now. So stay down for a couple of years. You know, don't do anything, just work, grind. You know, get closer to God, work on your spirituality, and it's really going to take you on a long-winded journey, especially once you start touching the 6-7 figures. Your mind can really go aloof. Okay, so it's really important to just stay humble and keep reinvesting that profit into cycles. This way, you're not even going to get the chance to blow up your account in the first place. Okay, when you're taking that profit and constantly reinvesting it, and you have the mindset, you've trained yourself to understand, like, okay, money's just a tool. Like, I'm not just going to use this to go splurge and do X, Y, and Z. I could just get wealthier and then let everything pay for itself. Because when you get to a certain point of investments, you can pretty much live completely for free. And living for free is just no stress. You don't have to physically exert to pay your bills. As long as you have a certain amount of investments, you can live stress-free. You'll have money coming in at all times. You'll be making money every single second. So if you just stay down for a couple of years, couple of months, keep your head down, stay focused. Okay, all those friends telling you to go out, etc., that's not doing anything for you. Okay, if you want to end up broke in the future, that's fine. But if you don't want to progress, if you don't want to put your family in a better position, then go ahead and slack off. But for the people who do want to actually achieve their goals, get somewhere and provide for their family, stay down for a couple of years. Okay, no buying clothes, no buying jewelry. Okay, if you have a super nice car, like a premium, for example, okay, I used to pay premium gas. I used to be an idiot when I was around 18, 19. I had an Audi A4 and was paying premium gas during the height of it. It was around $6 a gallon, and I lived in Georgia.
So I couldn't even imagine what gas was for people on the West Coast at that time, probably like $10 a gallon. So spending around like $190 or around $80 per fill up, it's really just wasting money. Okay, just driving around doing absolutely nothing instead of investing. Okay, and Bitcoin example, I made a mistake where I had tons of Bitcoin. Okay, I had around like 30 grand worth of Bitcoin and would just constantly spend it every single cycle. Would just spend it. So me not staying down, me not stacking up really resulted into me realizing like, okay, you can set yourself back years if you don't plant your seeds. Okay, you got to think of investing like a garden. You got to really plant your seeds in the ground and let everything sprout and grow over time. Okay, but if you plant your seeds and say the tree gets big overnight and you instantly just chop the tree, how do you expect to keep getting fruit? How do you expect to keep growing from that? Okay, so even when you touch that big bag, you can't just chop down your tree. Don't just withdraw all of it and stop trading. No, you got to stay down. Don't get overzealous. Reinvest it. And then you're going to be able to get to the point where you can pretty much live for free. Okay. And once again, living for free is going to be just being able to pay your bills, feed your family, and go on trips, etc., without any physical exertion involved. Okay. So work hard now. Okay. You don't have to physically exert yourself forever. If you do the hard work for around like 1 to 5 years, okay, hard investing, hard work, growing your business, growing whatever niche that you want to execute in, then you're going to be able to achieve the goals that you want to achieve. Okay. It's going to be easy to jump into real estate from there, especially with all that capital from there. Okay. And say you were to generate a large income, okay, and have a large savings amount. Say you were to chop down that savings and buy a house, for example. Say you wanted to buy a house or buy a duplex or a triplex, right, and rent it out to a family, okay, or a couple families. Let's say you bought a multifamily, okay. If you use that profit and bought a multifamily, okay, let's say the multifamily costed you like $300,000, $250,000, right? Okay, if you buy that and you use a good chunk of your savings and you still have money within your dividend investments, you're going to be fine. You're still going to be getting paid around $1,500, $2,000 a month from the money that you already have initially invested in, which is also stacked up on top of that. So just from your dividends alone, you're pretty much going to be able to live. So while your multifamily income is generating, while your real estate profit is generating, whether you do Airbnb, get a multifamily, whatever route that you go, okay, you're going to be able to survive based off of just the investments that you made in the first place. Okay, so it's really important how you spend your money, even just $1,000, right? Instead of buying the newest computer, the newest phone, okay, go invest. Okay, because when you're dead broke, when you end up flat, you're going to be wishing that you could sell those items and restart over again. So don't do that. Okay, make the smart decision, invest. The reason why a lot of people are behind when it comes to bills and stuff like that, living paycheck to paycheck, is because they don't invest. Okay, when you invest, not only do you have your stash, okay, you have money that you can pull out and execute back into your bank account at any time. You have money that's generating you money at all times, pretty much. Okay, especially when you put down good trades, whether it be at options, futures, forex, whatever. Your money is going to always be generating you money. Okay, and then when you take that day trading profit, put it into shares, which are definitely going to be always generating you money, inshallah, especially when you invest in good companies. Take Build-A-Bear, for example. Build-A-Bear, it does nothing but go up in a straight line, for example. The company just a couple of years ago, as of 2025, when this video is coming out, was around like $2 a share, okay? And it's had no dramatic pullbacks. It's a really low-key stock, but Build-A-Bear is a good company, okay? It's now at like $72 a share after this video. So it's just a good investment. And once you find really good companies to go ahead and invest in that provide future value to human beings, go ahead and invest in that. Put your money into that. You're not going to regret it, okay? A large percentage of millionaires come from the stock market. Okay, so after your business goes up, after you start getting a nice paying job, whatever, after your income increases, invest. And this way you're going to be able to sit down and really just sit on your butt whenever you want. Okay, you're not going to have to physically exert yourself constantly for income. That's not going to be reasonable, especially as you get older. Okay, there's going to be certain mental things. Your mental is not going to be as sharp. Your body is not going to be as strong. Okay, so it's really important to invest. So this way you guys aren't going to have to rely on other people, you know, trying to rely on certain things like family and things like that. It's not always going to be the smartest and wisest thing. So you always want to just try and put yourself in a position to where you can provide. Okay, so if anyone falls short, you got them. Okay, so invest. So you be the one to stay down. You be the one to stay in the stack mode. So instead of you falling short, okay, and having to beg, okay, you be the one that's going to take the sacrifice, okay, not go buy all the flashy things, really stay down, okay, get groceries, not be eating out, and not be doing things you shouldn't be doing. So this way, whenever things do get hard, you're going to be the one to be able to take care of the things that need to be taken care of. So this way people don't struggle, okay? So just stay down, get into stack mode, and whenever anything goes down, you're going to have the financial security, and it's not going to break your bank, because things happen in life. Hospital bills, okay? Car crashes. There's a lot of things that just happen randomly in life, and you can't have rent coming up on the 30th, and then you have a $600 car repair bill. That's going to throw off all your calculations, and then you're stressing about that, okay? But when you're investing, you have your money making you money at all times. If something like that happens, you're going to be fine. You're going to go dig in the stash, pull out some money out the stash. You're not going to be tripping, okay? But when you're reliant on that calculated paycheck only, okay, you're not going to be able to grow within an exponential way. So this is why it's important to A, start your own business, because this way your income is going to be pretty much unlimited. When you start your own business, your income is based off of how much effort you put in. So however much a business makes is based off of how much effort they're putting in and how much they're helping society. And then B, invested portfolio income too, okay? So when you invest income constantly, especially into certain things that are almost guaranteed to generate you a positive equity curve year after year after year, you're going to go ahead and subsede your constant income. And then you're just going to be way ahead of things. Okay, so if anything dramatic does happen in life, because life definitely does life, you're going to be cooling. Okay, you're going to be able to dig in the stash. You're not going to be tripping. So long-term investing, it's definitely lower risk for sure. Okay, I'm glad I went through all the day trading struggles at first. Okay, going through all the emotional highs and lows, making $1,000 one day, losing $900 the next day. You know, going through the emotional high and lows really teaches you emotional control. But as far as long-term investing, once again, there's people who are millionaires who barely look at the chart and just invest into just certain things. So certain ways, effort, especially when it comes to the market, effort is not going to always guarantee profit. Okay, someone who makes 10 trades a day is not going to be as profitable as somebody who just bought and hold something for 5 years. Okay, a lot of people who just buy and hold actually outperform a significant amount of day traders. That's because day trading is not something that's going to be inherently easy to get down. So yeah, I've been trading for around 2 or 3 years now, and I'll say April 2025 had one of my most successful day trade months. I took 30 trades, won 25. Okay, and the 5 trades I lost was just not looking due to news. Okay, so those were my fault. So that month really taught me, like, okay, if you day trade, you can win pretty much every single day if you wanted to. As long as you're taking the right type of setups, you're waiting for confirmation. I personally trade break and retest, and you're waiting for key levels to be broken, then yeah, you could almost win every single day when it comes to the day trading aspect. Now, how long your day trades will be, that's also going to be an inherent question. You might be closing like in a couple of minutes. But you're going to be trading between like hours and days. That swing trading area, that's still going to be kind of within the day trading space too. So I'd say anything that you're closing less than a year would be like considered within that same environment. Okay, so be careful with that too. It can come with extreme risk, because especially with futures and Forex, you have a lot of power. You can just instantly click buy and sell constantly, and your money's going to fluctuate. Okay, well, depending on the amount of leverage and ticks amount that you have on, your money is going to go ahead and fluctuate. So the risk is extremely high. Do your research. If you're struggling with trading, head over to stackmode.net. Okay, the risk is going to be extremely high when it comes to day trading. Okay, so be aware of that. Okay, if you just lose your whole check in a minute, you probably did something wrong. Okay, you got to really analyze how much size you're putting down. There's calculations, entry criteria, time frames, and you have to really understand the overall direction of the market before you just start getting in and doing anything. And day trading is really going to require some advanced market knowledge, technical expertise, and your TA needs to be on point. Okay, so if your technical analysis is not as structured as it needs to be, you're not going to get to the type of profits that you want to be seeing when it comes to day trading. Okay, you have to really live on the charts. There was at least 2 years of me staying on the charts 16 hours a day. Okay, and I still look at the charts at least 2 to 8 hours a day, every single day. So if you want to be a day trader, you have to know how each and every single time frame correlates. You have to know how to read the higher time frame trends, and you have to really understand break and retest. That's really going to be a big thing that's going to help you keep your account safe. I'd say break and retest. Understand that price going in upwards direction is based off of resistances being broken, which you can logically put into hindsight. Height of the market, also known as all-time highs, is always going to be being chased to be broken. So say the Bitcoin height is going to be 100K. Even if price dumps down to 50K, it's still going to try and get back up to that 100K one day and break it. That's just how trading is. Okay. So you have to really know the logistics of the market, understand it's a left to right chart, and do your information before you just start day trading. But as far as just putting some shares into a certain company, just know how to read support and resistance on like your daily time frame, and you can be a pretty decent investor. You don't even have to day trade in order to reach the type of income that you want to receive. But I understand that some people might be day trading due to FOMO too. I have a lot of day trade recaps too. You guys can see it's pretty easy to make hundreds, thousands of dollars within a day, but that's after you've struggled. That's after you've really humbled yourself. And that's after you've studied hundreds and hundreds and hundreds and hundreds of hours. Okay. So it's not something you're just going to jump into fresh and be successful in. Okay. A lot of times it's going to take information and knowledge. Okay. Because with day trading too, your emotional control has to be a lot higher. When it comes to long-term investing, you could really just hold for years and forget about it. Once again, there's a lot of people who are wealthy who don't even look at the chart. A lot of people who just had Bitcoin in their Coinbase account, on their USB drive, whatever, in their Phantom wallet, and just came back to it 10 years later and they were a millionaire. Okay. So you don't have to be the best trader of all time or the smartest person of all time to be a millionaire. You just have to really just invest and make the right decisions. So, but if you're going to be a day trader, make sure that you're at least ending the months positive. Okay. And you shouldn't be taking money from your business, money from your savings, and hauling that into your day trading account. Really have some discipline. Okay. And you should need to be earning your position size. So take the account from $1,000 to $2,500. Okay. Then take it to $5,000. Then take it to 10K. Then take it to 15K. Okay. Start it at $100. Take it to $500. Then take it to $750. Take your time. Okay. Grow your account, earn your position size. Don't take, even if you have M stashed, don't go take all of that and throw it into the market, especially when you're new. Because if you lose that, you're going to be distraught and you might do some emotional things. Okay. You might put down more size after a loss, trying to make it all back, thinking it's about to be the one play that's going to save your account. But that's the wrong mindset. That's why risk management is important. Okay. So instead of trading with 50% of your account in one trade and then taking another 50% of your account, so you lose that too, then your account is going on 2 trades. Okay. And that's completely your fault. But you could lose 5% at a time. Okay. 5%, 5%, 5%, 5%. Okay. And then say you take a win for 40%. You don't care about that 20% that you just lost. Okay. Because now you just won 40%. Now that 20% is canceled out and you're up 20%. Okay. So the math is in the risk. Okay. Whether being a day trader or long-term investor, understand that math is always going to be within how much risk that you have calculated, and as well as when you buy and when you exit. So taxes and transaction costs. So long-term investing, like we talked about a couple of slides ago, it's going to go ahead and give you lower taxes and lower fees. There's going to be long-term tax benefits for holding a trade for at least 1 year. And you only pay tax when you sell. Okay. And that's going to be realized gains. And if you hold an asset for over 1 year, you pay the lower long-term capital gain tax rate, which saves you money. Okay. So fewer trades equals lower taxes and fees, which can definitely eat out your profit. So future traders, don't just be spamming buy and sell instantly, because a lot of the time the fees are going to go ahead and cancel out the profit that you're scalping. And you shouldn't be trading like that. Trading is not a game. Okay. If you want to just give your money away to profitable people, it is called trading. That's fine. But all the market is people getting rewarded for being disciplined and patient. That's strictly all it is. And if you're getting your money robbed, or if you're not being consistent, that just shows you who you are as your person. So you could either change or continue to be the same. So day trading can be a little tax inefficient. You can still make some great income though. And profits are taxed as short-term capital gains. And these are trades that are held for less than 1 year. And they're equivalent to much higher ordinary income tax rates. So high volume of trades per month, per year, per day, you're going to be subject to just higher taxes and commission friction. Okay. So for almost everyone, both, okay, can be a strong option. But if you're just someone who has a family, has a lot going on, has a big business, you can't really stress about the charts, I really recommend just long-term investing. Okay, you could still make millions of dollars, achieve your goals, and get to where you want to be by just buying shares. Okay, you can buy shares, not have to worry about it. No time decay like options and futures, no leverage or margin you have to really worry about, especially if you're on a cash account. And you can really just stress-free, just invest, let your money sit, let it grow over time, put it in a company that you believe in, and yeah, just let your money work as a tool. Now, day trading. If you have time to study the market for, I'll say at least 6 months, like every single day, constantly, at least 16, 18 hours a day, then yeah, you can go ahead and definitely day trade. Okay, but if you don't have that type of time commitment to put into the charts, then it's not worth it. So your screen time has to be consistent. You have to know how every single candlestick moves on every single time frame. Understand how the market structure is going to correlate as well too. And you got to be really quick when it comes to closing your trades. So day trades are going to be different. If you don't close at your certain levels when it's time to close and you get reversed on, you get emotional, that can turn into a spiral in itself. Okay, so you got to be really strong to day trade. Okay, and swing trade as well too. So take your time. Make sure you guys have tons of screen time on. Test it out in paper trading before you start putting in real money into the market, and make sure that your strategy works. Okay. Make sure that you guys are able to afford to lose the capital too. Don't trade with no rent money. Don't trade with no grocery money. Don't trade with no bill money. Don't do that. Okay, stay down until it's time. Put some income to the side. Once you have some income ready, okay, then it's time to start trading. Take care of yourself first. Okay, clear your debt. Okay, pay your credit cards off. Okay, make sure everything's good and structured, and then we trade. We don't come onto the markets desperate for income. Okay, get your life together first, and then you come onto the markets. The markets are for people who have their life together. Okay, so that's why you get rewarded for one, holding your trades for over a year, because you're not fiending to withdraw your money. When you have a business that's making you income that you can survive off of, you're not worried about the money that you have invested in your brokerage account. Okay, there's a lot of benefits for holding plays for over a year for a reason. Okay, they want to reward people for being financially structured. You can get rich if you're just financially structured. They make it really easy in this world. All the credit you guys can get. Okay, all, whether it be a business credit and or personal credit. Okay, all the loans you can get with certain things when it comes to real estate loans, and you could flip that into certain things. Okay, all the approvals you'll get. Okay, getting any truck that you want. Let's say you have a construction business. Okay, once you're a put together, financially stable individual, the world will treat you as such. Okay. So investing, it's really going to be the long game, and you're going to be the owner of your shares. You can sell them whenever you want. You're going to be in control of your portfolio. And day trading, it's going to be, I wouldn't say a short sprint. You could day trade until the end of time if you want, but understand that that mental exertion might get to you. So having money in ETFs, having money just put into something that's going to be making your money, so you can step away from day trading if you ever wanted to. All right. Stay prayed up to God. Keep grinding. Head over to stackmode.net for all trading education. Peace. I'm going to go ahead and break it down and make it easy. So what exactly is trading volume in the first place? So volume is pretty much going to be the amount of people and the amount of money being flowed into a cryptocurrency token, stock, or whatever. So whenever you hear the term volume, just think about the amount of money that's being flowed into or out of something, as well as the amount of people that's trading it. So it's a fundamental metric that represents the total number of units of a cryptocurrency, for example, in this case, that have been traded over a specific period. And it's a simple yet profound measure of market activity and liquidity. And think of it as the heartbeat of the market. And a high volume indicates a strong, healthy pulse, while low volume can signal a weakening or stagnant market. and encompasses both buy and sell orders that have been executed, reflecting the total flow of capital into and out of a particular asset. So let's talk about the total transacted value. So volume is often reported in both the base currency, for example, Bitcoin, Ethereum, for example, and the quote currency, aka USD, USDT. A volume of 10,000 Ethereum on a given day means that 10,000 Ethereum coins were exchanged between buyers and sellers. There's also going to be time-specific measurements involved too, and volume is always measured over a defined time frame, such as 24 hours, 1 week, or even a single minute. And this temporal context is vital for analysis, as a sudden spike in a 15-minute period can signify certain sudden movements within price, even if the daily volume remains average. So if you see a bunch of volume coming in within like a 15-minute time period, then you know lots of flow coming in. Maybe a whale might be purchasing, okay, somebody putting in a large amount of orders, okay, or a large amount of orders being flowed into a specific direction. Okay, that's going to be volume. Whenever you see price action being flowed into, whether it be it on the flow chart or via the order book, okay, you're going to be able to see all the transactions happening, and the more transactions you see, the higher the volume. So let's talk about liquidity indicator. So a high trading volume is a direct proxy for liquidity. An asset with high liquidity is easy to buy or sell without causing significant change in its price. And this is crucial for large-scale traders and institutions who need to enter or exit positions without a large price impact, also known as slippage. So slippage is pretty much where you're not going to be getting all the money that you're intending to receive. So say you sell for a profit of $500, okay, you're expecting to get all that $500. But depending on your broker, depending on the fees, also known as gas, etc., stuff like that, okay, then you're going to be able to calculate the amount of slippage that you may have to pay for. Okay, and slippage is pretty much going to associate itself with fees. So slippage, say you make $500, okay, you might withdraw $480, okay, due to the fact that the other $20 would have to go to the slippage. Okay, so that's slippage, for example. So why is volume crucial in the first place? So for crypto traders, volume isn't just a number. It's a validation signal that confirms the strength of a price move. So for instance, if you see on the order flow chart or the flow chart in general, and you're intending to play within a bullish direction, right? You're intending to long the market, and you start seeing a bunch of buying coming in, then you could kind of put together with your technical analysis along with the flow chart. Okay, if you start seeing volume, especially buying volume coming in, then you can go ahead and be like, all right, you know what, I might be right, and go ahead and take a trade based off of that. So it can be some good validation to come in because you're going to see other people making trades. Okay, so it's going to be a level maybe everyone might be waiting for. And if you see a bunch of volume price coming in in your intended direction, then it could mean that that's a good level and you're most likely right. So price increase or decrease is far more meaningful when it's accompanied by high volume. Without this confirmation, a price change could be fluke or the result of a single large transaction, also known as a pump. So that can be unsustainable, and certain high volume tokens grow year after year after year after year. But if you just see a bunch of selling coming in, for example, on like a meme coin stock, then that's what certain coins, like such as the pump and dump or rug pull coins, that's where those terms come from. Okay, so volume gives us a window into the market consensus and what's going on. So give us an example here. So the bull trap. So imagine Bitcoin price rises 5% in 1 hour, but the trading volume was unusually low for that time of day. A savvy trader would be cautious, and this low volume price surge could be a bull trap, and a false signal is designed to lure buyers before the price collapses. The lack of the significant volume indicates that not many people are participating in this price move, suggesting it lacks genuine market support. So volume can help you with confirming certain price trends. Okay, so a strong upward trend is going to be confirmed by increasing volume on up days and decreasing volume on down days. And this shows that the buying pressure is strong and consistent. Conversely, a downtrend is confirmed by high volume during price drops, indicating strong selling pressure, for example. So volume can also help you identify reversals. So when a market has been in a long downtrend, a sudden spike in volume as the price starts to rise can signal a potential reversal. And this is often the first sign of institutional or smart money entering the market, absorbing all of the selling pressure. And it can help you validate breakouts too. This is also going to be something I've talked about quite a bit on my channel as well too. when it comes to breakouts or certain levels. Confirming it with volume, confirming it using the order flow chart is really going to go ahead and help you out. Okay, you can also look at your order book, tape, whatever you want to look at, and volume can help you validate breakouts. And a breakout is going to be when price moves outside of a defined resistance or support level, and a breakout with high volume, which means a bunch of people are intending to trade in that place too. So a breakout with high volume is considered a genuine sustainable move, while a low volume breakout is often considered a fake out or false breakout, likely to reverse quickly. So if you don't see tape going crazy, order flow going crazy, whenever price hits a certain breakout level, it's most likely not going to happen. Okay, so that's one of the main things that people use in order to trade breakout levels. So analyzing volume in practice. So understanding trading volume isn't just looking at a single number. It's about interpreting its relationship with price and other technical indicators. And traders often use visual tools like volume bars on a chart to identify patterns and anomalies. And this allows them to see how volume is distributed across different price levels and time frames. So volume profile. Volume profile is an advanced tool that shows the total volume traded at each specific price level rather than over a period. And it helps identify areas of strong support and resistance where a lot of trading activity has occurred. Okay, so it's going to be a bunch of lines, and it's going to be showing you longer lines, okay, and short lines where there's low volumes. Okay, so in the volume profile, if you turn it on, trading view, wherever you want to turn it on, it doesn't matter. Okay, the shorter lines that you see is going to indicate low volume. When you see those long giant lines on the volume profile, that's going to indicate high volume. A lot of people are trying to get it right there. Okay, it's a very probable area, and it's a successful area. So on balance volume, OBV, it's a technical indicator that adds or subtracts daily volume based on whether the price has moved up or down. And a rising OBV alongside a stagnant price can signal hidden accumulation by large players, and that's a bullish sign. And volume price divergence. This is a powerful signal. If an asset's price is making new highs but the volume is declining, it's a bearish divergence, suggesting that the uptrend is losing steam, people are selling off, and a reversal may be near. The opposite is true for a bullish divergence. So for example, here's how to use divergence to predict a reversal in hindsight. Inshallah. So a trader notices that Ethereum's price has been steadily climbing for weeks, right? Or, you know, we'll say Stackmode stock. So a trader notices that the Stackmode stock has been steadily climbing for weeks, reaching new all-time highs. Let's say the Stackmode stock is at $800 a share, okay? However, they observe that the daily trading volume has been consistently lower with each new high. Okay, so investors are starting to sell off. So the trader then recognizes this volume price divergence, okay, and anticipates that the upward momentum was weakening and that they might decide to reduce their position as well. Okay, just like the big investors, they're starting to slow down their positions, trim off, okay, sell off. No one's about to hold infinitely, okay, take off some money. And they also might decide to reduce their position or set a tight stop loss order or trailing stop loss order, correctly anticipating a potential price correction. Okay, so if you're anticipating that Stackmode stock has hit the top and that volume is deciding to slow down, aka meaning that buying is slowing down, okay, so volume can increase to the selling side, okay, and then you could go ahead and trim off your stock, trail your stop, and do what you need to do depending on your certain parameters. You should know your entry, exit, take profit, and stop loss before you put a single dime into the market. Don't do anything related to gambling. Make sure you're extremely informed of what you're doing. So the dangers of playing things with low volume. One, slippage. Okay, trading things with low volume, you could potentially buy all the crypto coins. If you have enough money, you could definitely buy like all of a meme coin or something like that. And if people aren't investing to it, it's going to be hard to sell off their remaining shares, and it's going to be a lot of slippage involved in that too. So low volume, you might not get your orders filled. And trading in a low volume market carries significant risk, and a lack of liquidity can make it difficult to enter as well too. So not only can it make it difficult to exit, like I just spoke about, but even to enter. So you might be like, why am I not getting filled? Okay, like why am I putting my money in and I'm not getting my asset? Okay, that's because there's not a lot of orders available. So volume is going to be a good thing to look at before we throw our money at something, okay? Because you might buy all of something and you might not be able to trade. Say stock options, for example. You can buy all of a stock options contract, and if there's not enough volume, there's going to be almost no one to sell it to, okay? And you're going to be stuck with contracts. So something that I've gone through before, okay? And I then had to understand that's why people buy shares. So there's going to be times where you buy shares and there's going to be time where you trade options, for example. Okay, so try to trade things with high and decent volume. So let's talk about slippage in the first place. Let me break it down. So slippage in a low volume environment, placing a large market can eat up all the available orders on the order book at a certain price level, forcing your trade to be executed at a worse, higher price. Okay, and this difference is slippage. Okay, so pretty much you're gonna be paying more money for something, so you're gonna be losing money at the end of the day, and that's not what we want. So slippage is gonna be a frustrating thing, and to avoid it, try to play things with decent or high volume. So price manipulation. A single large buy order in a low volume market can cause a massive price spike. So once again, the rug pull scam, for example, or pump and dumps. Okay, people have Discord chats. Okay, they run ads, they do whatever. And then from there, they own a large majority of the meme coin, for example. Okay, let's say they own 70% of it. And these are things you can go and check on certain brokers as well too, where you can see who owns a percentage of a lot of the meme coins. So let's say they got it at the bottom, okay? And they own 70% of it. So they own majority of the volume. It's already not worth anything. So they own majority of the volume. So they start posting ads, they start paying influencers, maybe hacking influencers, doing what they need to do. Okay, it starts getting some popularity. People start investing into it, thinking that they're about to make some big money, and something that has no future context, isn't helping anybody, isn't putting a smile on anyone's face. But for some people, they want to come into the market thinking that it's a get rich quick scheme, and you're going to go ahead and get your bread snatched just like that. So while people are fiending, excited, thinking that they're about to make some money, the people who created the meme coin are in at the bottom, hold 70% of the share. And by the time it starts getting popular, by the time people start investing in, starts going in an upwards direction, they're going to go ahead and take that profit. Their profit's going to be disgusting because they already have a large majority of it. And it's kind of like a reversal IPO. So if this is like how the stock market works, let me go ahead and break it down. So before the stock market can even hit the public, someone has to buy all of the shares in private. And crypto is subject to a lot of manipulation because you don't have to do that. Okay, so the creator can be a participant. And same thing for the normal stock market too, but it's a lot less manipulation involved because someone has to buy all the shares prior to it being available to the public. So you can't get robbed as easily as you can someone just creating a meme coin and saying it's going to be the best thing of all time. So be careful following anybody too. All right, be careful following anybody. We're all human beings. Okay, a lot of people are flawed. I'm flawed. Okay, so whenever people are trying to prospect something, study it. Okay, see if it's putting a smile on people's face, see if it's making money. Okay, if it's not something that's going to be here for decade after decade, something that's bringing future value, something that's progressing the world, whether it be at a human level or at a physical level, okay, or transactional level, just forget it. It's not worth it. Okay, and investing in Pepe the fraud coin is not going to make you a billionaire. Okay, there are billionaires from people who trade United States stock market, who trade consistently, who trade at a disciplined high level. Okay, so when you're trading sheep coin on Phantom, expecting to make some M's, and then you come to me saying, Chris, I'm trying to make some M's trading meme coins, I'm gonna yell at you. Okay, there's no billionaires trading meme coins. You invest in things that have value. Okay, even when I was horrible, I was still able to make money due to the fact that I was investing with things that have value. Okay, there's millionaires who don't even look at the chart due to the fact that they plant their money into things that have value. Okay, instead of spending it at the store, okay, spending it on unnecessary things, you invest, stay down, let your money make your money, and then you can live in overly leisure. Okay, making money in your sleep, making it when you're waking up, making it while you're eating, making it while you're making money. Okay, so put all this together into your trading plan. So technical analysis, right? Technical analysis relies on a broad market participation. In low volume assets, chart patterns and indicators can often be unreliable because the chart is going to be so skewed. A lot of the time in a low volume environment, the market's not even going to look how a high volume market would look. Okay, the candlesticks are going to be all skewed, it's going to be all over the place, and it's going to be something you just don't even really want to be touching for the most part. And they can easily be distorted by a few individuals, which is why sometimes you'll see huge, giant, like 1 minute candles, or candles that just don't really make sense, for example, especially with something that has no earnings involved. So stay away from certain manipulation. Don't get robbed. Okay. And it's a general rule of thumb to avoid trading assets with extremely low volume. And unless you have a deep understanding of the market and its participants, then high volume is going to really provide a more stable and predictable environment for trading. You can still try to catch something at its lows if it has future value. Okay. I'm not saying you can't catch something at the low and catch the whole sweep up. Okay. I really pray you catch that move, but don't be buying sheep coin and thinking that it's going to be the best thing of all time and be profitable. Okay. Don't try to compare it to something like Bitcoin or Ethereum that has real world uses. Okay. So trading volume is not just an extra data point. It's a critical component of any comprehensive data strategy, and it acts as a powerful confirmation tool, helping to distinguish between the genuine market trends and false signals. And by incorporating volume analysis into your decision making, you can enhance your ability to identify strong trends, spot reversals, and avoid risky low liquidity assets and taking unnecessary trades you don't need to be taking. I don't want you guys to be losing money unnecessarily like I went through for a long time. Okay, I want you guys to just start off profitable, and it's really refreshing. It's a real blessing to start off. My students, and they don't even lose money. Okay, my students, they start off, instantly start making money. Alhamdulillah. Okay, so do your research, get educated before you put a dime into the market. Okay, and you're gonna save yourself from a lot of struggle. So always check your volume alongside your price action. Okay, look for high volume to confirm breakouts and strong trends. Be wary of low volume price surges. Okay, that can indicate certain things like rug pulls, for example. If you just see like one giant order coming out of nowhere and then the whole market moves, be careful about stuff like that. Okay, low volume stuff can be subject to manipulation. Say for futures, for example, if you're trading crude oil, let me tell you guys about a story. Okay, on my futures account, okay, was growing it very consistently. And I've always been good at making money within the market, but one thing I was horrible at was keeping the money within the market. Okay, my first couple of trades I've ever taken were $600 trades and stuff like that. Didn't withdraw, didn't know what I was doing. Always been good at making bands within the market. Was always horrible at keeping the money or consistently growing it. Okay, and that's what I realized. I had to humble myself, you know, really had to turn to God. I had a lot of ego problems. Okay, I never thought it was enough. Even when I would make $100, $1,000, anything like that. Didn't think it was enough. Was always just chasing that M, always chasing the billion, always thinking of the next thing instead of just being focused on my discipline, my process, my consistency. Okay, and then starting 2025, 2024 as well too, just had an extremely consistent year. Focused on a lot of day trading and once again, just making really good money. Okay, but then really had to just think about something. You know, there's people who are once again millionaires without even looking at the charts. So I had to understand that trading is really about a long-term perspective. It's about planning in the future. It's about holding these trades for years and years and years on ends. And there's a reason why there's tax benefits for holding trades for years and years on ends too. Now, day trading is still amazing. I still love day trading. I still love taking like a couple week swings and stuff like that. Still give signals for that. Okay, but instead of me taking that bread, right, instead of me taking that money and going on vacation like I was doing, instead of me taking that money and stupidly going to LV instead of it buying shoes, stupid things like that, right? I could have been reinvesting. Okay, and by that time, and by this time, could have easily been a millionaire. Okay, so this is the whole point of why I created Stack Mode. Okay, because I realized if you don't stay down, if you don't hold yourself back from certain things, put yourself in position to be a boss. Okay, and a boss is really staying down and grinding. You don't get that bag and go blow it. You get that bag, you stay down. You don't even think about it. Keep it in the stash and you keep working. You keep praying, you keep working. Okay, I was a kid, was very foolish. Okay, and God humbled me many times, and I'm very thankful because I got to come back stronger and I was able to make the money back 10x. Okay, and was able to keep my account healthy. And now that I know how to grow my account, it's really nice to see my students growing their account, coming back to me with results. Okay, so I just know that my struggle is not for nothing. So thank God. And avoid assets that have consistently low volume, guys. Okay, don't want you guys losing your money. Okay, I know you guys work hard. Okay, frustrating days, frustrating nights. Okay, just keep going, keep pushing, keep investing, keep staying down. I promise you, you're gonna catch the right play. Okay, stay prayed up to God, keep grinding. Head over to Stackmode.net for all trading education. I'll catch you in the next one. You don't gotta make trading too difficult. I'm gonna show you guys an easy way how to identify trending stocks and how to catch good plays. So identifying higher lows and higher highs aren't gonna require any indicators,
just straight candlesticks and chart work. Let's jump into it. All right, here's going to be top to bottom how to find an options contract. So first thing I like to go ahead and do is open my trading view. I'm going to look to the very right, and I like to open up the screener. So depending on your certain account budget or size, let's say I'm playing with the $2,000 account, or if I'm playing with the $3,000 account, or even a $1,000 account, right? I'll stick between like the 10 to 100 range, or even if I want to, I could come up here and edit it, and I could look at stocks that have the share price between 10 to maybe 150. Okay, in this way, you're going to be able to trade contracts that are within that range or within whatever account range that you're playing. If you're trading with 5 figures plus, then you could disable this and you could trade with everything. Okay. So you could come here, manual setup, and mark your parameters depending on your account size. So let's just say for this example here, I'll come manual setup, and we can do 10 to 100. Okay. Once again, if you wanted to change it, you definitely could change it here, 150. So I have access to all of these stocks on the list. So these are going to be all the stocks that are going to be relatively pretty good to play for a good budget within like 4 figures headed into early 5 figures, which I assume most of you are booting up at. Even if you are playing with like 5, 6 figure account, these stocks, if you get some good plays, you could stack up some contracts, buy some far out contracts, hit some really good plays. So one, you're trading the United States stock market. So it's pretty much just meant to go in an upwards direction year after year after year due to multiple reasons. One, taxes. If these companies are able to hire more people, the government's able to garnish more wages for taxes. And the more taxes that are being able to be paid to the government, the richer the government will get. Okay. So as long as these companies are going up, the more profitable they're going to go ahead and be, and then the more they're going to be able to do for the United States government. So these companies and these stocks are meant to go in an upwards direction year after year after year. Take Exxon, for example, okay, the gas station. You can go ahead and see here, price headed in an upwards direction year after year after year after year after year. Okay, or this is an energy company. So constantly price decides to rise due to the fact that it's a valuable company that affects the world. Okay, it's very, very helpful. And one thing you're going to notice about the chart is that it doesn't just go up in a straight line or straight down. Price moves within staircase scenarios. So price is going to move like an upward stairs. So identifying that lets us know that we have to get in at certain times, and also lets us know that market trends. So let's identify what the trend is and how to see an upward trend versus a downward trend. So when you're trading the United States stock market, a lot of the times you're going to be trading upwards trends, and you're going to be trading what's called pullbacks. Okay. If market's meant to go up, then wait for market to come down, buy it, and then wait for it to go back up, and then catch your profit. Okay, reverse engineer it and really just have your psychology on point. So once again, if market is meant to go in an upwards direction, you're trading the United States stock market, if you're trading options or shares, whatever, and it's meant to go up, then instead of buying when it's all the way up, wait for market to pull down, buy it then, and then take it back up. So it's that logical. Okay, don't make it difficult. The charts are not mumbo jumbo. You don't need any indicators. Disable all the indicators on your screen right now. Just keep it easy, keep it fresh, keep it clean. So boom, you could see price heading in an upwards direction year after year after year. And one thing too, you want to be looking at price on your higher time frames. Time frames you're going to be needing in order to find your setups. A lot of the times, you're going to be needing your weekly time frame. You're going to be on that first. It's going to give you that full vision, so make sure you can see every piece of price action. You don't want to be trading stocks that aren't trendy, otherwise you're pretty much just going to be wasting your time. Then you're going to go ahead and scale down to your daily time frame afterwards too. Your daily time frame is going to give you a little closer view, and a lot of the times your daily is where you're going to find your take profit. Okay, and it's where you're going to determine whether or not price is ready for your entry. Okay, so your daily is going to be for your take profit identifications and your entries. Weekly is going to be for the full bird's eye view, making sure you're not trading anything that's horrible. Then after your daily, you're going to scale down to your 4 hour. Now, there's a reason why you scale down to your 4 hour. The daily is one of my favorite time frames, but you do need your 4 hour. 4 hour is also one of my favorite time frames. And the reason why you need your 4 hour time frame is, check this out. If I'm on the daily time frame, I'm going to notice sometimes there's going to be little gaps in between the market. Okay, little gaps I'm going to be able to see here in between the market. But if I go on my 4 hour time frame, I'm going to be able to see price moving successively. Now, if you're still seeing gaps, which you're going to go ahead and need to do if you're on TradingView or whatever brokerage you're looking at or trading on, you need to turn on your extended trading hours. If you're on TradingView, look in the bottom right and just turn on ETH and turn on extended trading hours real quick. Okay, this way you're going to be able to see every hour an ounce of price action, and you're not going to be able to see those little gaps. So after you're done with your weekly and your daily, make sure you scan your 4 hour time frame. From there, here's how I go ahead and find setups. I like to go ahead and scan my stock screener. I like to start on my weekly time frame, and I'm going to stay away from things that are near all-time highs. Okay, because I'm going to want price to be at a point where sellers have already sold and buyers are just now stepping in. I like to call it the V formation. So you're going to let sellers make the top left of the V. You're going to let early buyers make the bottom of the V. And then we're going to catch the rest of the V as confident, assured buyers. Okay, letting us know that the trend has swapped. We don't want to be buying falling knives, and we want to be buying when price is confirmed. In order to do that, make sure you're having at least 2 daily candles headed in an upwards direction, ideally that are going to be the same color, green, if you're using green and red candlesticks. Okay, whatever color you're using for buying, the more candlesticks you see going in an upwards direction successively with the same color scheme, okay, is going to let you know the trend a lot of the times. And price moves in V formations. And what that means is, let's take this V formation here. Price decided to come up, make a sharp stop, and then price decided to fall downwards. So price made the top left of the V. That lets you know sellers stepped in here. This is going to be an area of resistance. After that, price fell down, made a bottom, made an area of support. That's going to let me know that buyers went ahead and stepped in. And price went ahead and filled in that whole area back to where sellers originally started selling, broke past it, and it's going to go ahead and try and make some new highs. Okay, fall down here, and then price will try and come back up, break that, and price will continue to zigzag, go up and down, and make staircase formations to new all-time highs over and over and over again. And that's how the trend works. Now, knowing when to get in, they're going to want to get on your weekly time frames and stay away from things that are, once again, at all-time highs. Price can pretty much only go down, find a low, and once it finds a good low, then you buy it and then take it back up. Okay, and ideally your take profit is always going to be where price originally fell down from. So even right here, let's say price decided to fall down from this area. Price trickled up, stopped right here, fell down, and made what's called a higher low. So this low right here is higher than this low down here. When you start seeing price making higher lows and what's called higher highs, which means that this high is higher than this high. Okay, when you start seeing price make higher lows, which means this low is higher than this low, and this low is higher than this low. When you start seeing price trend in a staircase like that, that's how you know you're heading in an upwards direction. Okay, so to find a good setup, okay, here's another one that I went ahead and marked as well too. My daily, I could see that price decided to fall downward from this area here. Price decided to make a heavy area of support, made a higher low off of that, I identified that, and price decided to went ahead and smash take profit within a couple of days. Okay. Within 6 days. So extremely simple when you're finding your setups. You want to buy when the buyers are buying. Okay, and if it took 6 days, try and buy these contracts. Ideally, if you're taking smaller take profit setups using your daily and your 4 hour, you can buy contracts as far as like 2 weeks out plus. At least try and be 2 weeks out, and then you can build your account from there. But having at least 2 weeks on your contracts gives time and price to fluctuate in case it does, or in case some news comes out or anything. But even an example here on Disney, could see price meeting up with this area of resistance. I marked this a couple days ago, and you can see buyers fiending to have price trickle back up to this area. Even if you're a trend line type person, you could do that too. You could see a little retest off the trend line here and price head in an upwards direction as well too. Okay, and if you wanted to, you could play the remainder gap to the resistance if you wanted to. Okay, you could buy at least like 2 weeks out, could buy 17 days if you wanted to, and take it up here, catch a nice flip. November 12th. And then you could buy your contracts. You could buy like 2 weeks out, 15, 12, $3. So yeah, 188 to $3 there. And you'd be able to just flip your money consistently there, even if you went 10 days. You'd be able to catch your flip there as well too. So play market how you would like to be playing it. Even a scenario like here, I kind of like this maybe potentially. I like how price is making higher lows here. Confident in that. Looks like buying wants to step in here from this low to the new low. Go to my daily. We got multiple green daily candlesticks. So 4 hour, honestly, I might take this up to at least this resistance here. And then that might be a clean little trade as well too. Pep. To about like 2-3 weeks out. About 145 and take it up. Yep. So cool. That's how I make it simple. That's how you find options contracts. Just no fluff, no BS. Just straightforward price action, reading the candlestick chart, understanding buy zones and sell zones, and just really taking the trades that you need to be taking. And understanding when buyers are buying is really important. Say this, for example, I could tell buyers are buying here since I see higher lows are being made. And the more you live on TradingView all day, the better your eyeballs get, really. So chart time is really important. Okay, I could check here on the weekly, see prices started to fall from here. Get on my 4 hour. Price falling down from this area of resistance. I see this area of resistance before it here that happened on the 2nd. I like that. I'll even hop on my 1 hour with it. I have this area of resistance too. Okay, so even if I wanted to close on this 4th area here, could definitely do that. These contracts are a little far actually. So 120 minimum. So yeah, you'd have to play for like up here. So it'd be worth it to just buy some months out. I'm sure these are probably cheap, yeah. And you could catch this flip if you want to and hold these for a minute. So yeah, all types of scenarios, different ways to grow your account. It's just choosing the most effective ways and staying patient. Okay, play the stocks that you know you're good at. Pick stocks that have good volume, and really just take your time with your setups. And yeah, that's how you find options trades. Head over to Stackmode.net. I pray it helped. Peace. Trading can be difficult sometimes, but through prayer, discipline, and being consistent, you won't have any days of you just sitting at your screen wondering how everything slipped out of your control. Emotional trading days feel heavy, but they don't have to follow you into tomorrow. The truth is, recovering starts with separating the market from your identity. One bad day does not make you a bad trader. Sometimes it's just the wrong mindset meeting the wrong moment. So let yourself step back and give your mind space to cool down, because the clarity never shows up when your emotions are running the show. Once the noise fades and once things shift, the mistakes you made earlier stop feeling like failures and start looking like signals, little messages from the market about what needs to change. And that shift alone is powerful. It turns frustration into fuel, because the real comeback doesn't happen on the charts. It happens in your head. When you decide that today's chaos isn't your story, it's just a chapter, when you choose to reset instead of spiral, when you remind yourself that disciplined trading is built on composure, not emotion, then that's when you'll start seeing the profits flow in. Let's go and let's jump in how we can control ourselves and become a more disciplined trader, inshallah. So trading discipline, it's going to be the factor that determines if you're going to be profitable or not. Okay. If you're not going to stick to your trading plan, if you're not going to stick to your risk parameters, okay, and if you're going to lead with your flesh, you're going to continue to get those results over and over and over again. Okay. So being spiritually grounded is going to be extremely important. In Quran, okay, it states, and those who, when they spend, do not excessively or sparingly, but are ever between that, justly moderate. Okay, so that means that you want to be spending your money not in excessive manner. Even when you start making 10, 20, 30K a month from trading, okay, you don't want to excessively be blowing through your money. Okay, take your time and having that grounded mindset, trade after trade after trade mindset, stacking it up over time. Okay, no matter how much money you make from the markets, you're going to stay patient. Okay, you're going to still stick to your risk parameters. I don't care if you start making 50K a trade. Okay, you still wake up, pray, stay disciplined, and keep taking the same type of setups, because exactly what got you there is what's going to keep you there. So don't lose that consistency. Don't lose that discipline that's been built into you just because you start touching the money and the numbers that you finally want to get. Okay. Do not start spending excessively, and do not start making excessive decisions once you start getting to a certain point. Okay. That doesn't mean once you start getting a 90% win rate, okay, to just start putting on 5 trades a day just because you have so much conviction, okay, based off of past results. It's about being consistent today and every single day. Okay, and finding peace through God, balance, and moderation. So let's go to the next slide. So you got to recognize the tilt. Okay, check yourself emotionally. Okay, you know when you're about to get upset. You know when you have a feeling of wanting to trade over and over and over again. Okay, you know when you're having feelings of wanting to crash out. Okay, so keep heed of your emotional red flags. Okay, before you can fix it, you got to admit to yourself, okay, that things got to change, that you're broken right now. So an emotional trading day usually involves revenge trading. Okay, so if you take a loss for $200, okay, say that was in between your 1 to 10% of your account risk parameters, right? That's fine. But then you take another trade. Okay, so instead of just using $200, you now lose $400. Okay, and then say you try to put on some size trying to make back that $400. Okay, and then you end up losing $800. Okay, and that's how the cycle starts, and that's how quickly you can blow up your account. So don't revenge trade. Okay, if you take a loss, close your trade and that's it. Okay, plot out another trade, a cleaner setup, and stick between your 1 to 10% of your account rules per trade. Okay, because trying to make it back will end up turning your account into a whole different spiral in a different direction than you'd expect it to go, a lot quicker. Okay, because if you lose, you might lose again. If you lose again, you might try and risk more than normal trying to make back the double losses. Okay, so I'm telling you, if you don't recognize the tilt, you could lead into a whole different spiral and mental mind space than you'd want to be in the first place. And paralysis. Okay, so staring at the screen, making you unable to execute a good setup. This is why it's really important to have your stop loss set up as well as your take profit too, with limit orders, especially if you're trading futures or Forex. Okay, this way you guys aren't going to have any emotional paralysis. Say something just clips way past your mental stop loss, you're not going to freeze, okay, because you don't want to lose all that money and close out your trade, even though you know you should, okay? And increased size, once again, increased size usually comes into play when revenge trading comes into play, okay? But for the most part, you shouldn't just be increasing your size out of the whim. Stick between 1 to 10% of your account per trade, okay? So don't double down on risky trades out of anger or out of past losses. Okay, and check yourself. Okay, so ask yourself, are you feeling anxiety? Is your heart racing? Okay, are you cursing at the monitor? Are you breaking things? Okay, if so, you got to stop immediately. Okay, you got to stop right then and there. Okay, get up, go pray, take a breather, hop off the charts, immediately check yourself right then and there. Okay, it's not worth destroying your family's future, destroying your seeds that you have planted in the ground because of a quick moment of disparity and anger. It's not worth it. Okay, keep your account alive. In this game, it's not really about making money. It's about who can be consistent, who cannot be led by their flesh, and who can be disciplined every single day. Okay, so let's head over to the next slide, class. So the pattern interrupt. Okay, walk away physically. Okay, if you notice yourself, especially if you're on prop firm or trading something quick like futures or Forex, where you can instantaneously lose money fairly quickly, okay, you got to get off the charts. Okay, hop off the charts. If you notice you have a trading addiction, you got to pray to God, okay, and really ask to get better. Okay, ask yourself, why are you taking so many trades too? Are you chasing money? Do you have bills that you're trying to pay? Do you have some debt that you're trying to clear? Okay, because you can't trade out of desperation. Okay, trading is not something that you look to when you're dead broke trying to make it out. Okay, you got to get your life together first, get some income, then come onto the charts. Okay, get closer to God, build that relationship with yourself and know yourself intimately and deeply. This way you can check yourself and check any type of emotional parameters or boxes whenever you feel like you're about to crash out or having a rough trading period. Okay, you can't solve a trading problem with more trading. Okay, you need to sever the connection between your brain and the charts. Okay, so once again, you cannot solve a trading problem with more trading. You have to sever the connection between your brain and the charts. Okay, so close the terminal. Okay, if you notice yourself crashing out, taking multiple trades during a day, okay, you got to close TradingView. You got to close your broker and you got to just hop off. Okay, or sign out of your brokerage account and log into paper trading. Okay, and change your environment. Okay, leave the room, go outside, take a breather, and the change in lighting will really help reset your circadian rhythm. So when you come back on the charts, you're going to be like, you know what, I was tripping. Why was I crashing out and doing all that? Okay, and don't check quotes on your phone. Okay, whenever you enter in a trade, stop staring at it tick by tick. Okay, enter your trade, have your alert set at your stop loss and take profit, or set your limit orders. Okay, and don't look at it. Don't look at it. Okay, because I'm telling you, you might look at it, make a decision that will ruin your trade, okay, and then end up taking another trade, and that could start a whole downward spiral that you don't want. Okay, so understand that trading is pretty passive and hands off. Okay, after you've aggressively studied and gained the knowledge, once you actually hop on the charts, it's going to be pretty passive. Okay, so let's head over to the next slide, class. So you got to reset your biology completely and get out of survival mode. Okay, give yourself a cold reset. So your nervous system is in fight or flight mode, especially when you enter a trade for the first couple of times. Okay, and you got to force it back to rest and digest. Okay, so some actionable tactics. Number one, praying to God. Go to God about all your issues. It's really going to help and really going to build accountability within yourself too. Okay, you can't just be blaming the markets like, oh, market's doing this, market's manipulated, market's not manipulated. Okay, it's been going in an upwards direction, especially United States stock market, year after year after year after year after year. It's not manipulated. You have to check yourself and hold yourself accountable. Okay, if you're making monkey decisions, don't make monkey decisions anymore. Okay, check yourself. There's plenty of times where I've made monkey decisions. Okay, plenty of times where I blew an account within a couple of minutes. Okay, due to the fact that I was chasing that quick money. Okay, so checking yourself and staying in tune with yourself, even when you fail, is going to be an important part of being a CEO and being a boss. When you're a trader, you're not just on here trying to get some money. Okay, you're signing up to be a business person. Okay, you're signing up to be your own boss. You're in control of your finances whenever you come onto these charts. You're in control of when you get in, when you get out, and how much you're going to risk. Okay, so don't run around blaming the market when you got to take accountability for the actions that you did. Okay, so breathe. Okay, breathing is also going to be a really good tactic too, something I've been working on myself. Okay, so breathing is really going to help you out. Okay, if you notice you're about to crash out, close your eyes, take a big breath. Okay, and working out in the morning too. If you notice that feeling of high anxiety or intensity in the morning, make sure you guys start your day with a prayer. Okay, and then go work out. Okay, when you guys work out, your body's going to release a lot of cortisol. Okay, and it's going to be in more of that healing and building mode instead of fight or flight mode. Okay, so your journal. Okay, make sure you guys have a trading journal. I don't care if you do it on Notion, Discord, a physical trading journal, whatever. Okay, just get it out. Write out your emotions. Okay, write out your goals. Write out how you're feeling. Okay, and emotions loop in your head until you write them down. Okay, once they're on paper, your brain is going to feel safe. Okay, to let it go. Okay, so if you notice yourself, you're struggling with over trading, like, man, I keep taking 4 trades a day. I can't accept a loss. Write down why. Write down what you're trying to chase. Why do you want the money that bad? Okay, and break it down logically, and it's really going to help you be more intimate with yourself. Okay, and write answers to these 3 questions. Okay, what specific rule did you break? If you notice yourself losing consistently based off of just emotional decisions, okay, ask yourself how you're feeling before you enter the trade. Okay, and ask yourself, what's the worst case scenario? If stop loss gets hit, okay, because if I'm hitting my 1-to-4 risk reward ratio trades, let's say I'm risking $100, okay, if I'm making $400 per trade, okay, then I'm still going to be profiting $300, okay, which is going to give me more extra room in case I ever have a losing streak. Okay, so the worst case scenario is that you hit stop loss, but the thing about it is that if you stick to your rules, okay, you stick to your discipline, you stick to the plan that you wrote down. If you stick to your stop loss, how are you going to be unprofitable? If you have a decent win rate, you're sticking to your risk reward ratio, okay, and you're staying in between your risk management parameters, trading between 1 to 10% of your account per trade, how could you lose? The math is right there for you. Okay. The only way you lose in this world is when you lead with your flesh. Okay. It's the only way you will ever lose. If you are disciplined and consistent, it's almost impossible to lose. Let's head over to the next slide. So, radical acceptance. Okay. Forgive yourself. Okay. Beating yourself up creates more emotional pain, which leads to more bad trading tomorrow. Okay. And sunk cost. The money is gone. Okay. Once it's gone, don't try and chase it back. Don't try and boot up your account again and be like, oh, I'm about to recover all this. No, don't do that. Okay. You cannot trade to get that money back. Once it's gone, it's gone. Once something is gone in the world, it's gone. Okay. But that's perfectly fine. Okay. Because you can only trade new setups. There's going to be better setups, okay? And view every single loss in life, in business, wherever, okay? Just view it as a lesson. View it as tuition, okay? Some of you might be in college, okay, paying for your tuition. Treat every single loss in life. I don't care if it's on the charts, okay? Business, relationships, whatever it is. If you need to view it as a lesson to learn and progress and go forward, okay? And you're not your profit and loss. Okay, you're your risk manager. You're still going to be the same person if you're making $50 a trade or $50 million a trade. Okay, you're still going to be the same person. Okay, your spirit is still going to be the same. So the money is not the thing that changes you. Okay, the thing that changes you is the knowledge. Okay, and you learn how to keep your spirit happy, how to not go through pain. Okay, and that's what we're here to do on this earth. Okay, pray to God and find out ways to keep our spirit happy and avoid pain. Okay, if you notice yourself crying at the end of the night because you crashed out your account and you got bills due the next day, okay, you need to learn from that pain so it doesn't happen again, so you don't grieve your spirit. Okay, so if you're frustrated due to your own actions, stop doing it. Okay, pray to God on it, check yourself, and come back stronger and better. Don't let it happen again. Let's head over to the next slide. The return protocol. Okay, start small. Okay, don't jump back in with full size. Okay, if you got to scale down, take a step back. Okay, because it's not about the money. It's not about the money. Okay, if you notice yourself crashing out, if you're trading with $200 a trade risk, okay, and you're crashing out with that, lower it. Maybe you should be risking $50, $100. Okay, lower your size, especially when your confidence is damaged. Okay, so for the next 3 days, okay, try to trade with 50% size or less. Okay, if you just had a horrible streak of losing, crashing out, being led by your flesh and emotional decisions that led you to straight destruction, okay, take a step back. Okay, it's all good. You can always come back stronger. So try it for the next 3 days. Try and trade with 50% size or less. Okay, and prove to yourself that you can follow the rules before you're allowed to go back to risking your full normal size amount of capital. Okay, because before you can even start touching the money, you gotta have the discipline built in you. Okay, you're not gonna touch a thing, or you're not gonna be able to keep a thing if the discipline isn't built in you. It won't matter. I'm telling you, it won't matter. So if you're making $1,000 a trade, you should still be happy if you're making $100 a trade. Okay, just the fact that we can come onto these charts, look at candlesticks going up or down, and clicking buy or sell and being able to make money is a blessing. So why are you ruining it for yourself? Okay, please don't make it hard. It's welfare. Okay, it's welfare here. And all you have to do in order to get it, you don't got to go sign up on a website. All you have to do is be disciplined. Okay, be disciplined. And praying to God is going to be the #1 way on this planet to build discipline. Then from there, you guys can start working out. Then from there, start grinding every single day. Then from there, you're going to get very strict on your setups. When you're praying to God every single day, you have a strict health diet regimen, okay, and you're sticking to your trading plan, trading is not going to be difficult for you. I'm telling you, it's going to be very, very, very simple, okay? But most people who struggle with this, and it just shows you how undisciplined 99+% of the world is, okay? The main reason why 95% of people plus aren't profitable is because most people on this planet lead with their flesh. Everyone always wants to feel good all the time. Everyone always wants to be comfortable all the time. Everyone always wants to be happy all the time. And that's not realistic. Okay, you have to be disciplined, consistent, and you have to have that iron edge regardless of what's happening in life. Okay, if you want to live in a fake realm, okay, being led by your flesh, that's fine. You'll continue to get those results. Okay, but if you want to be the 1% in the world who's ready to reap the harvest, okay, who's ready to get the resources, who can help everyone else out, okay, you gotta put yourself through the fire, okay, and you gotta come out not tripping. Okay, let's head over to the next slide. So tomorrow is a new market. Stop tripping about the past. Okay, that little bread that you messed up, forget it. That account that you blew up, forget it. Okay, whatever happened back then, it happened back then. That was a weak version of you, and it's time for that version to die. Put it away. Okay, come stronger. Build yourself a whole new version and come way better. Think different. Okay, so wake up, pray to God, and work out. When you guys are working out consistently, it helps your cortisol run through your body a lot less intensely, so you're not going to have random crash out spurts. Okay, working out is really going to help you. Okay, and walk away from the computer too. If you notice yourself pansying on the market, spamming buy or sell because of a loss, relax, walk away, go pray on it, check yourself. You probably did some emotional stuff that's your fault, and cool down physically. Okay, then go journal the mistake. Okay, throw it in your Discord, your Notion, your trading journal in real life, notes on your iPhone, whatever. Okay, you got to release the loop. You cannot do the same things in life and expect different results. Okay, so if you're doing something in life and it's working, okay, you notice you're waking up, you're praying to God, you're grinding, and you're getting somewhere, continue to do that. Okay, but if you throw off the loop, if you notice yourself throwing in random days of doubling your leverage, okay, then your risk to reward and your consistency is not going to be able to be built like that. You can't be risking $100 one day and then 2 days later you're risking $400. It's not how you're going to build yourself. Okay, and then when you return to the market after a crash out series, start smaller. Okay, start smaller, because you're not even ready for the money right now. So if you're blowing up your account, you're not even ready for the money. Some of you guys are thinking about the money, but you're not even ready for the money. Too many of you forget about the grind. If you have a skill, a talent, and discipline in this world and you pray to God, you'll get to some money. But some of you forget about praying to God. You forget about the grind. You forget about the hours of studying that it takes to be successful in whatever you want to be in. Okay, I don't care if you want to be an athlete, if you want to be a CEO of a business, okay, whatever you want to do in this world. If you forget about the grind, and most importantly, if you forget about God, you're not going to be able to be successful. That emotional turmoil might catch you, and that one bad day could destroy you. But understand that one bad day does not define who you are in your career. Okay, stay hard, stay disciplined, stay focused on God, and keep grinding. Don't ever give up. I'll catch you on the next one. Peace. Trading options can really be crazy. You could be right directionally and still be losing money, and I know that can be extremely confusing. So I want to break down the Greeks for you guys. They're the factors that control your options P&L and your contracts. And if you don't understand the Greeks, you just aren't trading. You're donating money to Wall Street and the people selling you the contracts. So here's going to be the cheat sheet to the engine that actually drives your contracts. I'm going to explain delta, gamma, theta, and vega, and understand that you can't control the market, but you can control your risk and the math. Let's go and let's jump into it. Inshallah, if God wills. Before we even think about throwing $1 into options, we gotta understand the Greeks. Inshallah, if God wills. It's extremely important. You don't want to just be in a trade, seeing it go up, and you have some calls purchase, and you're like, why am I not making any money? It can be heartbreaking. It can be confusing. And I'm telling you guys, the science, the math behind these Greeks, once you understand them, you're going to be able to avoid a lot of things. So before we get started, let me go ahead and just tell you guys a quick little cheat code to help you with Greeks. Your time that you have as far as when your contract is going to expire on options is the most important thing. Stop trying to buy 0 DTE contracts and have extremely far take profits. Okay, that's not making sense. Okay, if you're going to play on the higher time frames and have further take profits, then you need to have more time on your contract. Okay, ideally, one of the best ways to play options is via leaps. Okay, you guys might have heard me talk about leaps before, but what leap contracts are contracts that expire in 1 to 2 years. Okay, when you give yourself years on your contract, you have so much time to sit and wait for price to reverse, because you have to understand that the United States stock market, it's meant to go in the upwards direction year after year after year. Okay, Amazon, Google, Microsoft, Apple, these are all global companies that are implemented in the whole world. Okay, but these are American companies. So the US stock market, which is based off of stocks, okay, which options derive from, has to go up year after year after year after year. So you have to understand that. Okay, you can't be closing your trades early because you're like, oh, it's just going down for a couple of days, couple of weeks. If you have time on your contract, because your risk on options is how much the contract actually costs. So if your contract costs $200, the max you could lose is going to be that $200, but the max you could win is going to be infinite. Okay, so putting everything into perspective like that really does help you. So your stop loss on options should be exactly how much you purchased the contract for. Okay, if you purchase a contract for $200, then on options, that should be your stop loss. Okay, don't close your trades early. Purchase time on your contracts. Okay, and use your stop loss as the full value that you purchased the contract for. And I'm telling you guys, watch how your trading will change. Let's go and let's jump into how these Greeks actually work though. So trading options is going to be kind of like driving a race car. You're going to have 4 main gauges on your dashboard. They're going to go and have your delta. Your delta is going to go ahead and determine how fast that you're going. Then you're going to have your gamma. Your gamma is going to determine how much your contracts are accelerating. Your theta is going to be your fuel tank leaking. Okay, for example, think of it as time. And your vega is how bumpy the road is. Okay, the fear, the intrinsic value baked into it. Understanding these Greeks are really going to change everything. Okay, let me go ahead and tell you guys a quick story. There's been a time where I was trading SPX. Okay, I was trading at 0 DTE, and what DTE stands for is date to expiration. Okay, so whatever the day is before you see DTE is how many days before the expiration. So if it's 0, that means that the contract will close on the same day. Okay, so the stock market is open from 9:30 a.m. Eastern to 4 p.m. Eastern. Okay, so in each time market comes up to 9:30 a.m. Eastern, that's another day that goes by. Okay, but if we're going to play a 0 DTE, then the contract has to be closed by 4 p.m. Eastern. So what I did was open up a SPX contract during a Jay Powell speech. I'm sure you guys have heard of Jay Powell, and was up around $930. The reason why I didn't win that trade is because of greed, pure greed. What I did was trade with P&L instead of looking at the actual chart and understanding Greeks, so I got burned anyways. So I didn't close the trade, one, because I was P&L trading, and I didn't understand the Greeks. 2 things. Okay, so the first reason, I was on like $930 and didn't close it because it wasn't $1,000. I was trying to make 4 figures a day. Stupid mindset, I know. I was young. But thank God I learned. And another reason why I lost is because I just didn't understand the Greeks truthfully. Okay, so SPX, I told myself, you know what, if I'm up $930 right now, but you have to understand that things work off of acceleration options. If you have a bunch of price action bursting really, really quick, happening fast, your contracts are going to be going up. But as soon as that contract slows down, starts consolidating, if you don't have enough time on your contract, okay, then your contract value is going to go down immediately. Okay, so if it's bursting in a certain direction that you have a contract based in, so let's say you have a calls contract, okay, calls contracts mean that you're preparing for market to go in an upwards direction. So let's say you have a calls contract, right? If market's pumping up super duper fast, okay, even if you have an out the money contract, and what that means is, let's say a contract, let's say a stock is at $30, right? And you think it's going to go up to $35. Okay, if you buy a $35 contract, which is out the money, okay, it's not there right now, okay, then if price is bursting really fast, even though it's not near $35 yet, you're still going to see some profit. But once again, as soon as that price action starts consolidating and going sideways, your profit can instantly be wiped away from you if you don't have enough time on your contract. So having time on your contract, theta, is going to be one of the most important things. So try and buy contracts that are 1 to 2 years out. Okay, this is going to give you guys a lot of more flexibility and purchasing power to really do what you want with your contracts and how you want to trade on the markets. Okay, so let's go and let's break it down. So delta is going to go ahead and be the speed. Okay, so here's a definition. So if the stock price moves up $1, how much money would the option make? Okay, so if the stock price moves $1 and the delta is 0.50, then that means the option price would move 0.50. Okay, so 0.50 per dollar. Okay, so that means that every time the stock moves $1, okay, the options price would go ahead and move 0.50 cents. Okay, and remember, you want to go ahead and multiply everything by 100. Okay, so options price 0.50 is going to go ahead and equal $50. Okay, that's going to go ahead and equal $50 once again. So you want to grab whatever decimal number you see on options and multiply that by 100. Okay, so 0.50 times 100 is going to be $50. Okay, if you're going to have 2.70 times 100, that's going to go ahead and give you 270. Okay, if you're going to have 4.50, you got to multiply that times 100. It's going to be 450. Okay, so whatever one of these decimal numbers that you see, you got to multiply it by 100. You have to. Okay, multiply all decimal numbers that you see in the options world by 100 in order to get the actual currency value of that. So think of Delta as the concert ticket. So it's going to be the coupon, right? Imagine you have a coupon to buy a concert ticket for $50. Okay, and let's say the price rises. If tickets are sold out and scalpers are selling them for now $100, your coupon is now very valuable. Okay, that's high delta. And let's say the price drops, right? If nobody wants to go and tickets are $10, your $50 coupon is now worthless. Okay, that's zero delta. So you want your delta to increase, because the more that your delta is increasing, the more that your contract is going to have more value behind it. Okay, but if price is dropping and your contract isn't working out in your favor, or it's not going in the direction which you have purchased, okay, so if you bought a calls contract and market's not going up, okay, then that means that the delta is going to help destroy your contract because your prediction is not right. Okay, but if your prediction is right, then the delta is going to go ahead and go up, deeming your contract valuable, making your contract more expensive, meaning you'll make more money. And gamma is going to go ahead and equal the turbo boost. So think of it as acceleration, right? Delta tells you your speed, and gamma tells you how fast your speed is changing. So think of gamma kind of like the nitro button, a super fast acceleration. Okay, think of this rocket ship. Boom, the turbo is behind it. So gamma is going to be like the nitro button in a racing game. Okay, so you're speeding steady, and then you got to just burst. Okay, that's what gamma predicts. So gamma makes your profits explode faster as the stock goes in your favored direction. So if you're on a calls contract, meaning that you're waiting for a price to go in an upwards direction, then the acceleration is going to help your contract make a lot of money, even if it's out the money once again. So let's say the current share price is going to be $30. Okay, if you think price is going to go up to $40, okay, you don't buy a $40 contract. Okay, what you're going to do is buy a $31 contract. Okay, so always buy the number one above or below current price in order to have your Greeks move the best. Okay, if you guys don't want to get destroyed by Greeks, do this: buy contracts 1 to 2 years out. Okay, buy contracts 1 to 2 years out. Contract thinking market's going to go up. I don't care where. Okay, that's just what you should be opening. Okay, you should be opening a 41 call contract. Okay, and if you're going to buy a puts, then you should be opening a $39 put contract. Okay, so understand that in order to have the best Greeks as possible, you need to have the best contracts. You need to make sure that you have as much time as possible on your options contract, and on top of that, you need to make sure that your prediction is going to be hit fairly quickly, or very likely to be hit. Even if it's more expensive, it's worth it. You don't want to just throw money into the void just because contracts are cheap. They're cheap for a reason, and they're plotting on you and preying on you for your understanding to not kick into your brain so that they can make some money. It's trading for a reason. These options contracts aren't just spawning. You have to understand that somebody is creating these options contracts behind. All right, so theta, it's going to be the melting ice cream, ticking time bomb. All right, theta is extremely important. So time is money, and every day you hold an option, it loses a tiny bit of value. So once again, this is why I really put on emphasis on, if you're going to play options, try and buy contracts that have 1 to 2 years out. This way you guys are going to be able to sit on your contracts with confidence. You're going to be able to hold it, and you're going to be able to do your thing. Okay, so theta is the time decay. So let's say day one value of a contract, right? let's say you have a weekly expiration. So let's say you have a 7 DTE. Okay, 7 DTE. Let's go and let's break this down. So DTE stands for date to expiration. Okay, so the DTE tells you how much time is left. Okay, then the number tells you how much time is left. Okay, so if you have 7 days before expiration, then in 7 days the options contract will disappear and it'll go ahead and be expired. Okay, and whatever you get, you get. Okay, if it closes in the money, which means that you're up some profit, then you'll get that. But if it closes worthless or down, then you'll just get the remainders. Okay, so understand that theta is going to be the time decay. So here's how our options contract works. So day one value could be $100 and theta decay could be -$5, right? And let's say the day two value could be $95, even if the stock didn't even move. Okay, but because on options you're getting paid based off of time and prediction, you could lose money during a chop. Okay, so if the market is sideways and it's not going in a direction, it's not like shares or crypto where your money will just sit there. Your option could be deemed worthless because you're getting paid based off of how fast and how right you're going to be. All right, so here's an example of theta, right? Think of it as a rental pass. So theta, let's say you have a 30-day pass. Say, imagine you bought a 30-day pass to a theme park. Okay, so day one versus 29. So on day one, the path is worth a lot. It's jumping. On day 29, it would pretty much be almost worthless because the time ran out. The pass was only good for 30 days. Okay, so your options contract is only good for the amount of time that you purchase it for. So you want to be able to have as much time on it. Try and have some years on it. This way, if anything goes wrong, any type of speeches, any type of government shutdowns or anything that affects the market, that would make the market move in a negative reaction from whichever way that you purchase, okay, then you'd be able to survive that. Okay, you wouldn't just be getting destroyed. Okay, so when you have time on your contract, instead of having a 30-day pass, imagine having the 3-year pass or the 2-year pass. Okay, the 30-day pass is not long enough. Okay, so the lesson, don't hold on to options that are worthless. Otherwise, pretty much they're going to just melt away anyways. Okay, so buy your contracts 1 to 2 years out. Okay, try and buy them 1 to 2 years out, and make sure you have your take profits too. Okay, so that's also what I mean by don't hold them too long. You should know exactly where you're going to close. Options is extremely strict. It's not like crypto and shares where you can just sit there and hold it forever. Please don't do that. You need to have a strict place exactly where you know you're going to exit. Okay, you need to know where you're going to go ahead and exit, get your money and close and hit take profit. Okay, once you do that, it's going to be a lot easier to go ahead and progress. Okay, do not sit there and try and hold your options forever, especially once you start seeing profit. Horrible mistake I've made in the past, and inshallah, if God wills, that's not something I want you guys to experience. Okay, so please have an exit plan, know where your take profit is, and please close your trades. And Vega is going to be the fear index. So think of Vega as hurricane insurance, right? Vega measures how expensive options get when people are scared and horrified. So on a sunny day, insurance is going to be cheap, right? That means that the Vega is low. But when a hurricane is coming, okay, whether it be earnings coming, a big news event, whatever, the insurance is going to be expensive. It's going to raise, and that's going to lead to high Vega. So even if your house is fine, the price of insurance goes up because of the storm. Okay, so you guys might have heard of the term implied volatility. Okay, so when earnings come up or when big events come up for stocks, the options value could shoot up due to the fact that people are preparing for a big move. Okay, so there's a lot of cool plays you can make in options too. So instead of actually playing earnings with certain stocks, if you buy a contract before earnings, you might make a lot of money, but then after the earnings, it might go away just because of the hype and expectations. So people are preparing for the future, and that's why options are even a thing in the first place. So certain times when people are preparing for the futures between a big hurricane event that's going to change a lot, your price of the contract could change regardless if it's in the money or out the money. So very cool things you could do with options. So think of Vega as the earning party, right? So before the party, everyone's excited, right? The price for tickets go up. It's a lot of high volatility. Everyone's hyped. It's jumping. It's good music playing. Everyone is getting turned. Okay, but then after the party, the event is over and the excitement is gone and ticket prices crash instantly. Everyone was like, all right, that's it. We already went. It's not lit anymore. Forget it. Okay, so don't buy options right before a big news event. And if you do, make sure that you sell before the big news event. Okay, you do not want to be in a short-term options plays during news. Okay, this is why I also say try and buy contracts 1 to 2 years out. Okay, because if you're playing on your higher time frames, like your daily, your weekly, or even your 4 hour, okay, right, you're gonna have bigger take profits, right? And there might be earnings in between that, which is going to be amazing, just fine. Because a lot of the times earnings will benefit you if you're playing in the right direction. But if you have 1 to 2 years out, you're not going to be getting destroyed by things like news and certain events like that as easily. Why? Because you have so much time on your contracts. So having time on your contracts kind of wipes out all the negatives of options. Have some time on your contracts and buy reasonable contract too. If the current price is 40, contract you should be purchasing for calls is 41, for puts is 39. Okay, you should always buy the number one above or below. That's going to be the best way to avoid these Greeks destroying your profit. I don't want you guys going through any of that weird cringe anxiety or anything like that. Okay, you guys got it. So let's go on this recap. Let's jump into it. So delta is going to be the speed, right? And it moves with the stock price. Then you're going to go ahead and have gamma. Gamma is the nitro. It's the thing that accelerates your wins or your losses too. And theta is going to be the melting time. Okay, it's the time that eats your money. Okay, and then you're going to go ahead and have your vega. That's the storm, and fear makes prices expensive. Okay, so if it's about to be a big news event and you notice your contract shoot all the way up, try and sell before news events. But if you're playing a higher time frame setup, you know what you're looking at, whether on your weekly, daily, or 4 hour. And if you don't, head over to Stackmode.net. I'm here to teach you guys, okay? Whether you guys want to learn how to trade options, futures, crypto, or whatever, I'm down to get into it. I love you guys so much. Stay prayed up, stay high. Keep grinding. I'm going to catch you guys in the next one. Peace.
All right, guys, this is going to be the easiest way on how to read the crypto chart. So it's going to be really imperative to know how to read the chart. It's going to tell you when to exit a lot of times. So sometimes when you come into the cryptocurrency market, buying when there's a lot of hype could mean that you're buying relatively at a high price. Okay. So when we show you guys when to buy at the dips, how to know when to trim some contracts off or trim a percentage of your tokens off, and how to know when it's a good time to buy in general. Okay. So one, let's talk about support and resistance in the first place. So understanding the logic, this is a left to right chart. So price started way over here. It was way over here today. Okay. So we can clearly see from a logical perspective, the goal of the chart is to go in an upwards direction. Okay. Price year after year, month after month, even with dips, incrementally decided to keep going within a higher direction. Okay. So we can already logically put into perspective that, all right, the ultimate goal of cryptocurrencies are to keep breaking new all-time highs. Okay, because people want to invest their money and make their money by buying and holding it as something that has future value. Okay. And in order to do that, price has to keep breaking new all-time highs. So let's say current price right now, as of this video, Bitcoin, it's 122,000, right? All-time highs, which is going to be the highest area of resistance, and resistance is going to be an area where price decides to fall within a downwards direction. So your highest area of resistance needs to go ahead and be broken over and over and over and over and over and over again. And that's how price progresses. Yeah. So if I come over here, I can see at one point in time, the highest price for Bitcoin was 109,000. But then I can see over here to the right, price decided to get above the area of resistance here. And once again, resistance is going to be the area where price decides to fall in a downwards direction. So we can see price getting above the area of resistance here, tried to hold it, and then over here, it definitely held it. Okay, and what happened? Price decided to stop falling around this 109,000 area, and it progressed to a new area, to 122,000. And it's going to try and progress again to maybe 150,000, and so on. It's going to just keep going, maybe to 1 million. Okay, so that's how things work. So as far as the cryptocurrency market, understand that people are investing their money to make more money. So the goal of this is for it to go in an upwards direction. Okay, people are trying to get paid based off of just growth and capital gains. Okay, which means you're getting paid as something moves within a upwards direction. So resistance is going to be a really important thing to understand. especially when just coming onto the charts and just putting on certain trades, because it's going to tell you when to close too. So say you wanted to close a certain percentage of your position, then you'd be able to do that as well too at areas of resistance. Okay, so you know it's an upward chart. So you know areas of resistances are looking to be met with each other. Okay, so prices, as you can see, like this area right here, could mirror each other and do the same thing. So price came into this area once, twice. Okay, and mirrored each other. Okay, once, twice. Price hit that blue line and decided to fall within a downwards direction. Okay, so that's why knowing when price is about to hit an area of resistance is going to be extremely imperative. Okay, because it's going to let you know when it's time to close, when it's time to trim some profits or anything like that. Okay, so resistance, that's going to be when market decides to make a top and fall in a downwards direction. And the opposite of resistance is going to be support. So the opposite of resistance is going to be support, and support is going to be when price makes a bottom and decides to bounce within an upwards direction. So after resistance gets made, and the whole logical reason resistance gets made in the first place is because price can't just keep going in an upwards direction. People are eventually going to want to take profit and take their money. Okay, so they're going to want to take their money off the table, and when that happens, resistance is going to get made. So that's why price goes in a downwards direction. Okay, because it's too much supply. It's more supply than demand. Okay, and then when price decides to go in an upwards direction, there's a lot of demand. Okay, there's more demand than supply. Okay, make it scarce, which is why people make money when stuff goes in an upwards direction. So that's a logical reason why support and resistance work with each other, why they correlate with each other. Okay, so support is going to be when price goes in an upwards direction. Resistance is when sellers come in after holding from a while, and then they want to go ahead and sell, take some profit, and then price is going to go in a downwards direction. Okay, so we know that one, price is always trying to hunt areas of resistance. You can see on the Bitcoin chart here, we know that price is trying to hunt all-time highs here. Okay, even no matter if price makes the most vicious dump to zero, it's still one day, inshallah, going to try and reach all-time highs. That's just how it works. That's just how it works. Okay, price is going to try and break this 124,000 level here. Okay, it's going to try and just continue to go up. Okay, and what can also happen here, so we see, okay, price is trying to meet up with the highest area of resistance to try to break it, or price might reverse here. Okay, it might reverse here, and even if it reverses all the way down there, okay, finds a low right here. Let's say support gets made right here. So even if support gets made down here, it's fine. Okay, because price is still going to try and sweep back up. That's just a better point to buy. Okay, so you know that price is always going to try and break areas of resistances. Now, due to that fact, you know that, okay, if price makes a good dip down, either if price mirrors an area of support and then bounces up, okay, I'm going to know, okay, that's going to be a good place for me to buy. Or if I see an area of resistance, right, get broken and turn into support, then I'm going to also know it's a good area too to buy. Okay, check out this area right here. So I can see right here, this area of resistance got created. Price decided to fall in a downwards direction. Okay, and you can go ahead and see to the right, price decided to break out of this areas of resistance right here. Okay, and guess what? Price decided to break this area of resistance right here and turn it into support. So resistance got formed, broken, okay, and when an area of resistance or support gets broken, we know that's called a breakout. Okay, and resistance, okay, an area where price fell down at, got broken through because price is trying to make some progress and keep making new highs so people keep making money, inshallah. Okay, and support gets made right here. So support is going to be that area where price decided to bounce in the upwards direction. So support can be formed after an area of resistance gets broken sometimes. So sometimes resistance can be broken. That's a support. Okay, it's going to be my favorite model. Okay, and this model is going to be called break and retest. Okay. So whenever you see resistance get broken, turn into support, that's going to be called break and retest. Break and retest is going to be just one of the surefire ways in order to take safe trades, especially when you're taking dip downs. Okay, so if market makes a dip and you're like, okay, is it going to be a safe place? Then you can go ahead and look for break and retest to go ahead and define that. And another way, you're going to go ahead and decide to see if price is going to be a good place to buy at this area, is you can go ahead and look for what I like to call support mirror. Okay. So sometimes you're going to see an area make an area of support. Okay. And then no matter what happens, even if price goes below that area of support, one day it might come above it and then bounce at the same area of support again. Okay. So if you see the same area of support get reacted off of, okay, I like to call that support mirror. Okay. Support mirror. So let me go ahead and show you an example of a support mirror. Okay. This is how you know that, okay, price wants to go ahead and do the same thing over and over again. Okay, because essentially that's what price is doing. Okay, it just does the same thing over and over again. So let's check it out. So I can see this area of support was created right here. Okay, again, area of support is going to be an area where price decides to bounce in the upwards direction. All right, so just keeping it simple, we know that. Okay, price bounces in an upwards direction once it hits support. Okay. So I can go ahead and see over here to the left, price decided to create some support right here. Okay. So right here, price decided to create some support. Okay. And then blast it up. Okay. Price made this area of resistance, and we're trying to make another one right here and break through it. Okay. All of these up here where price is falling within a downwards direction are going to be classified as areas of resistance. Okay. Area of resistance, resistance, resistance. And we can go ahead and see down here, price is going in an upwards direction. Okay. Support. Okay. Down here, price going up. Right here, price going up. Okay. Support. Support. But we can see up here, price going down. Price going down. Resistance, price going down. Okay, resistance. Okay, so this is how support and resistance correlates with each other. And whenever you see support and resistance bouncing in between each other like this is what I like to call a range. Okay, so this area of support got created over here. The price did the same exact thing and created support over here again. That's how I would have known, okay, that would have been a simple or a good place for me to go ahead and purchase some Bitcoin, for example. Okay, I saw support mirror, or if I ever see resistance get broken, okay, and turn into support, then I'm also going to know, okay, that was a really good area for me to go ahead and purchase too. Okay, so I'm also going to have this area here of resistance that got broken and turned into this area of support right here. Okay, resistance, support, resistance broken, turned into support, or support bouncing at the same place. Okay, even if it's not immediately, even if price breaks the support, but if it comes back up, bounces again at the same place, that's going to be a support mirror. Okay, so let me go ahead and cover another example here. So when we're looking at support and resistance, it's understanding the range, putting everything in the big perspective. Okay, putting everything in a logical staircase mindset. Okay, so essentially that's what we're playing when we're looking at the charts. It's a staircase. And it's just about who can read the staircase ideally the best. Okay, so take this area right here. Okay, so I marked this out a couple of days ago, and we can see it's working out now. Okay, so I can see this area of support right here wasn't just created for a reason. Okay, so I personally like to look at everything on my higher time frames too. So we're always going to be making sure we're doing everything on the 4-hour time frame, and we're going to be doing things on the daily time frame. Okay, so what I'm going to go ahead and do, get the black line here. Let me just put it down. Okay, so I like to look at my daily first, zoom out. I know I'm playing a left to right chart. The goal of it is to go in the upwards direction. So I know that price is always trying to break resistances. Okay, so my take profit is going to be all-time highs. Okay, especially when I'm trading crypto. That's what I'm going to be wanting to take some profit off or close some of the position personally, is all-time highs. Okay. So boom, I'm going to go to my 4-hour here. And we can see price created this area of resistance all the way over here to the left. Okay. Price decided to break this area of resistance. Could see price went up, went up, went up. Made all-time highs right here. All-time highs is the highest point price has ever been. Okay, and price is going to be always trying to aim to break that. So always know that within a logical perspective. So all-time highs, ATH. Okay. So ATH stands for all-time highs. So price is always going to be trying to hunt this area, no matter what. No matter how much we dump down, it's always going to try and sweep back up. And ideally, we're going to be hunting this area. Okay. Because the point of these cryptocurrency tokens, the point of these investors and coders and people working so hard to get these laws passed is so it can go in an upwards direction. So not only people can make some more money by investing their money, they're going to be able to have the freedom to send money and transfer money however they would like via the blockchain system. Okay. So it has value. It's not just going up for no reason. This is something that's bringing value to the world. So understand that that's why it's trying to go up. It's not just trying to go up for no reason. Okay. Now, you can go ahead and see this area of resistance that I created right here. And we can see resistance got broken once again and turned into support. Okay. Resistance got broken, turned into support. And then price is heading into an upward direction, looking to break the all-time highs in order to try and break that. And it might even retest off of that. It might break the all-time highs. It's a common scenario. All-time highs gets broken and turns into support for a little bit. It might burst a little bit and then fall down. Maybe try the support again. Okay. And then it might want to even go lower. Okay. It might want to even fall down to an area of support like down here. Okay. So then I might try this area here. This is why it's amazing to have all your levels marked, because then you're going to see, okay, if price wants to go down to this support and then it holds it, okay, you start seeing multiple candles on the daily. You're like, okay, cool. And then you'll catch the whole sweep up. Okay. Even right here, price created the resistance right here, decided to fall down, broke above it. Okay. Created all-time highs, and then price fell all the way down where the original resistance was, decided to turn into support, and it's heading up in a sweep. Okay, looking to break the all-time highs. So let's go over another example here. So when we're putting in the repetition, we're putting in the hours, we're putting in the work, just staring at the charts. Okay, marking out setup after setup after setup, and just having that repetition and understanding that reading dips is pretty much going to be just understanding the logic behind the market. Okay, you know why market is dipping. Okay, when market dips, it's just creating more ammo, collecting more money, just so stuff can go in a more upwards direction with more volume and volatility. Okay, because if ever it's a left to right chart, so if someone got on here and they sold up here, okay, they're not going to keep buying. Okay, they're not going to just keep buying over and over and over again. They're going to go spend their profits. They're going to go reinvest it into something else, and they're going to just take their money. Okay. So that's just how that works. So we have two examples here, right? Two very, very, very simple examples here. So support mirror, okay? So we have this triple area of, we'll say quadruple area of support right here being reacted off of, all right? So we got 1, 2, 3, 4. We got 4 areas of support here, going within an upwards direction. Support, support, support. Okay. It's bounced at the same place 3 times. Okay. And we already know where it's trying to head to. We're trying to break through all-time highs. And we can even see all-time highs got tapped twice. Okay. Price came up here and made all-time highs. And guess what? Price created resistance at the same area twice. So we know that this area of resistance is definitely special. The more taps that you have of an area of resistance or support is going to be really solid. Okay. Once again, the more taps that we have of areas of supports or resistance, it's going to be really solid. So let's make sure we always have that in a perspective. Okay. Resistance, resistance. Then we have support, support, support. Okay. we know price is trying to head in the upwards direction. Okay. Price wouldn't just be making support for no reason. It's trying to keep going higher. Okay. So just understanding market within a simple logical perspective can really help. Price is always trying to chase and break areas of resistances. Okay. In order to make price go in a higher direction. The higher the direction goes, the more something's going to be worth. The more something's going to be worth, whoever the creators are and the large investors are going to get wealthier. So they want it to go in the upwards direction. Okay. And if you're a large investor, you want it to go in the upwards direction too. Okay. So people are going to buy the dips because everything is not always going to fall down to zero every time. It's not how things work. And it's just not probable. Things build value and things are not always fall to zero. Okay. That's just fear. And just having fear in the market is just not something that's going to be tolerable. Okay. This is why we only fear God. Okay. And we take all the risk that we need to. Okay. So boom. Catching this support mirror would have been quite simple. Okay. And let's say you missed the support mirror. Fine. All fine. This is just confirmation that price wants to go bullish down there. But even if you wanted to wait for a dip down, you can see right here. Price created this area of resistance right here. Okay. Price broke above it on the 4-hour time frame here and turned it into some support. Okay. So even right here is a dip down too. Okay. And then price looks like it wants to continue to go in an upwards direction still. Okay. So you can still see as you scale down too, where it's going to be a solid place for you to go ahead and purchase your contracts. Okay. So buying the crypto lows, buying crypto dips and stuff like that is not going to be difficult. Okay. It's just about being patient. And even if sometimes you don't get the most perfect entry, okay, because only God is perfect. Okay. So we can't destroy our investment portfolio, bring about the best entries of all time too. You see the support here got tapped 1, 2, 3, 4 times. Okay. So price most likely will not come down here a fifth time anytime soon again, I don't believe. Okay, if it just held this area for over 2 months, okay, bouncing in the same place, then I don't think it's going to go down and break it anytime soon. Okay, I would go ahead and just buy. Okay, you know price wants to go ahead and go in an upwards direction. It's holding stable support. And especially when you see tiny dips like this, okay, you're buying on red candles that made some retest, you could be like, oh yeah, and go ahead and take it up to the next leg. Okay, and just go ahead and buy and invest. Okay, you see all this space that's left. Okay, all-time highs, the goal of the market is to break all-time highs. You still have all of this space to go ahead and enter. Okay, there's still all this space left. So much space left, so much crypto to still purchase. Okay, and we're trying to catch the rest of this gap fill from where current price is at right now. Okay, catching the rest of this gap fill. And this gap is going to be bigger than the stop loss gap. And even it's like you're not even playing with stop loss, but if you wanted to, you know, you could go ahead and play there. But I recommend just investing an amount that you are comfortable to lose with certain things. Okay. So if you're going to say you're going to invest in Bitcoin, then you should be comfortable with all the funds that you're going to lose. Okay. Because trying to micromanage your crypto trades can just make you lose money in the end, because don't forget, this is a left to right chart. So the goal of it is to go up, and one day it could just burst and sweep way back up. So this is why it's really going to be nice to buy at dips too, instead of buying at all-time highs. Because when you buy all-time highs, it can do nothing but go in a downward direction, and then you're going to be upset. And then you might close early, and then you might close for a loss just to buy the dip, and then, yeah, it's all over the place. So this is why we just buy the dip. We buy the gap fills. Okay, I can see all-time highs is up here. This area of support is holding down here, and I can see price wants to try and fill the rest of this gap right here. Okay, right here. Price is going to be trying to fill all the rest of this gap. Okay, so just focus on how market logically works, and it's going to be pretty easy to make some profitable trades. Real. And so let's check out Solana here. Okay, so let's say here, we can see up here, price decided to create this area of resistance all up here. Okay, resistance all the way up here. So we know price is trying to hunt that. Okay, we got this much left in the gap. Okay, and let's go and let's check out something here. So I'm gonna check out this area of support down here, right? We black line it. Boom. Okay, I'm gonna see if I see anything. Let me zoom in. Okay, I do. I see a heavy area of resistance right here on this line. Okay, so price created this area of resistance right here. This is why I like to just immediately look at the lows. Okay, I can see price create a resistance right there. Okay. Let me zoom it up here. So price did make resistance there. Let me see. Where does price want to retest off of? Price also made a resistance off of here. And let's see if we see any support mirrors or anything to the left here. Gotcha. Strong areas of resistance here too. Okay. Kind of some resistance right here too. So let me go ahead and go to new time. Okay, so we can see why that support got created. There's some heavy areas of resistance that get created at that black line right here. Okay, so you see, okay, price wants to go ahead and still try and head up in the upwards direction. And then we can see here too, price decides to retest off of this area here. Okay, price created this area of resistance like right here. Okay, and then price turned into support right here. So if price were to come down and try this area of support again, okay, that'd be a good place to go ahead and buy. Okay. Or even if price pulled back to like this area of support down here, okay, or resistance. So price is either going to try and come down to bounce at an area of resistance or a previous area of support. So it's going to try and turn previous areas of resistances that it already broke below it into support, or it's going to try and just mirror areas of support. And areas of support are most likely already in areas of break and retest that has happened to the left. A lot of the times that's going to be like what it is too. So let's go over another example here. So we always know that price is trying to hunt all-time highs. Price is always trying to hunt all-time highs when it comes to the cryptocurrency market. Check out Doge, for example. Up on my daily time frame here, I can zoom out. Okay. Oops, it looks like I marked this out here. So let's check it out. So we have this area of resistance that was created all the way up here. And then we have this area of support down here. Okay, and this support didn't come from no reason. It came from this area of resistance right here. Okay, support, and then price already had an area of support get created off the resistance too. Okay, boom, resistance, broken, turned into support the first time right here. Okay, you can see it on the first candle right here, and then price went upwards direction. So this is what I like to call the pro tap. When you see break and retest instantly happen, okay, that's what I like to call the pro tap, because you got to be watching the chart there, waiting for that resistance to be broken and turn into support, okay, to see if that's going to happen. But then when you see an area of support from the original retest get mirrored again into an area of support again, you know price wants to go ahead and probably hold that area, especially if it doesn't break and you start seeing what's called closes. Okay, so if you start seeing price tap the blue line and give you a wick, okay, I never like to enter on the candles that are wicking off the blue line. I like to personally enter on the candles that are above the blue line, because once it's well above the blue line, I know, okay, price probably wants to go in an upwards direction. I don't like to buy ultimate lows and ultimate highs. I like to sell at ultimate highs. I like to wait for ultimate lows to be created in order for me to catch it into ultimate highs. Okay, so I like to trade just safe. Okay, trading safe is going to be a lot better than trying to be overly precise with the best entry, the best this, the best. It's great to have it, but knowing where you need to close and knowing if it's a good dip area is going to be more than enough to make profit. Okay, take this example. You could see this area of resistance got formed right here. Okay, resistance turned into support, resistance right here turned into support. Okay. So resistance gets broken and turned into support. Okay. Resistance formed, price fell down, broke, retest, turned into support, turned into support again, price going up, resistance here formed. Resistance formed and then turned into support. And then, okay, I believe price is going to be a good place to go ahead and buy right here. Let me go ahead and take it here, and you take it up, and you still have this whole gap to go ahead and catch. Okay, you still have all of this money to make. Okay, this whole giant gap. Okay. So once you see price confirming itself, making higher lows, okay, heading in upwards direction, here's the ultimate low. Okay, here's an even higher low. So this low right here is higher than this low. And this low right here is higher than this low. Okay, so when you see price making higher lows, heading in a staircase direction, okay, price is most likely ready, inshallah. Okay, so just play logically and just take your time. Take your time and play logically. Understand like how much progress price is trying to make. Okay. It's trying to sweep into all-time highs. No matter what cryptocurrency, no matter how devalued it is, the goal of it is to go up. Okay, it wants to go up. Even if it's not going up, it wants to go up. I'll take this coin for example. So we have this highs area up here, then we have super all-time highs up here. Okay, so I can see that here. So I can see here. Price decided to created a support mirror. Support area right here. Support area right here. Okay. So, and we can go ahead and see over here too. Support right here. Okay. And the area of support didn't just come from nowhere. Okay. So, resistance. So, area of resistance here, broken. Turn it into support. Okay. Price went in the upward direction. Created an area of resistance up here, also known as the high. Okay, so resistance is just going to be a high area that price is trying to get back to. Okay, so price created all-time highs up there. Okay, so it's not quite all-time highs, but this is just a good area of resistance. How price is trying to get up to. Okay, so you can see price created the area of support here, created support area here. Okay, and then tried to mirror again right here. And the price is trying to bounce it in the upwards direction. Okay, and you can clearly see here, especially once you start looking at your daily. When you start seeing multiple daily candles past where the blue line is supposed to wick from, then a lot of the times, okay, inshallah, price is just incrementally trying to make its progress up to the highs here. Okay, trying to fill the rest of this gap here so you can go ahead and make some money, inshallah. So sometimes it's just about the way you're looking at the market. Okay. And then if you want to go ahead and close it there, you can completely just close it there. Okay. Oh. Let's go ahead and check out something else here. So let's say AVAX, all right? If I zoom out, yeah. You can see price is definitely trying to make some progress here. Okay, so before we even get to all-time highs, I can see for just one, we're trying to get up here. Okay, it's a major area right here. Then I have some more major areas too. Major area right here. Major area right here. And we can see the area of resistance got created once. And it's tapping again, okay? So 1, And guess what? Price created a low. So I would already know here, price is a good area for me to buy right here. I could see price created the area of resistance. Check all the way over here to the left. Broken. Okay. And right here. Okay. Resistance. Exciting. One area right here. 1, 2. Broken. Turn into support. It's going to be a good area to go ahead and buy. Okay. And then you can go ahead and try and catch the sweep all the way in an upwards direction. Okay. So once again, this is classified as resistance over here. Check out how price is falling in a downwards direction. Okay, resistance. Price falling in a downwards direction here. Downwards direction. Price is always going to try and chase resistances. Okay, even though it mirrored right here. Okay, create a resistance again at the same line. Doesn't matter though. Got broken. Okay, no matter how many times things fall down, it's always going to break through. Okay, it broke through right here. Boom. Price made some progress. After that, price created resistance right here at this area right here. So this is why it's important to be closing at certain areas of resistance, because you can see price hit that area of resistance and decided to fall down again. Now, price might try and break this area, but it depends. If you're just scalping or in a swing trade for a couple of weeks or days, it's not something you want to hold infinitely, then I advise you close at areas of resistance above current price. Okay, if you buy a dip, or you close at an area of support above current price. Okay, and this is because support above current price can turn into resistance, causing price to dip. Okay, so support can be broken sometimes and turn into resistance, just like resistance can be broken and turn into support. Okay, so check it. Once again, I'm gonna put down this area right here. Boom, check out this line. It's extremely simple. We got resistance right here. Some more resistance right here. Some more resistance right here. And price is going in a sweep upwards direction. Okay, so I can assume that price might want to try and break this height right here. Okay, but even for that, we got this resistance up here. Okay, we got this resistance up here. This one here. And this one here. That it just mirrored at. Okay, so price is going to keep trying to get past these blue lines above, as these are all going to be areas of resistance. Area right here, area right here, right here, and right here. So it's exciting. Okay, market starts becoming extremely fun when you start knowing how to read the flow. It's, you know, it works in clockwork. And you can see even down here, see price create this area of support right here once, twice, 3 times. Okay, and price is constantly making, so here's a low. Okay, but this low is higher than this low. Okay, so when you see price making higher lows constantly, you know we're heading in an upwards direction, inshallah. Okay, so it's super duper fun and exciting when you see, okay, this is how everything works in correlation. It's like art. Okay, it's like a puzzle piece. That's how everything just, it comes together and all clicks. Okay, so the resistance got created there. The support floor got created here. Resistance got broken, turned into support. And you start seeing the staircase in a whole perspective. Okay, it's very, very, very interesting once you start putting everything into logical reasoning. So you can see price is trying to break the resistance up here. Okay, it created it, but we know price is trying to hunt it, break it, so we can end up to this resistance up here. Okay, so AVAX, whoever the creator of it, can claim that they have the best coin. Okay, that's the whole point of people creating stuff, is so they can try and be the best or try and help people. Okay, so it's wanting to go up in the upwards direction. Okay, the developers of AVAX, whoever took time coding the token, thinking of the idea, I'm sure they want their idea to be worth some value. So that's why things go in the upwards direction. Okay, so we can see how much confirmation here that price is bullish. So much confirmation. We have a support floor. Strong floor. We have strong floor theory supporting that we want to go in the upwards direction, and we have break and retest, and we have resistance getting broken and turned into support. It's crazy. Okay, so we're good. We can go ahead and get into something like this if we wanted to, and close at any of these areas of resistances above current price, because we can see, just like these areas of resistances can mirror each other, just like supports can. But if we're buying at the bottom, we want to be closing before we get reversed on. Okay, this way we're going to be keeping all of our profit, or as much profit as we can, inshallah. Yeah. So just don't panic too. When you see your close, you know what a good setup looks like. You got to really trust God. You can't have any fear, and you're good. Once you get in your setup, you got to trust that. You got to be like, all right, I'm good. I'm good. I'm good. Don't think about drawdown. Don't think about losing. Okay. You got to be comfortable with whatever you put into. Okay. If you put in an amount of money into a trade, you got to be cool with it going to zero. I promise you, it's going to help your psychology a lot. Okay. Be comfortable with just losing whatever you put in. And I promise you, your trades are going to work out a lot better. Okay. The goal of these are to go up. And the reason why a lot of people are unprofitable is because they self-sabotage. Okay. They jump in the middle of their trades and they cut it early. Instead of seeing the plan all the way through, you got to see the plan all the way through. Okay. We never know what God has planned. You got to see all the way through. If it's even in your heart to get it in the trade, you got to see all the way through. Okay. If it's working out, if you're up some profit, don't just close it and see it all the way through. You could see 10x that profit. Okay. You got to see it all the way through. Don't self-sabotage your trade. Don't destroy anything just based off of thinking too much. Okay. That's something I've been having to check myself on with certain things. Okay. So if price creates this area of resistance right here, and then price comes all the way back down to it in terms of support, don't mentally self-sabotage. Get in that trade, okay? And you can confidently take that to this area of resistance here. I'm gonna bust out the ruler, and you can see how many units of price action are left. It's a whole gap, still around 5.4 thousand, right, areas of price to go ahead and make on this token here, okay? So you can make a lot of profit here. Still a very, very, very large profit window. Even if you wanted your stop loss underneath this low, right? Say you set alerts down here if you wanted to, okay? The risk to reward, it'd still be positive, okay? Even if you entered right here. So let me pull out the risk to reward tool, and the risk to reward tool is pretty much gonna show you how much you're gonna make versus how much your risk is. So say the risk is down here and the target's all the way up here. So your risk reward would be a 1 to 2. So no matter what, if you hit take profit, right, you would double your money. Okay, so you would double your money. So just focus on certain things. Okay, put it into perspective. Okay, like, okay, is this the type of trade that I want to get into? Does it match up my parameters here? Okay, and even you could see the ultimate entry is all the way over there, right? Check it out. Here's another confirmation that price wants to go bullish. And so check it. Boom. Price created an area of support right here. And guess what? We have some more resistance right here. Break and retest. It's spamming it over and over and over again. It's actually almost impossible to not make money in the market. It's genuinely difficult. Okay. You could be the least technically gifted person of all time. You could be blind and you can make money. Okay. Like if someone told a blind person where all-time highs was and someone set alerts there, okay, and something called out when all-time highs was hit, they would be able to make money. Okay, if anything, that might be better. Okay, because you wouldn't be staring at the charts. You wouldn't even know to self-sabotage your trade. You're just going to be in, just expecting take profit to get hit, and then when your alert goes off, you're going to be good. Because how many times have you been in a trade and then your alerts go off and take profit gets hit? A couple days or weeks later, you're like, dang, I wish I got in that. Okay, so in order to stop that, just don't look at it. Don't stare at the charts all day long. Okay, and don't self-sabotage. It's really easy to self-sabotage by overthinking. Okay, sometimes you gotta just leave it with God and just keep it trim. Keep it trim and just let it do its thing. Okay, let the trade work out. That's the reason why you got into it. You analyzed something. Okay, you saw something good in it. So just play it out. Play it out. So this would be a really good sweep to go ahead and catch too. And you're gonna notice too, all the crypto pairs that we just looked at, they have a very, very similar kind of price action formation. So they all had a very similar gap. Okay. And that's because a lot of the cryptocurrencies, some of them do move like relatively like the other ones, but sometimes like Bitcoin, for example, are just so powerful and just do their own thing. So yeah, depending on what you're looking at. Yeah, but say Hype, for example, Hype could have a very similar looking setup to Link. Okay, with that large gap with the resistance way above. Okay, but then something like Bitcoin, okay, could literally be at all-time highs. Okay. So it just depends on what you're looking at, depending on how many people are investing into what you're playing to. It's going to depict on how quick it moves. So if you just see something else at all-time highs and one crypto just isn't, then one is going to tell you how valuable something is in the long run, honestly, and Yeah. So you can see this came out in 2021, and price is trying to make some progress and sweep back up, but let's analyze this here. So let me go ahead and instantly put this area of resistance as I'm gonna take profit up here. Okay. It's gonna be the highest point I can currently see with my eyes that I know price wants to try and sweep. Okay, so even right here, price created this area of support. I can see why. Support got created because of this area of resistance up here to the left. Okay. So that's going to be one thing I like to do, is just put a line down at the lowest area of support and be like, why? Why is this support created? So breaking everything down logically is going to really help you. Okay. So check it out. Even ask yourself why right here. Okay. Why is this support created? You can see this area of support all the way here to the left got created. Price went in the upwards direction, and price mirrored that over here to the right. Okay. And then went in the upwards direction. So that's going to be another confirmation that, okay, I think price wants to go in the upwards direction. Okay. And check this out. This is definitely going to be like, okay, let's see. Price created resistance right here. Resistance decided to get broken right here. And just like our bread and butter, we always talk about, turn this to support. Extremely, extremely simple. And we can see price wants to try and fill in this wedge to this resistance up here, fill the resistance up here, okay, and then fill the resistances up there. And we still have around this much area of price action left. Okay. Simple. It's simple. It's not hard. It's not difficult. And it's just taking our time. Really taking our time and knowing when we're investing and why we're investing and what we're going to be getting invested to. Okay. And it's taking your time. Straight up just taking your time. Okay. When you're waiting for these trades to work out, when you're waiting for areas of take profits, you're like, okay, let me go ahead and take my profit, cycle it back into whatever I want to, and just keep going, keep going, keep going, keep going. Okay, take it trade by trade. And this is going to be a really, really surefire way to keep growing your account. Okay, just analyze each setup, and the patience factor is really what's going to determine how quickly you're going to grow your account. Okay. Because if you run up a bag, you don't wait for a setup that you should be waiting for, and then you blow it. That's on you. Okay, we take that to the chest, we pray on it, we move on, we come back stronger. Okay. But when you're marking these setups out constantly, we just did like 10 setups in a row. You have everything hawk-eye down, just going to be constantly raking in money, raking in money, raking in money, raking in money. Okay, so it's important to be humble and really disciplined and know what to do with the profits. Have a strategy, know what you're going to do, whether investing into business outside of trading or just doing whatever. Okay, just know what you're going to do with profits. Okay, because once you know how to read the market, it becomes, it's really simple. Okay, it's very, very simple. You know the gap fills, you know how things work, and you can break it down within logical perspectives. Okay, you can say, okay, this works because of X, Y, and Z. This works because of ABC. Okay, and all of these things are going to be like, okay, well, we know why this is occurring, so let me go ahead and do this. Okay, and the logic behind everything really, really helps a lot. Okay, helps a lot. So let's go and let's do one more example here. And going through a bunch of different crypto coins and constantly marking out setups is going to be a really good way to get profitable too, because you're just going to be living on the charts, understanding how things work, and you're going to be like, yeah, this is definitely how market's supposed to be played. So check this out here. I can already see this area here. So I'm getting my daily. I can zoom out. Okay, so I have this area right here. Okay, so I got this area of support right here. So support got created based off of this area of resistance right here. Resistance right here got broken. Resistance got broken. Turned into support. Okay, so resistance got broken, turned into support, and I could see again within the distinction, I could see resistance right here got broken and turned into support. Okay, and then price decided to make a new high all the way up here. So I can see that price wants to try and at least tap this area of resistance right here. Okay. And if I wanted to, okay, would be able to go ahead and invest into this, catch the rest of this gap fill. Okay, close up this area of resistance here. Trim there, you can trim there. Okay, and trim there. Okay. You can see price is trying to make a sweep, and if I bust on my ruler here, I can see all the room that's left. Okay, all the room that's left to go ahead and attempt this to make some money here. Okay, so take your time, take your time, take your time. When just reading your setups, keep paying attention to resistance and to support. Resistance and support is going to be your best friends, okay, within the market, and just trust. Okay, trust. Okay, you got to really believe in your setup. Okay, trust God. There's a reason why you're thinking about gaining these setups. You're good. Don't blow it. Don't blow it. You can constantly keep getting in these setups, making your money, putting into other long-term positions that you just don't have to close, that you could have open forever if you wanted to. Okay, so it's going to be up to you how you want to play it and how you want to grow your account. All right. So head over to stackmode.net, tell them how to trade cryptocurrency. Say a prayer to God. Keep grinding. Peace.
So let's go and let's talk about central bank digital currencies, also known as CBDCs. Now, don't confuse this with cryptocurrency, because cryptocurrency is decentralized and doesn't have a ruler, and CBDCs are money ruled by the government. And think of this as a digital version of cash in your wallet, but with one massive difference: it's programmable. So that means that in theory, the issuer could track every single transaction you make, limit how much that you could save, or even decide what you're allowed to buy. And supporters claim that it is the upgrade our financial system needs to be faster and safer, but critics are calling it the end of the financial privacy embedded in us as humans forever. So we're looking at the future of convenience, or are we looking at the ultimate tool for our total control? Let's jump into it, inshallah. So what is a CBDC in the first place? CBDC stands for Central Bank Digital Currency. So imagine if the cash in your pocket turned into a computer code, but it was still worth exactly the same amount. That is the basic idea of a CBDC. And it's digital money issued directly by the country's central bank. Okay, it's not physical paper, and it doesn't come in coins. It exists only on computers or digital wallets. And unlike some cryptocurrencies that change value wildly, a CBDC is meant to be as safe as a dollar bill. Okay, so think of it like virtual cryptocurrency just created and ran by the government instead of it being on the peer-to-peer decentralized network. Okay, so the government's pretty much creating a currency in order to combat cryptocurrency coming out and its whole decentralized features. Okay, so we'll talk about the benefits. Let's jump into what it is and let's continue. Physical cash versus the CBDC. So we already use credit cards and apps like Cash App, PayPal, Venmo. So how is this going to be any different than things like that? So the commercial bank money that works today. So when you swipe a card, your bank promises to pay the store. Okay, and it's an IOU between the banks. Okay, and the CBDC, it's a direct liability of the central bank, and it's like handing someone digital cash directly without a middleman bank needing to promise the payment. Okay, and as far as the speed, so regular bank transfers can take days, especially on the weekends. And also when it comes to wire transfers, things like direct deposit when you're getting paid, things like that work on a time-based schedule, whether it be your direct deposit hit at 6 a.m. Some people have direct deposits hit at 6 p.m. Okay, some people don't have direct deposits that hit on weekends and have to wait for the following business day, such as a Monday or a Friday, etc. Okay, but with CBDCs, payments and bank transfers are going to be instant. Okay, so they're creating a base in a way for people to instantly send money without having to use outside apps. Okay, so sending money today is like sending an email that goes through 3 different servers before actually arriving, and it has to all get approved too. Okay, if you decide to send money via wire transfer, it could definitely bounce. Okay, and sending a CBDC is like handing whoever you need to instant money, okay, or instant $20 bill, but doing it over the internet instantly, instead of sending the $20 bill via the mail, waiting for the bank to sign off on it, and then sending the $20 bill to the person you want it to go to. That's how traditional banks work. So CBDCs really save a lot of time, make things a lot quicker. Okay, and hopefully, inshallah, that'll bring a lot more control back into people's hands versus how we want to spend our money and when we need our money. So if CBDCs are out, what's the point of crypto, Chris? So if they're the same thing, and when they're not, and they both use digital technology, the real difference that comes in between them, okay? One is decentralized and one is not, okay? So they both use digital technology, okay? Sometimes the blockchain, but they're both different in the point of who controls it. Okay, so cryptocurrency, Bitcoin, Solana, your XRPs, Ethereum, all decentralized. And the term decentralized means that it's not controlled by a centralized network. Okay, when you decide to send Bitcoin to somebody, okay, it directly gets sent to their Bitcoin wallet. Okay, no ifs, ands, or buts. Okay, peer-to-peer transaction system, also known as the decentralized system. Okay, then you're going to have the CBDC side, okay, which is going to be controlled just like traditional banks by that centralized bank fiat currency system. Okay, but the price will be stable. Okay, so $1 will equals $1. It's not going to be fluctuating as much. And as far as privacy concerns between the two, crypto is often anonymous. Okay, you have to go into the blockchain in order to check certain transactions out, etc. But CBDCs allow the government to see the transactions in order to stop crime, any type of money laundering, or any type of fraudulent activities happening. Okay, so think of Bitcoin kind of like a digital gold that you own yourself. And CBDCs are going to be like digital dollars managed by the Federal Reserve. So one is for freedom and investment and speculative purposes, and the other is going to be for stability and spending. Okay, so one's purpose, okay, it's going to be for speculative, freedom, and investment reasons. And the other purpose is going to be for stability, spending, and sending your money how you want within your centralized bank, okay, when you want, without having to use any type of external apps that you may potentially have to get approved for, especially when you already have your bank. Let's head over to the next slide. So let's talk about the two types of CBDCs. Not all CBDCs are for regular people. Okay, there's going to be two main types. One, you're going to have the retail CBDC. Okay, so this is going to be just for the day-to-day person. It's used for buying coffee, clothes, paying bills, and it really just acts like cash in an app. Okay, and then you're going to have number two. Other side of it, you're going to have your wholesale CBDC. Okay, this is going to be for banks, and it helps huge banks send millions of dollars to each other instantly and safely, replacing the old slow systems. Okay, so retail is like the debit card in your wallet, and wholesale is like the armored truck that moves money between bank vaults. Okay, so really understanding the two different types of services and reasons why is going to help you make some future investment properties, especially when we start seeing banks implement CBDCs more and more due to the fact that they're trying to create some type of competitive edge against the whole cryptocurrency decentralized space. Okay, so why create a CBDC? Okay, governments aren't just building these for fun. Okay, one, it's for competition to create a space for them to still be profitable in the financial world, especially as cryptocurrency grows year after year after year after year, and people are starting to wake up to what's actually happening and how the currency works. Okay, and the efficiency of everything. So payments become instant and cheaper. So no more 3% credit card fees for shop owners, etc. And financial inclusion is going to come into play. So people who don't have bank accounts can still have a digital wallet on their phone to receive money safely. So that means you can still be able to do jobs and get paid exactly how you want. And in case you get declined by any app such as Cash App, Zelle, or anything like that, you're still going to be able to survive and pay your bills how you need to. And programmable money is what it is. So the government could send stimulus checks that expire if not spent, or can only be spent on food using CBDCs. Instead of having to get checks or use certain cards to spend money, CBDCs could be used to fund government programs to help out citizens. Okay, so during an emergency, the government could pretty much airdrop money directly to everyone's phone without having to mail paper checks and give everyone an essentially virtual card by using CBDCs. Okay, so we can start seeing things transfer away from the traditional bank financial fiat currency system that we've been seeing for the past couple of decades into a whole new blockchain involved world. Okay, let's head over to the next slide. So let's talk about the risk and the concerns. So why are some people worried in the first place? So with great power comes great responsibility. Okay. So given the government total control over digital money has risk, and it's going to be a privacy loss factor that comes into play. So cash is going to be private. Okay, if you buy a candy bar with a $5 bill, nobody knows where it came from even. With a CBDC, the issuer can technically trace every penny that you spend, which takes away people's privacy, which adds control back into people's lives. So if money is programmable, they could stop you from buying things. Okay, so that means that they could deny transactions, freeze certain things, just as a normal bank account can. But banks and credit unions have a little bit more separate control from just the straight up government centralized system directly. Okay, so cybersecurity reasons as well too. If the central system is hacked, the whole money system could freeze, or even if it goes down. So let's say a CBDC risk system is running on like a system like AWS. Okay, if AWS were to go ahead and shut down, that means people weren't going to be able to access their funds. Okay, so do you want convenience or privacy? Okay, both things are going to go ahead and have concerns, and a lot of factors are going to come into play. So deciding what you're using your money for and how you want to invest is going to change year after year after year. So make sure you guys are staying on top of things. And as far as compliance for even your own stores, even if you want to take CBDC currency, and we'll see how the things change over the next couple of years. So are CBDCs real yet? Answer is going to be yes. Okay, it's not just a theory. Many countries are already using and testing them. Okay, for the Bahamas example, using the sand dollar. So the Bahamas is the first country to launch a full CBDC. So people use it to pay across different islands using mobile phones. And then we got China. Okay, China using the digital yuan. And millions of people in China are already testing the ECNY. Okay, electronic CNY. Okay, it's just digital fiat currency for China to buy subway tickets, groceries, etc. And then we got US. We got the Project Hamilton. Okay, the Federal Reserve and MIT are researching how our digital dollar would work, but haven't launched one just yet. But the United States is working on things. Okay, so over 100 countries representing 95% of the world's GDP are currently exploring a CBDC. Okay, and this is going to be research done as of 2023, and we can start seeing a lot of things change, especially when it comes to government-funded projects, such as like food stamps, unemployment, or anything like that. Instead of people getting the money placed on certain cards or traditional bank account systems, a CBDC wallet could be used in order to have people spend money on that throughout the entire network. So monies came a long way. It came from seashells to gold coins, seasoning, to paper bills, and now we got plastic cards, and now we can just send money digitally with numbers on the screen with our phone. And CBDCs seem to be the next logical step in a digital world realistically. So as you grow up, you got to understand how money works, you got to be able to adapt, and you got to be ready to change how your asset classes are being moved and how your money is growing, especially as things get more expensive over time. Your money has to be working for you. Okay, keep that logical perspective. If the world is going to get more expensive over time, that means that your money can never stop working, especially when we have to do things like use the bathroom, sleep, etc. You have to be getting money while you're doing that stuff. Okay, if you want to be competitive in this world, you got to be getting money at all times. In your sleep, while you're awake, while you're getting money, you should be getting money, and it should be that serious, inshallah. Okay, so CBDCs offer speed and safety, but we must come to terms with the fact that you're going to be losing respect of privacy, but you are going to be getting a lot of convenience as well too. Okay, no more long paperwork, waiting for cards and stuff like that. And a lot of that stuff can be frustrating. Okay, just instant funds that come on a wallet, and we'll really see how it plays out for the future. So stay prayed up to God, keep grinding, and head over to Stackmode.net for all trading education. Catch you guys in the next one. Peace.
Whoa! Another episode of Coop Talk. It's cold like Minnesota outside. May God bless y'all. I pray y'all are doing straight. Want to talk to y'all about a very sensitive topic. What are you trading for? Are you trading for family? Are you trading to just ball? Are you trading to clear your debt? because there's different styles of trading and investing for everything. But at the end of the day, you're looking for income, I assume. Okay. We're all in the markets trying to make some income. But the income is not going to be the end all be all. You don't just get the income and ball out and that's life. You know, yes, balling out is amazing. But don't lose your family values. Don't lose yourself as a person. When you start touching the income that you want to be touching, it's really important to stay intact with yourself. Okay. What are you trading for? Are you trying to own a bunch of real estate? Whether it be duplexes, multiplexes, multifamilies. Excuse me. Ask yourself, why? Why are you trying to run up these bands? Why are you trying to run up a surplus amount of income? Because it has to be channeled. It has to be channeled. Okay, right now, for example, right, God forbid, let's say you're a drug addict. If you're a drug addict, right, and you're a heavy drug addict, once you start getting more income, what do you think your money is probably going to be directed towards? More drugs. If you're addicted to buying clothes, what do you think your money is going to be directed towards once you get more money? You're going to start buying more clothes. So if you're an investor, you're going to call yourself an investor, you need to focus on keeping your money in an asset river. Okay, once you touch that big bag from the markets, what are you going to do with it? Do you want to buy real estate? You want to buy yourself a house? Do you want to pay your mom's bills? Pay your loved ones' bills off? So you got to really have a talk with God and talk with yourself. Because I'm telling you, when you start touching the money, it's different. You know, yes, you're going to be able to live in peace, but don't forget you also have to pay taxes. But when you start touching the money, it's really important to not lose yourself. Okay, direct your focus and your income will flow in that direction. Okay, if you're really into fitness, you could potentially build gyms if that's what you want to do, or build yourself your own personal gym in your house. Okay, put a sauna in your house. Don't indulge in sin when you start touching the money. I especially am talking to my younger crowd for sure. I've done it, you know, living the high-rise lifestyle. I did it for a couple of months. And I'm going to tell you right now, if you're a God-fearing person, if you're a grinder, someone who's just focused on their work, you just wake up, pray, you grind, take care of your loved ones, you really hold it down, focus on bettering yourself, improvement, and being a provider. Environments like that where you're around partying, drugs, sin, infidelity, etc., it's not going to be really positive for your mind frame. Okay? So if you touch the big bag, even if, let's say if you're in your hood right now, right? Even if you're in the hood, right, and you're looking on YouTube, you're seeing people in Miami, you're seeing people on the boats do this, whoop-de-whoop. You know, take a vacation, experience it first. But don't overly glorify that lifestyle. You know, take a Lamborghini, for example, seeing the guy with the lamb. You don't see underlying issues. There's tons of stress I go through outside of finances. Okay? So you don't see underlying issues when it comes to social media and certain things like that. So when you touch the big bag that you want to touch, when you start making the income that you want to make, it's really important to, one, stay focused on God. I'm not just talking about God for no reason. It's because, one, I've made mistakes in the past, right? And I pray God can forgive me. And I don't want you guys to go through those same mistakes. And I don't want you guys to go through mental spirals of, whoa, this isn't really what I thought it was. You know, you might want to go towards maybe some farm life. Just a calmer, more decent life. You can still go nice car, get you a Porsche, you know, just something chill. But you don't gotta have 10 cars. You don't gotta have 5 Ferraris, 3 SRTs, 2 Bentleys, and the Lamb. Like, you don't have to have that. You know what I'm saying? And then a Benz, and then 5 Maybachs. That's not what you want in your life, ideally, stress-wise. It may look good, but who really cares what people think? You got to stop caring what people think too. When you touch that big bag, please do not do things to pop it, to flex because of people. I don't care if it's old people in the past, old friends, whatever. Oh, I'm going to go ahead and run up this money and pop it on them. I did it when I was 18. Okay. I went through it. My first car was an Audi. It was an Audi A4. 2014, something like that. 13 maybe. And someone crashed into it while it was parked. Thank God, that taught me a lesson. But during that time, it made me very arrogant, and I repented to God. But, you know, just after all the years of getting bullied and stuff like that, finally be able to have something and people look towards, you know, me for some type of motivation. But I realized it's not about the materialism. You know, even if you do pop up nice car, try and give some game. You know, try and give some game so they can get one too. Don't put yourself over people because you have more materialistic items. This is a fleeting world, and we'll all be judged as human beings by God. Okay? So just because you caught the lamb, don't start popping it on people that you used to know. Don't start poo-pooing on people. Don't start treating people bad. Don't start putting yourself in a negative mind frame too. Like, oh, this lamb isn't good enough. I've gone through that. You know, even with the coupe I'm in right now, I'm in the Mustang coupe. You know, it's cool. It's cool. It's stay down. After the Audi, I decided, you know what? I'm going to go ahead and downgrade a little bit, pay a little bit less insurance, and not really care what people think. And the kids still smile when they see this car. I think it's pretty cool. My wife thinks it's cool. My family thinks it's cool. So I'm not tripping. But I'm not over here posting every little thing, posting my car all the time. You know, even inshallah, if God wills, if I do cop a better car, like a Benz or a Maybach or something like that, the whole channel is not about to be back about the Maybach. I'm not about to make my whole life about the materialistic item that someone could crash into and it could be gone in 2 seconds. Okay. Is it nice to have? Is it a blessing? Absolutely. All credit to God. Thank God we have the wisdom and the strength to be able to enjoy this world. Okay. Especially as we grind, get more resources, work harder, hit more trades, stack up more income, and invest. We'll be able to do more. Okay. But don't lose yourself when you touch that big bag. Please. 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 It's really important. Keep God first. Okay. Even when you start touching 5 figures a month, 6 figures a month, don't forget about taxes too. But keep yourself mentally focused. Do not lose yourself in sin. Do not start living in a super unrighteous lifestyle. For example, you know, I'm not better than anybody, but I don't drink alcohol, for example. Okay. And just being around people who constantly drink alcohol, it's not for me. It's not for me. And if you're someone who likes to be focused, if you're thinking about moving to a high-rise city type of life, and right now you're maybe in like the suburbs or more of a rural-ish area, what you have is a blessing. Please understand that. I just moved to Las Vegas, and I tried out the city of Atlanta. And I still like living in rural areas more. Okay. I tried the city life, guys. It's not for me. It's not for me. And for a lot of you guys who are just focused, tunnel vision, focused on providing for your family, focused on God, don't think that type of lifestyle is going to be for you guys either. Trying to have 5 cars just to post on social media. Whole time you got 5 insurances. You got 5 different people who could break into 5 different cars, or someone could try and break into all your cars. You got items to keep up with in all your cars. You got people asking to borrow, yo, can I drive this today? Yo, I got this. Yo, oh, you're not letting me drive the car today? You could fall out with your family. A lot of this comes with underlying stress. So I just want to keep it real with you guys. Okay, please. Just wake up, pray to God, work out. Working out really helps you channel your energy. your direction, especially so you're not talking to your loved ones or anyone disrespectfully. Let's say you have a bad trading day. Let's say you lose like 5K in a day or something like that. You don't want to be storming around the house grouchy, everything about money all the time. You're treating your family bad because you just lost. Chill. Don't lose yourself. Relax. Okay, you could lose all the count. Don't crash out on your family or yourself. Don't put yourself into mental desperation. Please don't commit suicide. Okay. And please just try and keep yourself focused on God. Don't grieve your spirit so you don't go through depression. Because this money stuff can get deep. Especially when you start balling and then whoosh, God takes it all. Okay, because if you fall into sin, you will get the results you deserve. Okay, anytime I fell into sin, God forgive me, I got the results I deserve. Cars taken away from me, luxuries taken away from me. And thank God I was able to be focused and get it back. Okay, all credit to God, alhamdulillah. So, this journey is going to be a long, beautiful one. But I just want you guys to be conscious of what can happen when you do start touching certain levels of income. Don't change yourself. Don't lose yourself. And don't let the income affect your life to the point where you just don't even know. Okay? Got a call there. My fault, guys. But the income, don't let it make you. You make the income. Okay? Take care of your family. Take care of yourself. Okay? Especially if you're a provider. Let me talk to you guys about this too. If you're a provider, let's say you're someone who takes care of your family and yourself, etc. Have some time for you. Do the things that you like to do. Take care of your mental health. Because especially as a provider, you can really lose yourself and everyone else, making sure everyone else is okay. Make sure you're okay. Okay, take care of you. You ball out. Okay? Don't overly pop it and lose all your money. You know what I'm saying? But get yourself a nice meal. Get yourself some new clothes. You know what I'm saying? Cut your hair. Get your hair done. You know what I'm saying? Do your thing. Feel yourself. We're human beings. You know, life is, you know what I'm saying? It's more than just money. So don't lose yourself. Yes, we're getting this income to make sure we're good. Make sure we can chill out, do what we want to do. Thank God. But at the end of the day, take care of yourself. I've lost myself a few times in the grind. I'm not going to lie, guys. I've lost myself a few times in the grind. Was my work always consistent for the most part? Yes. I'll say that. Was my income always consistent and going in an upwards direction? Yes. But was my mental health always in the right place? No. Was my physical health, you know, I was in shape weight-wise, but as far as my other external factors or internal factors, like my kidneys and stuff like that, not drinking enough water, I had to quit soda, a lot of certain things, you know. So just maturing and growing up is really just teaching me a lot of lessons, and I just want to come on here and just give you guys some just warnings and just let you know what I've gone through, just so you guys don't go through any hardships and any hard times. Just stay focused on your family, your loved ones, and most definitely God. And I promise you'll probably have a good life. Yeah. I love you guys so much. Catch you in the next one. Head over to stackmode.net. Peace.
Thank God. Let's go and let's talk about what this means for the future of trading and how new traders can go ahead and jump into the market a lot easier now. So let's understand what the PD2 rule even is. The pattern day trading rule, as defined by the Financial Industry Regulatory Authority, the FINRA, it was a crucial regulation that governed day trading in the United States. Instituted in 2001, it was created to protect inexperienced investors from the substantial risk of frequent leverage trading during the dot-com bubble. So they didn't want people just throwing in all their bread and losing it all for no reason. Okay, when a bunch of new companies were hitting the stock market. Okay, so the pattern day trading rule was pretty much created in order to protect people. So the $25,000 equity requirement. So to be classified as a pattern day trader, okay, PDT, you need to execute 4 or more day trades in a margin account within a 5 business day period. Nowadays, there's 2 types of accounts. You have cash accounts, okay, which lets you trade strictly with your own money. And then there's margin accounts, okay, which lets you trade with some borrowed funds when it comes to the broker. Okay. And once flagged, your account was required to maintain a minimum equity of at least $25,000. And if the balance dropped below this, day trading was then restricted. And what's a day trade in the first place? A day trade was defined as the purchase and sale, or sale and purchase of the same security within the same trading day. So let's say, for instance, I purchased Stackmode stock for $30 a share, and I sold it for $34 a share within the same day. Let's say I did that all on Monday. Okay, that is a day trade. If I bought Stackmode stock for $60 a share and sold it for $80 a share, okay, and I bought $60 a share on Monday and I sold $80 a share on Friday, okay, then that's not going to be a day trade, because that was days later I sold. I bought on Monday, sold on Friday, not a day trade. But if I buy on Monday, sell on Monday, that's a day trade, okay? So if you buy and sell within the same trading day, that's a day trade. And this rule applies to stocks, options, and ETFs. And the purpose of this rule: the primary goal was investor protection, and the rule ensured that traders engaging in high-risk strategies had sufficient capital to absorb potential losses, thereby protecting both the individual and their brokerage firm from financial instability. So the historic regulatory shift of 2025. So as of September 2025, FINRA's Board of Governors has officially approved amendments to replace the pattern day trading rule. Exciting. This is one of the most significant changes to day trading regulations in over 2 decades. And the move comes as a response to the rapid advancements in trading technology and real-time risk management capabilities of modern brokerage firms. So the fixed threshold is now gone. The rigid 25,000 equity requirement for day traders has been completely eliminated. This removes a major barrier for entry for retail traders. And retail traders, if you ever hear that term, it's just people who just want to get into the market. Okay, not like hedge funds, banks, or anything like that. Just individual investors a lot of the time is what retail means. So individual investors and individual traders with smaller accounts who were previously unable to engage in frequent trading can now do it. So replaced by intraday margin framework. So the old rule is replaced by a more dynamic and flexible intraday margin framework. This new system applies existing maintenance margin rules to a trader's real-time intraday exposure, making it a risk-based approach rather than a capital-based one. And pending SEC approval. While FINRA has approved the change and must still be filed with and formally approved by the U.S. Securities and Exchange Commission, SEC, before it can fully be implemented. So traders should continue to operate under the existing PDT rule until a final effective date is announced. Okay. So FINRA approved the change, and we're still waiting for it to get approved. Implications for traders: a new era. The removal of the PDT rule represents a seismic shift for retail traders, particularly those with smaller capital bases. It promises a more accessible, albeit more complex trading environment. So lower barriers for new traders. So the most immediate and profound impact is the ability for new traders with accounts under $25,000 to execute frequent day trades without restrictions. This democratizes active day trading and opens the door for a new generation of market participants. More dynamic buying power. Under the new framework, buying power will be directly tied to the risk of positions a trader takes, and highly volatile securities or concentrated positions will consume more margin quickly, while stable assets will allow for more leverage. This requires traders to have a better understanding of margin mechanics before you lose all your money and blow your account. An increased importance of risk management. Since the fixed capital floor is now removed, risk management becomes paramount. If you don't follow your rules, if you're not disciplined, if you don't humble yourself, okay, if you don't wake up, pray to God, study the charts, work out, have a strict routine, journal all your trades, you won't be successful, okay? You have to be extremely, extremely disciplined when it comes to this game. And it's about keeping up this bread, keeping up getting this money year after year after year. It's not about just making 7 figures in 1 year. It's about doing it again the next year, maybe scaling to 8 figures, 9 figures, and pushing yourself further based off the discipline consistency. Risk management is going to become paramount, okay? The more power that you have, the more power you're going to have to control. And traders need to be vigilant about their intraday exposure to avoid margin calls or forced liquidations. Forced liquidations is where the market is going to pretty much automatically close your position for you. And if you don't pay the money back that you owe the broker because you're paying with leverage, which means they're giving you capital, then you could be subject to court fees and they could owe you money, or you have to owe them money. Okay. So diving deeper into the intraday margin rule. The intraday margin framework is a sophisticated replacement for the outdated PDT rule. Instead of a blanket restriction, it uses real-time metrics to determine a trader's capacity for risk. And here's how it works. So real-time calculations. Brokerage firms will now calculate and enforce maintenance margin requires throughout the day. This provides a more accurate and responsive measure of a trader's risk level. So position-driven leverage. Your trading leverage will no longer be static. It will fluctuate based on the specific positions you hold, their volatility, and the concentration of your portfolio. So for example, a highly volatile tech stock will consume more margin than a blue chip utility stock. And the impact on different strategies. This can make strategies like scalping or fast-paced equity trading more viable for smaller accounts. However, it also introduces a new layer of complexity, requiring traders to understand the specific margin impact of each security they trade. So here's an example scenario, trading under the new rules. So let's consider a practical example of how the new intraday margin framework might work for a trader with a small account. So let's say, for example, Alex, right? Okay, let's use that name for example. Let's say Alex has a trading account with a balance of $5,000. He wants to execute more than 3 day trades in a week, which was previously impossible under the PDT rule. So in the old rule, Alex would only be restricted to 3 day trades. He could not execute a 4th one, regardless of the quality of the signal or his risk management, okay? Because it's 3 trades in a week. Now with this new rule, Alex can now make a 4th, 5th, or even 10th day trade, and his ability is no longer limited by a number of trades, but by the intraday margin available in his account. And his broker monitors his risk in real time. And if he takes a position that's too large or too volatile for his account size, the broker system will simply prevent the trade. So risk and key considerations for traders. While the new framework offers unprecedented freedom, it's not without its own set of risks. Traders must be prepared to adapt their strategies and mindset. You can be subject to intraday margin calls, where unlike the old rule where you were protected by a fixed floor, you may now face intraday margin calls. If your positions move against you, this requires immediate action and could lead to forced liquidations. And education is going to be paramount. Understanding concepts like maintenance, margin, concentration limits, and intraday exposure is now a non-negotiable part of a day trader's playbook, and a lack of knowledge could lead to significant losses. And firm-specific rules. While FINRA sets up regulatory minimums, individual brokerage firms are free to impose stricter rules, and traders must be aware of their broker's specific policies, as these can vary significantly. And the removal of the 25,000 PDT rule, it's really just a monumental step towards monetizing day trading for brokers so they can make more money. And it's a monumental step towards modernizing day trade regulations, making it more accessible for everybody. Okay, so God is good. It's an opportunity for you to come on the charts and make some money just by being disciplined. Make sure you get informed. Head over to Stackmode Network for all trading education. And this rule is going to make trading more accessible. Okay, it's going to bring more volume to the market. More people are going to start trading, inshallah. Okay, and it's also going to come with an increased amount of responsibility. With more power comes more responsibility. Okay, love you guys so much. Stay prayed for God. I'll catch you in the next one. Keep grinding. Peace. You cannot trade futures like a regular stock account. You're playing with leverage, and you gotta understand the deposit system. So think of the initial margin as the VIP cover charge. It's the specific amount of cash you need to get past and open the trade. But once you're inside, the rules change completely, and that's where maintenance margin kicks in. And this is your lifeline, and it's your health bar. The second your account equity dips below this specific number, the broker doesn't ask nicely or care. They're going to forcibly close your position to stop them from losing money, and then you're going to be left with nothing. Or sometimes your account could go past your stop loss or liquidation amount, and your account could go into the negatives, making you owe money to the broker. So I'm going to show you how to calculate what margin is and understand. Let's head over to it, inshallah. All right, let's go and let's talk about futures trading margin, okay? The deposit system of trading. So what is margin? So margin is not a fee. It's pretty much a good faith deposit. So say for instance, when you're signing up for a credit card, Okay, sometimes the credit card company might ask for an initial deposit of like $100, but then the credit card would give you $500 worth of credit to spend. Futures works very similarly. So here's an analogy. So, or you could say you wanted to rent a super expensive console. Okay, you could put down a deposit to prove that you won't break it, and if you return it safe, okay, then you get the deposit back and you get to use the console. Okay, so futures is pretty much like a trading loan almost, but depends if you're using it for day or overnight trading. Okay, there's going to be two different costs. So if you want to hold the console overnight, it's going to be a different cost than it is for just using the console during the day. And futures contracts are huge. Okay, you don't need the full amount to use it during the day, but you're going to have to cough up more money if you want to use the console overnight. Okay, so let's learn the difference between the money you need to start initially and the money that you need to use futures contracts overnight. Let's jump into it. So let's talk about the power of leverage. So controlling big things with small amounts of money. So leverage allows you to control a massive contract value with small account balance. Okay, and the magic multiplier in it. Okay, so imagine having $1,000 but being able to buy $20,000 worth of Bitcoin futures. Okay, in that instance, the math would be a 20x leverage. Okay, and the catch. So it makes wins bigger, but it also makes losses happen quicker. So it's like driving a race car that goes super duper fast, okay? But if you crash, then it'll hurt way more than crashing like a bicycle, for example, okay? Because a bicycle, you're on it, you're going pretty slow, okay? But if you're driving super duper fast in like a SRT and you crash, then that could put your life at risk, okay? Just because the amount of speed and power that you're controlling, okay? So futures, yes, you can turn up an account, turn $50 and $10,000 to $10,000 or etc. Okay, whether you're trading crypto futures, normal futures, or whatever. Okay, but you can also quickly lose that $10,000 by making the wrong decisions. Okay, so leverage gives you a lot of power to turn up your account, but you can also turn down your account just as quickly if you're not disciplined. So initial margin, it's going to be really, really important. It's the minimum amount of cash that you must have in your account to open a new trade. Okay, so the math involved into it. It's usually a percentage of the total contract value. Okay, for example, like 5% or 10%. Okay, so if you have $4,000 in your account, but the initial margin is $5,000, okay, it wouldn't even let you trade. Okay, it would say access denied, and the trade would not be able to be entered down. Okay, but if you have $1,000 in your account, but the initial margin is 500, you would be able to open up a trade. But here's the catch. Okay, if your account goes beneath that $500, your account would be what's called liquidated. Okay, and when your account gets liquidated, then they take the remainder amount that's underneath the $500 and put your account to zero. And the dangerous part about it is that if price decides to clip past your stop loss or clip past underneath your initial margin value, okay, if you go underneath the initial margin value, your account could potentially go into negatives, okay, then you'll owe the broker money, etc. Okay, and they'll definitely be wanting that back, whether through suing you or whatever. Okay, so decide here, okay, what the initial margin is, and try to make sure your account has more value than that. Okay, you do not want to get liquidated for no reason. It's just a loss of currency, pretty much for no reason. Okay, it's happened to me, okay, when I wasn't too sure what margin was when I first started trading futures. So it's not something I want you guys to go through. So the maintenance margin, okay, keep your account alive at a certain level. So the definition of maintenance margin, okay, it's the minimum amount of equity that you must maintain to keep the trade open after it starts. Okay, and lower limit, okay, this number is usually lower than the initial margin. Okay, and daily fluctuations. So as your trade loses money, your account balance drops. Okay, and you still must stay above this line. Okay, so keep in mind, even while you are in a trade, your account balance will fluctuate, and it still matters. If your account fluctuates underneath a certain amount that whatever you're trading requires, then your account will be liquidated. Okay, let's say you're trading the NASDAQ, okay, the NQ futures, okay, on Trader of 8 as of 2025. The day margin, I believe, is $1,000, okay? So if you're in a trade, okay, and your account goes underneath $1,000, then your account has a potential chance to be liquidated, okay? And they would just take all the money underneath that, okay? And your account would be at zero, okay? You do not want that to happen. So futures, it's a lot of power in it, but you can also destroy your account just as quickly. So I really will show you how disciplined you are, okay? So keep your account above the margin amount, and also know that margin amounts can fluctuate too. So a lot of people, I'm not too sure, know this. So margin amounts fluctuate, especially on news dates. So dates like CPI, PPI, Consumer Price Index, certain rates. So you can check all the news out on sites like Forex Factory and stuff like that. But a lot of the times, and on certain brokers, margin can change. Overnight margin can change, especially depending on if there's news or not. Okay, so keep heed of that. Okay, pay attention to the margin at all times. I do not want you guys to get liquidated and lose money for no reason. Okay, we got too many things to hold down, too much business to handle. Okay, keep on top of your numbers. Let's head over to the next slide. So again, margin called, okay? So when your account's on low fuel, it's on E, okay? And if your account balance falls below the maintenance margin level, it's gone, okay? They will take every dollar in your account, and it hurts. You do not want that to happen, because it's not even like you lost the trade and then you blew up your account. No, you didn't have your account at the certain threshold, and they took the rest of your dollars. But rightfully so, though. If you break the agreement, they'll take the rest of the money, okay? If you agree to have $50 in your account in order to trade a micro contract, okay, and your account goes to $48, they're taking that, okay? And your account's going right to zero or into the negatives. So keep heed, okay? And the demand, the broker will demand you to pay or deposit more money immediately to bring the balance back up, because you lied to them. Okay, you broke the broker's heart. The broker was like, wow, okay? And there's plenty of times, okay? Once again, I broke the broker's heart, okay? I got liquidated a few times, especially very, very early in my futures career, okay? Didn't really understand margin, didn't understand overnight margin, especially tried to hold overnight, okay? And then through that, I learned, okay? And I'm grateful I get to come on here and let you guys know, okay? Because you do not want to get liquidated. And if you don't add the money instantly, the broker will forcibly close your account, close the trade, and really want their money back, okay? So for example, if you borrowed a bike, okay, or if someone loaned you your car, okay, let's say you had a rental car, okay, and you said, all right, I'm gonna go ahead and give you $500 in order to drive the rental car, but you can't let the gas go below a quarter, otherwise the car will literally blow up, okay? Let's say you're driving the car, you're having a nice time. The gas is at like 2 quarters. You're not tripping, you know. You're still having a lax day. You're vibing out, okay? The car's at a quarter, okay? You're still vibing out. You're chill. You forget, okay? You're not on top of your business, okay? And then boom, you look at it. Account car underneath a quarter, and then it blows up, okay? So I've blown up my account by looking at the trade profit numbers instead of looking at the actual margin numbers, okay? A couple of times. So don't let that happen. Don't get too lost up in the charts, especially when your account's already on its last legs. Just, it's all right. Pray on it. Boss up, hustle up some new money on, okay? And put it back into your account, and then you guys can run it back up again. Don't try to trade on a quarter, okay? Don't drive the car on a quarter. Don't do it. It'll blow up, okay? If you know the margin amount is $600, don't try to trade with $670, trying to trade with the little $50 stop loss, because you're not taking things into account when you do that. You got to pay broker fees, and then there's going to be slippage on your stop loss, etc. A lot of other things that come into account while you're trying to micromanage every single number, trading out of desperation and survival mode. It'll really come bite you in the back. Okay, don't do that. I'm telling you, it's a lot of things that you might not realize. Okay, trading, hustle up, okay, boss up a bit, and then come on the charts. Okay, there's plenty of times I've had to take a step back. Okay, get right with God, get right with myself. Okay, have a new perspective on the charts, and came back way stronger. Okay, whether if I didn't like my results, or plenty of times where I was really, really happy with the money I was making in the market, and I had to just control myself. Okay, because I know what I did in the past. Okay, I would make a bunch of money from the market and then just blow it all up. Okay, so plenty of times in the market where I've had to make some good money from the market and pause, especially trading futures. Okay, I would hit like some really nasty trades and just pause. Okay, just watch the market for a couple of weeks, for a couple of days, and just being really patient on the charts with yourself and in life. It's really gonna help you. Okay, so even if you make a bunch of money from trading, don't feel bad if you want to just take a couple of days away from the charts. Okay, or if you want to just take a couple of weeks to just study the charts, see how price action moves, hold on to that money, reinvest that money, that's going to be fine. Okay, you're not in a race with nobody, you're not in no competition with nobody, you're in your bag. Okay, get in stack mode, stay down, okay, and figure out what works for you guys. Okay, once you start getting your criteria down as far as your entry criteria, things get a lot easier. But one thing you do not want to do is trade out of desperation. Okay, because if you do that, or try and trade when your account's on its last legs, when it comes to futures, options, everything else, you can kind of do that. You can throw in like your last bit of money, and especially on options, since the profit potential is unlimited and your account could potentially flip. But futures, do not play with your account like that, because then you're going to end up losing more money in the long run, paying off margin call fees. Okay, and I do not want that for you guys, inshallah. So let's head over to the next slide. So initial versus maintenance. Okay, here's a side-by-side comparison. So initial margin, okay, it's going to be at the very start. Okay, it's going to be the entry. Okay, and it's pretty much just going to be telling the broker, like, yeah, you know what, I have the money in order to be in this trade right now. Okay, so always keep extra money in your account. Never trade right at the limit. Okay, or a small win will blow your house down. Just please do not do that. Okay, don't do that. And then maintenance margin is going to be during the trade. Okay, so that's going to go ahead and be it. So some key takeaways. Okay, leverage. Okay, it's going to be really powerful, but can also be dangerous if you are not disciplined. Okay, do not lead with your flesh. Okay, pray to God for discipline and stay focused. Even when you start touching that good money, stay focused. Okay, and the initial margin is going to be your entry ticket. Okay, and the maintenance margin is your survival line. Okay, and liquidation, it happens when you run out of money. Okay, and you don't meet the maintenance margin. Okay, if they tell you, yo, we need $500 in order for you to have this trade open, and they don't care if you're in a trade, if your account goes underneath that $500, goodbye. Okay, you're not allowed to trade with this right now, and you owe us some money. Okay, so it's like that. Futures is very ruthless, very hardcore. The most hardcore instrument, futures, is the discipline instrument in itself. Okay, shares, you can get rich by not looking at the charts. Plenty of millionaires created by people who just hold stocks. Plenty of millionaires by people who just hold cryptocurrency. But I don't believe there's any futures millionaires by anyone who doesn't look at the charts. Okay, it's not something you can just throw a bunch of money into and try and just make a bag. No, futures is very, very different. You have to know rules, have to play very intricately, and you have to just really just change yourself completely as a person. Okay, so stay safe, trade smart, and head over to Stackmode.net for all trading education. Stay prayerful to God and keep grinding. Peace. The strong reasons why market's going to be going in upwards directions is due to the fact that these stocks help the United States economy. That's going to be the strongest reasons, and there's a reason why the billionaires within the trading community are people who play United States stocks companies, whether owning shares and options, such as Warren Buffett, etc. Because it's going to be honestly the easiest market to play. Forex market is very sideways. Futures you can't hold overnight unless you have a certain amount of margin. So the United States stock market and even cryptocurrency is going to be great realms to just buy and hold your money. Okay, so let's go ahead and continue the lesson here. So these stocks aren't just random stocks listed on TradingView or these brokers so people to just make invisible money. These stocks are real companies that people actually work at, okay, that we might have worked at in real life, okay, and they generate real income. So since they generate real income, they can also employ people. So they can employ people. And when they employ people, these people pay taxes to who? The government. Okay, so as long as these companies are making money, okay, and people are working at these companies, then the government will continue to make more money. So these companies being profitable, these companies doing well, these companies making money, they help out the government. And anything that helps out the United States government will be pushed. Okay, that's just what we know about trading and just fundamentals of things. Okay, if it helps the government, it's going to be pushed. Okay, there's a reason why cryptocurrency didn't get a big push until SEC laws and stuff like that were regulated. Okay, so until the government regulates it, and unless the government has something to do with it, it's not going to have too much value until then. But every single one of these stocks boost the economy since they put jobs out for people. Jobs include people who pay taxes. Taxes go to the government, making the United States more wealthy. Wealthier we are, more power we have over other countries. Okay, so it all starts from just simple things like wealth. So options and the fact that these shares and stocks go up in an upwards direction is really important. Okay, it's way more important than people even think. Okay, so market's not just, oh, I'm going to come on here and just make some money. Okay, it's real life stuff happening on these charts, and really understanding everything is going to help us understand what we're going to be trading for. So market's going in an upwards direction. So this is why we're going to be focusing on call options. Okay, so as we know, call options, they pay you whenever you think price is going to go in an upwards direction. Okay, if you speculate and you're buying a call option and you think price is going to go in an upwards direction and you're correct, then you get paid. Okay, so that's going to be a call option. And the reason why we're going to be focusing on call options is exactly what I just broke down. These stocks have incentives to go up. There's also going to be laws such as the short sale restriction that are going to be in place too to make sure that these stocks don't just fall flat down to zero. Okay, there's a reason why decades of these stocks of going in an upwards direction has been a thing. Okay, so it's about letting go of all the fear, trusting God, not having any weird anxiety of, oh, what if it just falls down to zero and it's time to start just investing and being a boss. Okay, so we're going to be talking about the proper levels to play at. Okay, and we're going to keep talking about why we're playing at these levels and what we're buying. Okay, I always want you guys to understand why. I never want you to just be like, okay, just do X, Y, and Z and just do this. It's going to work. No, I want you to understand the deep reasoning why this works, why people are billionaires buying just shares and call options. Okay, so it's about finding things that are undervalued and catching the sweep up. Okay, every company wants its share price to go down. It doesn't make sense to really play puts due to the fact that market is not built to go down. Exactly. And even when market does go down, exactly. Even when market does go down, people are quick to buy the dip. People are quick to buy the dip, and market will recover right back to wherever it dipped from heavily. It'll fill it right back up. All it is just a discount. All it is just like clothes and cologne and whatever. It's just going on sale. That's all it is. Market just goes on sale whenever it falls down. So puts don't really make sense to purchase, especially when you get on your higher time frames, especially when you're playing companies that have good revenue and actually make money and the share price increases year after year.
playing puts, not only are you going to have significantly shorter trades, your take profits aren't going to be as easy to put down because one, you can't predict where the market's going to bounce at. Okay. So you can't predict where the market wants to stop at all the time. Now, shorting and stuff like that comes really from Forex traders and is something that's seeped over to the stock market. But the Forex chart and the stock market chart is completely two different worlds. Okay, stock market just goes up in an upwards direction. Okay, and that's just the truth of it. Okay, if I pull up the Forex chart here, Forex is extremely sideways. Okay, you have price action all the way up here. We got price action all the way from here from 1977. We got all types of stuff going on. Okay, but if I click on the fluffy stock market, it's literally going up in a straight line. Okay, it's almost impossible to not make money in the stock market. This is why I'm so passionate about teaching in these videos. I'm starting to realize that they've literally made it to where we can just get money for free. It's welfare. It's genuine welfare. Instead of making stupid decisions, trying to flex for people who don't care about us, trying to make decisions that are just way too fancy right now instead of staying down and investing. Okay, those are the things that keep people back from being financially free significantly early. The opportunity is here for us to just invest money and infinitely turn your money into more money. This just goes up in a straight line. It's impossible for anyone to not make money on the United States stock market. It's impossible. Okay, and it's about just making really good decisions. So price has an incentive to go up. So forget put options. We're focusing on calls. Okay, we don't want to be shorting the stock market. There's a reason why you can't even short the stock market on a lot of brokers too. You also have to think about that from a logical perspective. Most people on most brokers cannot short with shares. Okay, they can't short with shares. They can only purchase shares. So everyone's trying to just buy the stock. Also, CEOs are trying to be richer than the next CEO. So they want their company's share value to be going in an upward direction. They want to be classified as a billionaire. So also more incentivization to go in an upwards direction. And there's also something called dividends. Dividends are going to be what the stock pays out. So the more you invest into a stock, if a stock is making good income, it'll pay out what's called a dividend. And that's going to be money that it pays out back to the shareholders. Okay, so it's like, you know what? Thank you guys for investing in us. Here's some money back. Okay, here's your reward. And that's what it's going to go ahead and say. Okay, so if a company has enough money to do that, that means that it's profitable. If it's profitable, it's most likely going up on the stock market. Okay, so there's incentive for it. The more profitable something is, the more it's going up on the stock market. Hence why when a company makes a big deal, it just shoots up. Okay, because it's now more valuable. Okay, the more money and the more valuable something is, the more of a high share price it'll have on the stock market. Okay. So, cool. That's keeping those things in mind. So now let's talk about when a setup is going to be good to play and when not. Okay. So let's say, for instance, here, I have this area up here. Okay. One area that we're not going to play at is going to be called all-time highs. Okay. We're just not going to be playing at all-time highs because, one, we're trying to catch a sweep up. Okay. So all of your setups will look like a V. Every single setup will look like a V. Okay. And what your profit is going to consist of is the right side of the V. Okay. So the left side of the V is going to be the resistance. Okay. This is where price is falling in a downwards direction. So you can see here, you could see price creating resistance here. Okay. This is the left side of the V. Price is falling down. Okay. The left side of the V. What we're looking for is playing the right side of the V. Okay. We're playing the right side of the V. All of your trades are going to be the right side of the V. Okay. You're going to be buying call options, expecting price to sweep up. Okay. That's what you're going to be looking for. So how can you play the right side of the V if price is falling the left side at all-time highs? You can't. Okay. So let me show you a good example of an actual good setup. So this is how we find a setup. What I'm going to be looking for is a couple of things. One, I'm going to be looking for higher time frame areas. So I'm going to make sure that I'm on my higher time frames. I'm going to make sure I'm on my weekly time frame first. My weekly time frame is going to help me see everything. It's going to be my eyes. I'll go from my weekly time frame to my daily time frame to my 4-hour time frame. Okay, so you're going to start off on the weekly time frame first, due to the fact that the weekly time frame is going to help you, once again, see everything. It's going to be like an eagle eye, okay, because tunnel visioning when it comes to trading can be extremely bad. Okay, you want to be able to see the full picture and not just what you're seeing on a smaller time frame. You're then going to go to the daily just to see the picture painted a little bit in more detail, and then you're going to go to the 4-hour to see any hidden candles. So what we're going to make sure is that whenever you're on your 4-hour time frame, and this is why we can't just use the daily and the weekly, we have to make sure our extended trading hours is on. So as you can see, the daily and the weekly don't have that. That's due to the fact that they don't show pre-market hours because the weekly and the daily go off of 24-hour blocks. So that's why we still need our 4-hour time frame. And then we're going to be able to turn on extended trading hours to see all the true candlesticks that we're missing. Okay, so extended trading hours always needs to be on. So we're going to go from the weekly to our daily to the 4-hour. So let's go ahead and let's mark out a setup, for example. Okay, I'm going to talk about what I'm going to be looking for, and then I'm going to jump onto the charts. So my setup is only going to consist of 2 things. I'm only going to play setup 1, which is going to be a support mirror. Okay, if you see price bouncing at an area of support, you're going to be good to go ahead and purchase there. Okay, if you see price bouncing at an area of support, reacting from another area of support, okay, that's going to be a good area to purchase. Support is going to signify an area of demand where people want to buy the price. So it's going to indicate where buyers step in. Okay, so buyers step in an area of support. And we're buying call options, meaning we get paid when price goes in an upwards direction. Okay, so we want to be buying at areas of support. Okay, so if you see an area of support mirror itself one after another, that's going to be a good setup. Or it'll look like this. Sometimes you'll have an area of support. Price might run down through it. Okay, it might not bounce at the other area of support. It might break below it. But then it might come back up and bounce at the support again. Okay, even this would be considered a support mirror. Okay, so even if price runs down underneath the first area of support, if price decides to bounce at the area of support again, that's a clean support mirror, I like to call it. Okay, so you'll either see one area of support bounce right after another, or you'll see an area of support mirroring an area of support from the past that maybe didn't get reacted off of immediately. Okay, so your setup will either look like this, or it'll look like this for criteria number 1. And criteria number 2, very simple. It's when an area of resistance gets broken, and an area of resistance is going to indicate where sellers are. So resistance indicates where sellers are due to the fact that people have too much supply. So that's why resistance gets created in the first place. There's too much supply. When people have too much of something, when they've made too much money, they're like, all right, you know what? It's time to close. I'm out. Okay. And then they're going to go ahead and close their trade simultaneously. And a wave of enough people doing that is going to create what's called resistance. Okay. That's going to create resistance. So let's continue on here. So if an area of resistance decides to get broken past, okay, if an area of resistance or support gets broken past, we know that's called a breakout. So resistance getting broken past and turned into support is going to be called break and retest. Okay, break and retest. Okay, waiting for resistance to turn into support after it's been broken. So it's when you're waiting for the resistance to turn into support after it's been broken. Okay, if you see this, you can take the trade pretty much safely. Okay, we're going to talk about some certain criteria, how to read daily closes, etc., what a close is. But let's talk about some more fundamentals we are going to be looking at. It's important to have a logical mechanical process before we put down any type of size or money. Okay, did price do this? Did price do that? Having a large checklist is going to save us a lot of money when it comes to making any type of mistakes on the market. Okay, so one thing we're going to pay attention here too is the earnings. Okay, whatever broker you're on will most likely tell you, but before you put down a trade on whatever stock you're looking at, make sure that you look at the earnings. The earnings are going to go ahead and let you know when the report is going to come out, and the stock can significantly make upwards or downward sweep when these earnings reports come out. So we want to be making sure that earnings aren't anywhere near. Okay, if earnings are 7 days or less away, and you're trying to don't open a new trade. If you're already in something, it's fine. But if you're trying to open a trade and earnings are 7 days or less away, don't do it. Okay, because the price action is already going to be weird, and people are going to be wary of the same thing. They're going to wait for earnings to happen first and then make the trade. Okay, so if you see earnings a week away, 7 days or less, don't take the trade. Okay, just don't take it. Now, if earnings is far, you're fine. So those are going to be the criterias we're going to be taking. Let's talk about it on the chart. So once again, we're always going to start off on the weekly time frame, doing what's called top-down analysis, TDA. T stands for top, D stands for down, A stands for analysis. Okay, top-down analysis, TDA. Okay, so what we're going to do is I like to always mark out, okay, where would I want to close this trade if I got in? Okay, I can see price made all-time highs up here. So let me just go ahead and draw a zone up here. Okay, and I like to just eyeball. Okay, we don't use any indicators. We're not going to need any indicators. What we're going to do is pay attention to straight candlestick price action. Just like I told you, price should be doing the right side of the V fill. Okay, so we can see price decided to fall in a downwards direction here. Okay, this is going to be the left side of the V. Okay, and what we're doing is catching the right side of the V. Okay, we're going to be catching the right side of the V. So let price form the left side of the V, and then we're going to get in and catch the right side of the V. Okay, so you can see price maybe potentially trying to make a low right here. Okay, potentially trying to make a low right here. Let me go to my daily. Okay, I can still see price making a low right here. Okay, I can see, okay, I'm on my daily time frame. So I'm going to get on my weekly, put an area of resistance, put a zone around it. Okay, because I know, one, price has an invitation to go in an upwards direction. Okay, it helps the government, helps the economy. It's trying to go and be the most profitable and helpful company. Okay, it's a lot of recognition, and as human beings, we care about things like that. Okay, so recognition will be coming with being the most profitable and best company. So in order for that to be credible, share price has to be decent. People have to be investing into it. So let's increase the share price. Okay, that's what people are hoping for. So let's drop better products so people buy from us. That is what people are really hoping for who are behind these companies. So let's think like them. Okay, so you can see price deciding to make a bottom here. Okay, so then I'm going to start on my weekly. Okay, I can see just this large gap of space here between here and up here. So here I have the left side of the V. Okay, I have the left side of the V. Price already created it for me. And then price already drew out the bottom point. Okay, So now I'm gonna go to my daily here. I can see price drew out the bottom point for me here. Okay. Now we can see price potentially wanting to fill up the V. Okay. So what we're going to be doing is catching the whole right side of the V. Okay. So we can see price made the left side of the V already for us. Okay. We can see it. It made it left side of the V. Now, price made a low already. I can see on my daily candlestick, and this is what I'm going to be looking for. Okay. No indicators, no nothing. If I'm on my daily and I see price bouncing from a low, okay, with a large gap of area from an area of resistance, and I see price making multiple daily candlesticks go up in a multiple color stick direction. So I can see here green candlestick, green candlestick, green candlestick. I see multiple green candlesticks in a row. Okay, multiple green candlesticks in a row, just like we have multiple red candlesticks in a row going down. If I have multiple green candlesticks in a row going in an upwards direction, and I see a large area looking to be filled in to fill in the right side of the V, okay, even if price falls down at the resistance and goes down to all the way down there, we don't care, okay, because we can clearly see that price wants to try this area of resistance again. It's like, hold on, how am I going to fall down right here? I'm not with that. Let me try it again, okay, and it's going to try it again. And when it goes to try it again, that's going to be our profit window. That's our opportunity. We're not here to get the best entries in the world. We're not here to predict the most high point of the market, the most bottom point of the market. We're here to react. We're here to come onto the market, scroll down, see, oh, market made a low right here, and it make it high. It looks like it wants to try this high again. Okay, it might want to break this area. And that's what you do, is you react within the market. Okay, and this is going to be the trick on options. So option sellers, right? Before we jump into the trick and why we're going to do what we do, let's talk about it. So option sellers, what they're preying on is that people make some ridiculous gambling dice decision, okay? They want people to make some just fried, horrific decision. So options aren't just spawning out of thin air. There's a reason why certain stocks don't have any options attached to them. Because one, nobody is selling the options in the first place, okay? So options are not just spawning out of thin air. It's called trading for a reason. Once again, it's called trading for a reason. Okay, contracts have to come from somewhere, and they come from people turning their 100 shares into a contract and then selling it. Okay, and what they're trying to make money from is that we don't win. Okay, they're trying to make money hoping that we're wrong. Okay, but we're trying to make money hoping that we're right as options buyers. Okay, so here is how, as an option buyer, how we can make some good profit, right? Let's talk about it. So as an options profit buyer, okay, of course we want to make some profit and some money by being in the right direction of the trade, okay? So obviously we're buying calls, so we want market to go in a upwards direction, okay? So in order to outplay the option sellers, we're just going to play not ridiculous bets. So you can see we just did all that criteria to determine if price was ready or not. We looked at another trade and saw it was at all-time highs. We would not buy because that's the left side of the V. We're looking to only purchase the right side of the V, which looks like it wants to be filled up here. Okay, let's catch the rest of the candlesticks and farm the rest. So what I'm going to do is come up here to the T. Okay, and I'm going to be able to see the options list. Okay, so the furthest to the left here would be the closest, and the more right I go will be the furthest. So what I'm going to be focusing on is called an options leap. The reason why people say options are so risky and etc. is because they're just not playing it right. Everything in the world is risky. Okay, you're driving on the road every day is risky. So we're not going to be scared. We're going to be smart. So options leaps. Okay, this is what we're going to be focusing on. Leaps is a contract that I say you hold between 3 months to 2 years. Okay. Any contract that you hold between 3 months to 2 years is a leap contract. Okay. So let's say this contract here, right? Let's say I bought this. Let's say I analyze this area of support, right? Let's say I'm like, yeah, price make the bottom of the V here. Okay. Just like a V, you know, a V has a point. Okay. Let's say I like the bottom V here. let's say I want to go ahead and catch the right side of the V, right? Let's say I believe in this. Okay, I'm like, you know what? I'm on my daily time frame here. I can clearly see market's been trending in an upwards direction for quite some time. Okay. You can clearly see we're just sweeping up year after year after year. You know what? This is a profitable stock. Oh, okay. Cool. We're beating earnings, beating earnings, beating earnings, beating earnings. I like that. We're paying out dividends to people. Okay. I like that. This is going to be a comfortable play. So I would go ahead and purchase a contract that makes sense. Okay. So this is going to be some sauce right here. So I'm going to buy at least a year out if I wanted to. Okay. So I would buy for a year out, okay? Or I could buy 2 years out to be even safer, okay? So let's say I want to buy 2 years out. This is how you know what's going to be the best contract to buy, okay? So what a lot of options people get destroyed on is the theta, okay? And what theta is a Greek, okay? So options has Greeks. We have delta, theta, and gamma, okay? Theta is going to be the Greek that equivalates to time. Okay, so whenever you think of time, think of theta. Okay, so once again, whenever you think of time, think of theta. So in order to outplay the theta, we need to make sure that we have plenty of time on our contract so the theta and the Greeks don't destroy our mental patience, okay, and make us want to crash out. Okay, so instead of worrying about, oh man, I gotta close my trade in 2 seconds. Like I gotta close my trade in a week. Nah, you have years on it to hold. Okay. And you can see price is already bouncing in an upwards direction. So what you're gonna do is whatever the current number is of your options contract, okay, whatever the current number is, and your options broker, wherever you're on, will always tell you. Okay, it'll always tell you, it'll be in the middle of whatever options chart that you're looking at. Okay, the best contract to purchase at all times, okay, is going to be the contract one number above, okay, we're going to purchase the contract one number above the current price. Okay, so if current price is at 26.20, right, what we're going to go ahead and do is purchase the 27 contract. Okay, that's all we're going to focus on since we're buying a call contract. Okay, because we only want to buy in an upwards direction. Okay, just like we broke down, there's reasons why stocks wants to go in an upwards direction and why they go up year after year after year. Okay, and why people get rich by just turning their money into more money by investing into companies that put the money in the government's pocket. So you can get rich by investing in companies by put money in the government's pocket. Inshallah, if God wills. So we're going to go ahead and focus on the call side, since that's the side that pays us whenever options are going in an upwards direction. Okay, so we're then going to focus on the current price. Okay, so let's say current price of this stock is 26.20. Okay, we just did all of our verification. Is price ready on the right side of the V? Okay, if price is ready on the right side of the V and already made a bottom point, we're ready to go ahead and purchase that. We're going to go to our options. We're going to make sure that we're buying at least 3 months to 2 years out, depending on how far your take profit is. Okay, my take profit here, let's say I did on the weekly, I think this gap is pretty big. So just to be safe though, don't be cheap. Okay, be safe. Okay, being safe is what's going to get you wealthy within trading. Okay, focus on the trades that aren't going to lose you money. Okay, people want to trade zero DTEs, trying to make some money feeding for bread, but they end up blowing up their account over and over and over again, not making anything or making some money and then losing it all. Okay, because it's not safe, it's not consistent. So play options in a safe way, buy 2 years out and buy the number one above current price when it's already trending in a positive direction. So this way, you're going to get your bonus points too. So this is why we use our higher time frames for options too, because we want to be catching the whole move. Okay, so we're buying years out and catching the whole move. So the higher time frames is going to show us the whole move here. So I can see I would personally close at the area of resistance. Okay, you always want to fill in the V structure. This is why the V structure is important. Okay, price will make the left side, you catch the right side. Okay, and you fill in the V structure. Wherever the V started at,
slanting to the downside is where you close at. Okay. So it's going to be where you close at. So price started resistance here, fell down, made a bottom point. I'm going to keep my profit window is going to be the remainder of the V. Okay. The remainder of the right side of the V. Even if price was up here, okay, I would still be able to catch the remainder of the V up here. Okay, the earlier entry that you see is just the more money you're gonna get. But even if you enter later, that means that you have a higher probability of being right. Okay, and we're here to play safe. Okay, you want to focus on the trades where you're not gonna lose. Okay, you don't know if price wants to bounce down here, but once price has showed you that it wanted to bounce down there, it's a lot easier to get in and make your decisions based off of that. Okay. So let the market react for you. You don't have to predict, just react to the market. Okay, react. Okay, market decided to make a heavy area of resistance here, close at the heavy area of resistance here so we don't get reversed on here again. Okay, we don't know if price wants to reverse right here. Okay, it might not or it might want to. All we know is that price wants to go and give it another whirl, it looks like. Okay, and we're just going to take advantage of that and be happy with that profit. Don't ever try and 50-50 the breakout, okay? Your take profit will always consist of an area of resistance above current price, or it'll be an area of support above current price sometimes, okay? Sometimes your setup's gonna look like this. You're catching the right side of the V, and you're closing at the area of support. And that's because, just like the opposite, resistance can be broken, turn into support. Support can be broken and potentially turn into resistance. Okay. So we want to keep that in mind and trade safely. Yeah, it's really just taking your time and just letting the market react and do its thing. Okay. So these are going to be the two things we're going to be looking at. Okay, close at areas of resistance above current price, which a lot of the time it'll be, or support above current price, since resistance can be formed there and you want to get in before market falls down. Since we're focusing on calls, we want to get paid whenever market goes in an upwards direction. Okay, so we don't want market to fall down. Okay, so keeping all of this in mind, catching the right side of the V, we know what contract we want to purchase. Okay, I'm gonna go 2 years out. Okay, I'm gonna look at current price. And even though my take profit up here is 29, I'm still gonna look at current price and buy the contract one above. I'm still gonna buy the 27 calls contract. The reason I'm not gonna buy the 29 calls contract is because options, once again, you get paid based off of predictions. So even though our chart closing is gonna be at 29, we're going to buy the 27 contract because all the profit we get is going to be bonus points. Okay, 27 is the number before 29. So even if we bought 28, you would get bonus points too. So any number of a contract that you buy before your take profit will be bonus points. So it makes sense to buy the number one above. So even if take profit was 35, I would still buy 27 just because 27 is before 35. And I would get all the bonus points. I would get, and the more points that you go, so if I bought at 27 and I closed at 35, it would get bonus points per number. So it would be bonus points at 28, at 29, at 30, at 31, 32, 33, because I'm so right. Because I'm right way before. Right? So because I'm so right, it just pays you out stupid amounts. And that's how people just do nasty flips. And I've done some nasty flips on option myself. Okay. So let's talk about another setup here, okay? So you're always going to want to be looking for a price to be forming at a low, okay? You want price to have made a low already, all right? And you want price to have made a high too, okay? So in this instance here, market's still looking for its low, okay? It hasn't quite made its low. It tried right here. And this is why I like to look at the daily here and wait for multiple candlesticks going in a green upwards direction. Okay, so you can see here, we wouldn't have gotten faked out by that. Okay, so this right here, say this low that people tried to buy, this is why we don't buy what's called falling knives. Okay, you don't know where market wants to bounce at. Okay, you can have a good idea of it,
especially when it comes to the upside. Okay. And you don't know if market wants to break out. So if market creates resistance here, I'm going to close at this resistance. I'm not going to say, oh, market's not going to fall down there again. No, I'm just going to close at the resistance. Okay. It's a lot easier to play like this and play to the upside than it is to catch ultimate bottoms. Okay. Just wait for the bottom to form and then play to the upside that's already been formed. It's a lot easier. Okay. So instead of trying to catch every single bottom and then price keeps falling and then you're losing money catching a falling knife, wait for the bottom to form. Okay. Until I'm on the daily time frame and I start seeing green candlesticks going the upwards direction, I'm good. Okay. I want to see multiple green candlesticks in a row before I take any type of trade. Okay. So take some type of low like this, right? If I see price make a low and I see multiple green daily candlesticks in a row going up, I'm like, oh yeah, price wants to do that. But I can clearly see here, like an area like this, price just faked them out here, okay? Price tried to go up, but it's red, okay? Red candlesticks, and they're very sideways, and then market just dumped, okay? But then we have a low right here. Green heavy candlestick. I'm sure this candlestick was green too before the close. And then green candlestick, okay? Super heavy low right here. Green candlestick, green candlestick, green candlestick, okay? Even right here. Green candlestick, green candlestick, green candlestick, right here. Okay, same thing. Green, 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 green in a row. So if you're not seeing at least a couple of green candlesticks going in an upwards direction on the daily, then that low just isn't true. Okay, the low is just, it's pointless. Okay, it's what you want to be looking for. Look at this low here. Okay, this low worked out, it formed, and then we started seeing green daily candlestick. See, I would have entered on the second one. I never enter on the first one in the zone because I don't know if price really wants to bounce there. But if I see another green candlestick and then another green candlestick, I'm like, oh yeah, that's cool. But price, it was pretty much close to the area of resistance here, and then we'll see if price wants to continue from here. Okay. So price decided to fill in this area of resistance right here. Okay, we have this area of resistance right here, and then price falling down right here in this zone. Okay. And then one day price will try and break this area potentially. And then we'll try and go up to this area of resistance, I assume, up here. Okay. So could wait for price to find another V and then take the whole side upwards like that. Okay. But right now, it's just not ready. Okay. Market is dumping on this. And it gotcha. So here, gotcha. So if I bought right here, I will close my first contract here. Just because price keeps spamming this resistance. Okay, I would close, close the first contract here. And then if I have more, then I'll go ahead and I'll close the next one up here. And this is why I buy years out though. But even if I,
Class, let's go and let's jump straight into it. Today we're going to be talking about mastering financial analysis, and this is going to be the beginner's guide. So what is a financial statement analysis? Financial statement analysis is going to be the process of reviewing and evaluating a company's past and present financial reports, the three statements to make better economic decisions, and then it involves calculating key ratios and comparing data over time against competitors. So we want to be making sure we know how to read how much is a company making, does it have a lot of debt, and are we going to be able to profit off the company due to the fact that A, they're putting a smile on people's faces and it's a profitable company which is going to affect the future, and is it a company that's hiring people and nonstop making profit? Okay, because that's going to let us know that the share price has an incentive to increase. So it's going to be a comprehensive course on analyzing a company's financial health. Let's understand that the financial statements are going to be the bedrock of intelligent investing, effective management, and sound business decisions. Whether you're an aspiring investor, a business student, or a founder, these skills are going to be fundamental and imperative. So let's take a look at past performance. So you got to look at past performance to identify trends, growth rates, and recurring issues with the company. And comparative analysis. benchmarking the company against its closest competitors, peer group, or industry averages. Okay, see how it's faring up. If it's a tech company, see how it's faring up against other tech companies. If it's a healthcare company, see how it's doing against other healthcare companies. Okay, and do it like that. And forecasting, using historical data and current trends to project future financial performance. So it allows us to answer certain critical questions about a business. Once again, how much money are they making? And are they in debt? It's pretty much going to be the two main questions that's going to let us know if something's going to be a good investment or not. So the income statement, profit and loss, and measuring performance. So the income statement is also known as the profit and loss statement, and it measures a company's financial performance over a specific period of time, for example, quarter or a year, and it shows how revenue is transformed into net income. And the core structure, a journey to profit. The statement is constructed like a ladder, and subsequently deducting expenses from revenue to arrive at different levels of profitability. And the revenue sales. Revenue is going to be the total amount of money that's generated from the sale of goods or services. And this is going to be the starting point. And the first thing we want to look at is the company making money in the first place. Let's check the cost of goods, COGS. The direct cost attributable to the production of goods or services sold. And this includes raw materials and direct labor. And gross profit. Gross profit is the revenue minus the cost of goods sold. And this metric shows a company's ability to manage its production cost. And operating expense, OPEX, the costs not directly tied to the production, and primarily selling, general, and administrative, SG&A, and research development. And operating income, this is earnings before interest and tax, and this represents the profit generated from the core business operations. And let's talk about net income. Net income is going to be the bottom line. And net income is going to be the operating income minus interest expense and taxes. And this is the profit available to shareholders. So the key income statements, ratios. How to analyze the P&L effectively, you got to use margins to see what percentage of the revenue remains at certain profit levels. And gross profit margin is calculated by dividing the gross profit by revenue. And a higher gross profit margin indicates better efficiency in production, which means they can go ahead and scale the business up while still bringing in profit. Okay. So the balance sheet, the accounting equation. So the balance sheet provides a snapshot of a company's assets, liabilities, and the owner's equity at a specific point in time. And it's based on the fundamental accounting equation, which must always hold true. So the foundation assets, okay? Assets equals liabilities plus equity, okay? So this equation dictates that everything a company owns, its assets, must have been financed either by debt or by owner's contributions, which is going to be the equity. So assets, they're going to be whatever the company owns. Assets are anything of economic value that can be used to produce goods or services. And current assets, they're expected to be converted to cash within 1 year. For example, cash, accounts receivable, and inventory. And non-current assets. Long-term items are not easily converted to cash. Property, plant, equipment, and intangible assets. And liabilities, they're going to be what the company owes. Liabilities represent the company's obligation to external parties. So current liabilities, obligations due within 1 year, for example, accounts payable and short-term debt. And non-current liabilities, obligations due beyond 1 year, for example, long-term bonds and deferred tax liabilities. And section 3, the shareholder's equity, okay, and that's the owner's claim. And equity is the residual claim on the assets after all liabilities have been paid off. And it includes common stock and retained earnings, which is cumulative net income minus the dividends paid. So that's how you get that equation too. And so let's talk about tracking real cash. The cash flow statement is often considered the most reliable statement because it bypasses non-cash entries like depreciation and crucials found in the P&L and balance sheet, and it shows the net change in a company's cash balance over a certain period of time. So the 3 core activities, OIF, the CFS is divided into 3 sections that explain where cash was generated or spent. So 1, the cash flow from operations, CFO. This section starts with net income from the P&L and adjusted for non-cash expenses and changes in working capital accounts. This tells you the actual cash generated by the company's normal business activities. So the key adjustment, adding back depreciation and amortization, which is pretty much going to break down expenses on the P&L, but do not involve an actual cash outflow. And working capital changes. Changes in accounts like inventory, accounts payable, and accounts receivable are adjusted here to reflect real cash movements. And cash flow from investing, CFI. This tracks cash used for investments in long-term assets or revenues from selling them. And the largest item here is usually capital expenditures, CapEx, which is the cash spent on maintaining or expanding PP&E. Okay, so interpreting CFI. So a negative CFI, right, which is going to be the cash outflow, is often a sign of a growing, healthy company that's investing heavily in its future by purchasing equipment or new facilities, looking to scale its business outcome and business income by putting all the profit back into the business pretty much. And a large positive CFI may indicate a company is selling off core assets, which can definitely be a red flag, okay? Which means they're going broke. So if a company's going broke, that's not a good sign. And it's a good sign that the stock might actually crash within a negative direction. So check a look for that. So turning data into insights. Ratios allow us to standardize financial data across companies of different sizes and asset-specific aspects of their health. Most notably liquidity, which is the short term, and solvency, which is the long term. And liquidity ratios, can we pay the bills? These ratios measure a company's ability to cover its short-term obligation using its short-term assets. Generally, a higher ratio is better, but industry context is crucial. So it's current ratio. The most common liquidity metric is it compares a company's total current assets, which is its cash, receivables, and inventory, against its current liabilities, which is its payables, short-term debt, etc. And the ratio below, let's say $1, is usually a 1 sign. And the current ratio is calculated by dividing current assets by current liabilities. So, quick ratio, the asset test ratio. A stricter test of liquidity, excluding inventory from current assets, as inventory can be slow to convert to cash. And this ratio focuses only on the most liquid assets. And the quick ratio is calculated by subtracting inventory from current assets, then dividing the result by current liabilities. So, solvency ratios, long-term survival. Solvency ratios gauge a company's ability to meet its long-term debt obligations, and whether it is financially sustainable. Excessive debt can cripple a business during economic downturns. So debt to equity ratios, DE. It compares the amount of debt financing to the amount of owner investing financing, and a high ratio indicates a company is highly leveraged. And the debt to equity ratio is going to be calculated by dividing total liabilities by the total shareholder equity. Let's talk about the interest cover ratio. It measures the company's ability to cover its interest payments using its operated earnings, the EBIT, and the interest coverage is calculated by dividing EBIT by interest expense. And a ratio of $1.5, for example, or higher is generally considered safe, but the higher is going to be better. So putting it all together, let's talk beyond the numbers. While the financial statements provide the objective data, a world-class analyst always incorporates qualitative analysis to provide context and foresight. And let's talk about the qualitative factors, the moat. These are non-numerical factors that determine the longevity and strength of a company's competitive advantage, its economic moat, and management quality. It assesses the track record and reputation of the executive team and asks, do they make rational capital allocation decisions? Are they investing their profit properly? Okay, and asking those questions is going to be a good thing to know before we just put money into an investment. And doing the industry analysis. Is the industry growing or is it shrinking? Okay, tech industry as of currently in the 20th century has just been booming, for example. And what are the key competitive dynamics? Okay, is there any threat of new entrants? And what's the pricing power of it? Okay, and competitive position. Does the company have a sustainable edge? Okay, patents, brand recognition, low cost reduction, and how many smiles does it put on people's faces? And the small summary of the three statements. Okay, the three financial statements. Okay, one, your income statements. That's going to be the performance over a period, and it focuses on the profitability. Okay, for example, margins, how much money a company's making. And the balance sheet, it's going to focus on its assets, liabilities, and equity at a point in time, and it focuses on resources. And then we have the cash flow statement. It tracks cash movements over a certain period, and it focuses on liquidity and funding activities. Okay, so look at all of them. Okay. So your goal is to cross-reference the three statements. For example, if the net income, okay, is high, but the cash flow from operations is low, it suggests that the company is booking sales, but not collecting cash. That's a critical finding, okay, meaning that it's sinking, okay? So figure out what you guys want to invest in, okay? Stay prayed to God, keep grinding, and head over to Stackmode.net to learn how to trade and invest. Peace. Yeah, let's go and let's talk about impermanent loss and DeFi. Let's talk about it, let's explain it, and let's jump straight into it. So what's DeFi in the first place? DeFi stands for decentralized finance. Decentralized is going to be a network to where there's going to be no middleman involved. So say you're trying to send $3,000 through a bank, for example, okay, you, the person, would then go ahead and send the transaction, but the transaction would have to go through the bank first. The bank can go ahead and determine whether or not they want to decline it or put the transaction through. If they say no, then the transaction will be sent back to your account. But using decentralized network, or also known as the blockchain network, transactions can get sent from one person to the other quickly and automatically using smart contracts, which also provides security in order to make sure everything is decentralized. There's no centralized control and everything can automatically be done. So everyone can just get their bread from one person to the other extremely easily and efficiently. And some key components include lending, borrowing, trading, and liquidity provision. And anyone with an internet connection can participate, promoting financial inclusion. So anyone around the world can go ahead and hop into these crypto markets and start trading. And some risks include that smart contract vulnerabilities can go ahead and be in place, and market volatility. So make sure you have your risk parameters in place so you don't just lose money that you aren't prepared to lose. Okay, make sure you know what your stop loss is, you know where you want to close as far as your take profits, and understand the chart before you start throwing any type of money into the markets. And in DeFi, decentralized finance, users maintain control over their assets through non-custodial wallets. Like unlike traditional finances, where banks hold your money, okay, this shift powers to individuals, but requires personal responsibility for security. So cryptocurrency pretty much gives you the ability to be your own bank. You can go ahead and send your currency whenever you want, pretty much almost instantaneously, and go ahead and receive your codes. Okay, and it's going to do this by a long code that you guys can copy and paste, send it to people, or receive someone else's code in order to send money to them. Okay, and if you mistype the code, though, the money can be sent to somebody else or be lost in the void. Okay, so make sure all codes that you do within cryptocurrency as far as sending money, make sure that everything is exact, make sure it's everything that you need it to be, and pay attention. In a traditional finance, you deposit money in a bank, which lends it out and pays you interest. And in decentralized finance, you supply assets to a protocol like Aave. And this is where borrowers pay interest directly to the suppliers, okay, via smart contracts. And what are liquidity pools in the first place? Liquidity pools are the backbone of decentralized exchanges, also known as DEXs. And they're smart contracts that hold reserves of 2 or more tokens, allowing users to trade without order books. And a pool might contain equal values of Ethereum and USDC. And liquidity providers, also known as LPs, they deposit tokens to earn fees from trades. And trades adjust the pool's ratio based on constant product formulas. The liquidity pools ensure that continuous liquidity is being added into it. Okay, so continuous money is always being flown within the decentralized and crypto markets, unlike centralized exchanges. And popular platforms like Uniswap, SushiSwap, and Balancer are all included too. And the security relies on audited smart contracts, which are the autonomous contracts that make the cryptocurrency space run automatically to prevent exploits. And liquidity pools can be permissionless, which allows anyone to add liquidity. And the concept originated with Uniswap's automated market maker, also known as the AMM model, where the product of tokens quantities remain consistent. Okay, so say for example, a value of X times Y equals K. So for example, creating a liquidity pool, suppose you deposit 1 ETH. Okay, let's say 1 ETH at the moment is just worth 2K for this example. Okay, and let's say you do 2K of USDC. That's a stable coin that goes off of the fiat currency US dollar. Okay, so what a stable coin is pretty much a cryptocurrency version of fiat currency. And what fiat currency is a country's natural currency. So USD is going to relate to USDC, for example. Okay. And the pool now is a constant product of 1 times 2,000, which equals 2,000. And if someone buys 0.5 worth of Ethereum, they must add enough USDC to maintain the K equals 2,000 value. So how automated market makers work in the first place? AMMs are protocols that use mathematical protocols or mathematical formulas to price assets in liquidity pools, enabling decentralized trading. There's some constant product models. It's going to be X times Y equals K. Okay, so X times Y equals K. And that can be calculated via the Uniswap V2. And there's a constant mean model for multi-asset pools. Okay, and Balancer does that. And trade shift reserves, which change the prices. Okay. and slippage occurs on large trades due to pool size. And LPs receive LP tokens representing their shares, and arbitrars keep the prices aligned with external markets. And Uniswap v3 introduced concentrated liquidity to promote market efficiency. And flash loans also integrate with AMMs for complex strategies. So going in depth, the constant product ensures that one asset's quantity decreases and its price increases relative to the other, mimicking supply and demand dynamics. And trading in an AMM. So 10 Ethereum and 20,000 USDC. So let's say K equals 200,000. Okay. The price, $2,000 for USDC / Ethereum. Okay. So you'll buy one Ethereum and at 2,222.22 USDC. Okay. That's going to give you a new X value of 9. Okay. A new Y value of 22,222.22 and a new K value of 200,000. And the price rises due to the fact that the amount of Ethereum was reduced. In arbitrage, an example of it, if the external price is 2,100 USDC, traders buy from a pool until a line, profiting and rebalancing. So let's talk about impermanent loss and permanent loss, also known as IL. Impermanent loss is the temporary loss of value experienced by liquidity providers due to price divergence of pooled assets compared to holding them outside the pool. And impermanent loss occurs when asset prices change after depositing. And impermanent is because it's unrealized until the final withdrawal occurs. And it mainly affects volatile pairs more than stable ones. It's calculated as value in pool versus the value of held. And it's not a bug, but it's a feature of the AMM design. So it's supposed to occur. And impermanent loss can be offset by trading fees earned. And it's a lot worse in one-sided price movement. Okay. And in detail, when prices diverge, the pool rebalances automatically. But LPs end up with one of their more depreciating assets and less of the appreciating one. And here's a simple analogy. Imagine sharing apples and oranges. If apples become more valuable, the pool is going to give you more oranges for cheaper and fewer apples if they're valuable, leading to loss versus just holding them both equally in the first place. And impermanent, also for IL, okay, permanent as prices returning to original ratios eliminate the loss, but the fees accumulate regardless. So here's a simple example of a permanent loss. So let's say you deposit one ETH for 2K. Okay, so 2 bands worth of Ethereum plus 2 bands of USDC. Okay, that's going to give us a total value of cryptocurrency of 4K. Okay, let's say the Ethereum price then decides to go upwards to 4K. Okay, so remember, we bought it at 2K though. So let's say Ethereum goes to 4K. The pool is now going to rebalance. So now 0.707 ETH, okay, we're going to add that plus the 2,828 USDC value, which is going to give us a value of 5,656. And if held, then that 4K Ethereum plus $2,000 of USDC is going to give us 6K. And the impermanent loss, okay, we're going to calculate that by grabbing the 6K and minusing that by the 5,656, okay, which we got from getting the 0.707 ETH plus the 2,828 USDC, which gives us the value of 5,656. Okay, then the original 4,000 plus 2,000 gives us the $6,000 value of USDC. Minus those, and it's going to give us an impermanent loss of $344. Okay, and the STI is going to be 5.73% loss. And the AMM sells some Ethereum for USDC as the price rises, leaving you with less Ethereum when it's more valuable. So the K value is going to equal 1 times 2,000, and that's going to still equal 2,000. Okay, 1 times anything is going to equal the original value. And the new price would be $4,000 for USDC / Ethereum in the pool. Okay, so it's going to be your K value divided by your new price ratio, okay, but simplified, and the loss is going to increase with price deviation. So detailed mathematical calculation of impermanent loss. For a deeper understanding, let's derive the impermanent loss formula. So let's assume this is a 50-50 pool. So we'll do 1/2, okay, 50-50. And let's talk about asset A and asset B, okay. That's going to give us a price ratio of 1, okay. And the new price ratio is going to be P, okay, times value B divided by value A. And the whole value is going to be the initial A times value B plus initial B divided by value P. Okay, and the pool value would be 2 times the initial A times the initial B times the P. And a permanent loss, okay, would equal 1 minus 2 times value P. And then we would divide it 1 plus the initial value of P. Okay. And for P equals 2, that'd be 100% increase. So the permanent loss would be 5.72%. And for P equals 4, the permanent loss would be 17.16%. And as P approaches infinity, then the impermanent loss is going to go ahead and approach 100%. And the formula shows impermanent loss is symmetric for price increases or decreases, and it depends only on the ratio change. And here's an advanced example. For a 10% price change, P equals 1.1. The impermanent loss would equal 1 minus 2 times the square root times 1.1. Okay, divided by 1 plus 1.1, which is going to equal 0.045%. Okay. And for 400% change, the P will equal 5, and the permanent loss would be 21.8%. Okay, and once again, as P approaches infinity, as the number increases, the impermanent loss would increase, and it could approach 100%. And some factors affecting the impermanent loss. So volatility. So once again, volatile pairs such as the Ethereum, Bitcoin have a higher impermanent loss risk in the first place. And correlated assets such as stable coins have minimized IL. So like USDC/USDT, something like that. Okay, they have nearly zero impermanent loss due to the fact that there's pegs. Okay, not a lot of fluctuations in between them. And the time of the pool, the longer exposure increases the impermanent loss probability. And there can be higher pool fees. Higher fees can also offset the impermanent loss and price deviation. Larger changes cause exponential impermanent loss. And pool weights, non-50-50 pools alter IL dynamics. And larger pools have less slippage but similar IL. And market events as well too. Black swan events amplify IL. So news, be on the lookout for that. And in practice, choose pairs wisely. Okay, determine what you want to play and make sure you're not going to go and be taking losses, trading something that's too volatile, hurting your account in the long run. We're here to make some money at the end of the year, not just get some instant bread in our hands right now. Stablecoin pairs like USDC, USDT, once again, have near zero IL due to pegs. Okay, and they have a real factor impact. During the 2022 crypto crash, LPs and volatile pairs like ETH/altcoins, for example, suffered a massive impermanent loss and prices plummeted unevenly. Okay, so make sure you're monitoring on-chain data for volatility predictions. Keep checking your charts. And here's some strategies to mitigate impermanent loss. Okay, provide liquidity for correlated assets. Okay, and Uniswap v3 allows range-bound positions. And impermanent loss insurance. Protocols like Bancor offer protection. And you can also hedge too. You can use options and futures to offset losses. Okay. And short-term provision. Enter/exit during low volatility. And automated managers. You can use vaults like Yearn for optimized LP, and diversified pools means that it's spreading across multiple pairs. And you can calculate break even by ensuring your fees is larger than your expected IL. In Uniswap v3's ranges lets LPs act like limit orders, reducing impermanent loss exposure outside of the ranges in general. And here's a mitigation example. In Bancor, single-sided staking, okay, which is going to be used to create like Ethereum, for example, instead of POW, which is used to create Bitcoin when power is exchanged. Okay, so single-sided staking with impermanent loss protection. And after a vesting period, the protocol compensates for losses via token emissions. Always do your own research. No strategy is going to be risk-free. Okay. And here's some pros and cons of providing liquidity. So pros, you can earn trading fees. So you can get like a 0.3% on Uniswap, for example, and it can help you earn passive income. So you can get a lot of rewards from farming, okay, if you're staking or through LP tokens. There's a lot of support ecosystem too. It boosts DeFi's liquidity. And the more people trading is going to be the better. and compounding. Okay, you can reinvest fees for growth as well too. Okay, and opportunity cost. Locked funds miss other gains, and gas fees can be high on Ethereum sometimes. Okay, and sometimes smart contracts can be susceptible to hacks or bugs, but as laws and regulations decide to come on through, then things start to get more secure. And net outcome is going to depend on the volume, okay, the fees versus the volatility, okay, the apparent loss. So net outcome, okay, it's going to be the fees versus implied or apparent loss. Okay, and during bull markets, high out volume offsets apparent loss, and in bear markets, apparent loss dominates. Okay, and tools like APY.vision help track your apparent loss versus your fees. Okay, so stay prayed to God, keep grinding, and apparent loss is a risk in AMM liquidity provision due to the price changes. Okay, balances with fees and rewards are a possibility, and you can use mitigation strategies like concentrated liquidity in order to help yourself out. Throw your trades and calculate and monitor your apparent loss in your positions. And the decentralized finance community is always evolving, and you can stay informed at Stackmode Network to learn how to trade. Okay, I'm gonna keep dropping for you guys. Keep grinding. Stay prayed to God. Keep grinding, and don't ever give up. Catch you in the next one. Peace.
Let's go ahead and talk about crypto wallets. So I want to go ahead and break down the difference between hot wallets and cold wallets, as well as keeping your crypto secure by making sure you guys lock down your seed phrase. So let's jump into exactly how we can secure our cryptocurrency. Inshallah, if God wills. Boom. Let's talk about how to secure your crypto like a pro. So if it's not your keys, it's not going to be your coins. I want you guys to understand the difference between ownership and just keeping your keys on a broker that if they get shut down or something like that, you won't have access to your crypto, or they could even limit how much crypto you could send, withdraw, deposit, etc. And that's not what you want. The whole reason we're trading crypto in the first place is so we can have some freedom over our money, inshallah. So let's talk about it. So hot versus cold wallets. So the vital distinction, understanding where your private keys live is going to be step one. Understanding where your private keys live is going to be step number one. So the hot wallet is going to be online. Apps on your phone or your computer, for example, Coinbase or MetaMask, keys are on a device connected to the internet. Convenient, but can be hackable. If people guess your Google or hack into your 2FA or multi-factor authentication, etc., then they're going to be able to have access to your crypto. Not what you want, because then they're going to have access to your money. So let's talk about what a cold wallet is. So a cold wallet could be like a USB drive, a little block device, etc. And it's going to be a physical device, and it's a hardware wallet that stores keys offline. And it never touches the internet, and it only signs transactions. So what you can do is buy your crypto on a hot wallet and then transfer it to a offline cold wallet. So it's kind of going to be like cash, but cryptocurrency. So you guys are going to be able to transfer it to hot wallets and transfer it to your bank if you ever need to, etc. So a cold wallet is pretty much going to be like cash, but for crypto. And a hot wallet is going to be like the online live store where you can purchase and store cryptocurrency as well too, but it comes with limitations. Let's continue on. So the seed phrase, also known as the recovery phrase, make sure you guys keep this safe. I don't care if you guys put it inside of a notebook, if you guys write down the keys on a piece of paper. A lot of the times it's going to be a 12 to 24 key word phrase, okay? And it's going to be random words like this. So for instance, like which, collapse, practice, feed, etc. And then 24, some brokers only do 12, okay? So when you create a wallet, you get 12 or 24 random words, and this is going to be the key to your vault, pretty much. If you lose the words, okay, then you cannot get access to your vault. Once again, if you lose the words, you're not going to be able to gain access to your vault. So never type it in on a computer unless it's somewhere where you feel it's secure and safe. Try not to take photos of it because people can hack into your iCloud. I'm not too sure about Google. I haven't had a Samsung phone in a few years, but I'm sure there's going to be ways that people could access your photos too. And try to write it down on like a piece of paper, multiple piece of paper if you can. Store it somewhere, you know, in case paper gets burned, lost, wet, etc. And try and just store it password protected. If you do store it online, there's going to be ways to password protect your documents you guys can put it inside of a WinRAR file. WinRAR is going to look like the stack of books. It's going to be an icon, and you should be able to put a .text file, .txt, and you could put it inside the WinRAR and then password protect it, and then you could upload it somewhere, wherever you want, because only you know the password at the end of the day. So keep these words secure and safe. Please, for the love of God, do not lose these words. And there's going to be a lot of phishing scams and stuff like that too. You're going to see online like, hey, I lost my account, and it's going to be a bunch of random words like this. They want you to log in, buy crypto, and they're going to try and take your money. So never try and take people's money. Never log into somebody else's wallet. Okay, be righteous, be focused on God, and be focused on your bag. Stay in your bag. Don't try and scam. Don't try and do little weird stuff trying to get some money real quick. Stop it. Okay, be genuine, work hard, and most importantly, pray every day. So keep these words secure, and you guys can also keep these words for your kids, your family down the line, etc. Just as long as you keep it secure. Stuff happens in life though. Once again, papers could get wet, fires, etc. A lot of stuff goes down. But if you write it down like some metal, keep it with you, and upload it to multiple sources with a password protected form, then you could have your money secure in a nice way. Let's continue on. So hardware wallets, okay, the standard. Boom. Physical security. To be a pro, you must move significant funds off exchanges such as Coinbase, okay? And how it works. The device generates keys internally, and the keys never leave the chip at all. And you must physically press buttons on the device to approve any outgoing money. So hackers cannot press the buttons remotely. You got to have the actual cold device in front of you. Now, you can't be running your mouth telling everyone on the block like, yo, I got 10,000, I got $1 million on my crypto wallet right now. You know what I'm saying? That's not playing a good game. Still, you got to be secure. Just like if you have cash, you know, you got to worry about little security things. And for verification, you must physically press buttons on the device to approve anything. Okay, so unless somebody actually has it or rob you, God forbid, okay, keep it safe, keep it locked away, keep it inside of a safe even if you got to, and just keep it secure. And some popular brands are going to go ahead and be Trezor, there's Ledger, Cold Card, and Bitbox. There's going to be some other ones as well too, and they pretty much just look like little USB devices. Now, let me go ahead and tell you guys about something. May God bless his soul. There is a guy who lost his hardware wallet, and he had a bunch of cryptocurrency on it. And he spent millions of dollars clearing a trash excavation site trying to look for it because he accidentally threw it away. So it just like cash, you got to take care of it. There's been times where I've had cash inside of my coat pocket and I accidentally put it inside of the washing machine. And thank God you could wash cash, so it was okay. But like little things like that, like you got to just be on top of it if you're going to have a cold wallet. So if you're lazy, if you're not consistent with your things, you know what I'm saying, things like that might got to change. Pray on it, get better, improve, and just understand that the hardware wallet and cold wallets, you got to take care of them. It's going to be secure, but you got to keep it secure yourself in real life. All right. And the passphrase, the 25th word, the hidden wallet. Advanced security feature supported by most hardware wallets. So the seed phrase plus the passphrase equals a totally new wallet. So if someone finds your 24 words, God forbid, they see wallet A, okay, and it's going to be more of a decoy, okay, a dummy, a fake, but your real money is going to be in your wallet B, which requires the extra word that you memorize. So if you forget the passphrase, then the funds are going to be lost forever. No recovery, there's no support you can go run to like, hey, I lost my money. Like, no, you want to play cryptocurrency, you want to invest in a cryptocurrency, you got to have the responsibility of pretty much being your own bank. Okay, you control when you send your transactions, you control how you store your transactions, and be on top of your stuff. Okay, just like if you're your own bank, you could choose between cash, digital currency, etc., whatever you want. Okay, same thing with cryptocurrency. You can go hot wallets, cold wallets, find your sauce, do your thing, and do what feels right for you. Okay, if it feels right in your stomach, then that's just what it needs to be. Okay, so fire and flood protection. So paper burns. Psh. Writing your seed phrase on paper is going to be risky. houses burn down, pipes burst, stuff could get wet. So you could use things like steel plates. Use a center punch, if you guys have ever seen that, kind of like the things that look like Braille. So you could use a center punch, or you could use tiles to record your seed words on a stainless steel or titanium surface. This way that if anything happens, such as a disaster, God forbid, as long as you don't lose it, it's going to go ahead and be indestructible for the most part. It can survive house fires up to 2,500 degrees Fahrenheit and corrosion, and as well as any water and things like that. And it's just a one-time cost, kind of like a safe if you wanted to keep your cash, jewelry, etc. safe. So it's a small price to pay to secure your life savings absolutely forever. So keep that in mind. There's going to be multiple things you could do, multiple ways you guys are going to be able to keep your money secure and safe. But keep your money to yourself. Okay, evil eye is going to be a very real thing in the world, sadly. So don't be running around telling everyone on the block where you have your cold wallet, where you have your phrase, etc. Okay, keep it just between you and your family, inshallah. So as far as the security checklist, right, let's ask ourselves, do we buy a hardware wallet? Okay, because if not, you could go ahead and invest into a Treasure, Ledger. There's going to be multiple ones you could check out. Hop on Amazon, eBay, the internet. There's going to be some hardware wallets you could check out. Okay, God wills. And write the seed phrase on steel. Try not to do it digitally just in case you ever get hacked, God forbid. And never type the seed phrase into a computer or a browser unless it's password protected. If it's password protected, okay. And try to use an extra passphrase for extreme large amounts in case somebody ever gets your 24 words. And always do a small test transaction first. Okay, you want to do a small test transaction first. So that's going to go ahead and be it. I love you guys so much. Stay prayed up to God. Keep grinding. Don't ever give up, even when things get hard. Pray to God every single day. Try to work out if you guys are feeling any type of anxiety or anything like that about your money. Keep it secure and don't be overly boastful. Okay, spend moderately, and catch you guys in the next one. Read Quran and listen to God. It's the easiest way to be successful. Catch you guys in the next one. Peace.
If you're not familiar with cryptocurrency or how it works, let's fix that right now, because today you're getting the ultimate beginner-friendly guide to cryptocurrency that actually makes sense. No hype, no jargon, and just straight clarity. Crypto isn't just internet money. It's a digital system that lets you send, store, and grow value without needing a bank. And the best part, you don't need to be a tech genius to start. You just need the right roadmap, and I got you. Step 1, I'm going to teach you guys how to understand Bitcoin. It's the foundation. Think of it like a digital gold, and know the difference between coins and tokens. Coins run their own blockchains, and tokens live on blockchains. I want you guys to understand risk management, because new investors lose money because they skip this. Never invest based on hype. Always focus on projects with real utility and making sure that it's putting a smile on people's faces in the future. Let's go on, let's jump in, and let's understand what cryptocurrency is, inshallah. So let's go and let's do a deep dive onto crypto, and let's understand it, inshallah, if God wills. So why does crypto matter in the first place? It solves the trust problem. So traditional money relies on banks, okay? So the money sits inside the centralized bank system, okay? And within that system, people can only make certain decisions with their money. If you have 100,000 parked in the bank, you can't go to the bank and pull all of it out immediately. Same thing with certain apps like Cash App, Zelle, etc. There's going to be withdrawal limits, and there's going to be deposit limits as well too, okay? Due to the fact that the bank has to centralize and control everything, so that on their end, they have to have enough money to distribute to everybody, okay? Because the bank is using our money. So understand that if the bank freezes your account as well, then your money is going to be gone. Crypto solves all of this. It's censorship resistant. No government can stop a Bitcoin transaction, not a single one. You could be in any country in the world, and it makes it permissionless. That's the main reason why people fight so hard for cryptocurrency. It's because it's righteous. You know, everything doesn't need to be rat race and controlled. Especially with other things being as controlled as they are. You know, you have to go pass emissions for your car before you can drive it and do certain things already. So the fact that we can't spend our money or withdraw our money how we want is a problem. It's a problem for me and a problem for many other people. And thank God we have the resolution for this. Cryptocurrency has come into play to solve this. Also, it becomes an inflation hedge too. So central banks continue to just keep on clicking print, okay? They print money constantly, over and over and over and over again. Keep on clicking the print button, okay? Making it worth less. And Bitcoin has a fixed supply, which makes it scarce, okay? And that scarcity has a lot of value built into it.
just like gold, diamonds, etc. Anything that has less or has a strict supply, okay, is automatically going to go ahead and be valuable. Okay, anything that has less supply than something else will be more valuable a lot of the times. And cryptocurrency is giving you true ownership on your currency. Okay, you could be in any country in the entire world, as long as the country has a bank account system that lets you withdraw from certain brokers, okay, such as Coinbase, etc. You can take that money from your cryptocurrency, spend that anywhere in the world. You don't even have to transfer it to fiat currency if you don't want to. You could easily just get your cryptocurrency, spend it on like a Coinbase card, and you can easily just spend your cryptocurrency straight up without having to transfer it to a centralized bank. So you can be completely your own bank. You have total control and total responsibility for your money too. So there's also going to be a couple things that come into play with this. So say things like fraud. If you make a transaction on mistake, okay, for a bank, you could call them up and be like, hey, I did this on accident. Could this be reversed? And a lot of the time, since it is a controlled system and it is technically kind of their money also, so they have the ability to, you know, pause things, freeze things, and make certain transactions not go through in case ever needed. And that could be in a good thing or a bad way too. Because say for instance, you're trying to send some money to a family member in another country. They could also decline that wire transfer if they wanted to. Cryptocurrency, nobody can decline your transactions, okay? Nobody, okay? You are gonna be your own bank and everything works on autonomous smart contracts. So on a normal bank, if you wanted to send $10,000 to somebody, once again, the bank has the ability to say yes or say no, okay? It's gonna be completely up to them. But if you send it via cryptocurrency, instantly it'll go ahead and get sent over, okay? But that's also putting more responsibility in your hands too. So because of that, you have to be making sure that you're sending your cryptocurrency to the right addresses, and you have to making sure you're sending the right type of cryptocurrency and sending it via the right type of networks, okay? So because you're your own bank, you have total control, okay? But that also means a lot more responsibility. So before you send certain cryptocurrencies and stuff like that, etc., make sure you confirm every single address that you're looking at. This way, you'll be able to ensure secure transactions and making sure that you're getting your money and making sure that your transactions are hitting the way that they're supposed to. Inshallah. So under the hood of everything, right, let's go and let's talk about the blockchain. So miners and nodes. The blockchain is not magic. It's a global network of computers, okay? So nodes, let's talk about them. Nodes are computers that keep a copy of the ledger. Okay, they verify that you actually have the money that you're trying to spend in the first place. Okay, and let's talk about POW. POW is going to go ahead and stand for proof of work, and it's how Bitcoin is created. Okay, so specialized computers that secure the network using energies, and they compete to solve math puzzles and problems to add the next block. Okay, so what's happening is these computers are constantly running problems through it, okay, trying to figure out what is going to be the next block that needs to be added, okay, into the hash, etc. Okay, and these computers take up a lot of power, okay. So consensus of it, 51% of the network must agree on the truth. Okay, hacking it requires impossible amounts of energy that just doesn't exist, because it would have to go ahead and determine and calculate so many different type of numbers and transactions in order to see what next block would even have to be added into the equation. Okay, so mining is how Bitcoin is generated, okay, and not by pickaxe mining. Okay, so check it out. Just like we know diamonds and gold, you need like an actual pickaxe or a drill, etc. Okay, and then people go out there, find it in the caves. Bitcoin works a little different. Okay, the computers have very powerful graphics cards and intensive hardware inside of them. Okay, and what they're doing is that they're solving problems constantly. Okay, so it's answering like 2 + 2 and trying to find the equal sign. Okay, testing out every math puzzle. Okay, trying to find the next block. Okay, and when you do that, okay, you get rewarded with Bitcoin. So that's how Bitcoin is created. People have powerful computers that take up a bunch of energy, okay, which is why it can be expensive to mine Bitcoin as well too. And then those computers are trying to solve complex problems. Once those problems are solved, then the miner is then paid in Bitcoin. And that's just how it works, and that's how Bitcoin is created. So let's go over the big three, right? The big three. So the big three are going to be
Bitcoin, okay? You're going to have your Ethereum and Solana, and then you're going to have your stable coin. So let's jump into each one of these and break it down. So you're going to have your Bitcoin, okay? Bitcoin is going to be the most valuable cryptocurrency as of today's date, due to the fact that it's not infinite, okay? There is a limited amount of Bitcoin. There's going to be 21 million Bitcoins available. It is not an infinite cryptocurrency such as Ethereum, Solana, etc. Okay, so that's why Bitcoin right now is the most valuable cryptocurrency. Okay, it's slow, secure, and most importantly, scarce, giving it baked value already. And it's not for buying coffee, okay, but you can if you want, but it's for preserving wealth over decades. Okay, so think of it as digital gold. So understand that Bitcoin is here to fight against inflation, because if these dollars keep going up, say 10 years ago, right? Say rent was $700 at one place, okay? And in today's day and age, say the rent is $1,400, okay? That means that the rent doubled, okay? But did people's income double, okay? That might not always be the case. So when you park your money into an asset, something like cryptocurrency, okay, year after year after year, your money's going to grow just as inflation decides to grow too. So it's going to give you a hedge against inflation and being able to protect yourself from the economy going in a downwards direction, inshallah. So let's talk about the smart contracts. So just like we talked about, Bitcoin was created by computers that use power, okay, POW, proof of work, okay. Ethereum was created based off of staking, okay, POS, okay, which is going to be a lot less economy taxing system in order to create cryptocurrency. So pretty much Ethereum came out to prepare for when Bitcoin does go away, okay? So the computer, okay, it's programmable money, and apps like DeFi and NFTs are built on top of these, okay? Think iOS or Android. And for Solana, the reason why Solana is going to be really important too is because it's going to be used in order to trade meme coins, okay? I'm sure you guys have heard of that. And meme coins can't be traded until you have Solana first. And then you're going to have utility and stable coins, okay? So this is kind of going to be like the fiat currency version of cryptocurrency. So instead of parking your money into a token or coin or something like that, expecting some profit returns, okay, stable coins such as USDC stay at $1, giving you a safe place in order to park your money in the cryptocurrency world without it fluctuating up and down all the time. So utility tokens like Link provide data feeds, and meme coins like Doge are communities built on certain factors, okay? So figure out what you want to invest in, figure out what works for you, and let's go and let's keep going. So whenever you start trading cryptocurrency and you generate a wallet on whatever broker you choose, okay, you're going to get a 12 to 24 word phrase, and this can be used to log into your account. So if you don't want to sign in with a usual email and password, because you know those can get hacked, etc., okay, you can use a seed phrase. Okay, it's going to give you 12 to 24 random words, and you can keep these words safe in order to get back into your account. So with cash, say the problem with that, you know, if you have a bunch of cash stashed in your house, it can get moldy, you can get robbed, the house can catch on fire, etc. A lot of things could happen to cash. Okay, but with your cryptocurrency, it's like keeping your cash but digital, okay? And it's not behind a email and password, it's going to be behind your seed phrase, okay? So you can write your seed phrase down, okay? It's going to be 12 to 24 random words. Make sure you write them all in a row, okay? They're going to be listed like 1, 2, 3, 4, 5 to 12 to 24, etc. Okay, so make sure you have the order correct, because that definitely does matter. Okay, try and write your seed phrase on a piece of paper, a notebook you have, whatever, okay, and never screenshot it, okay, never screenshot it. Okay, Apple, people can get into your iCloud, and then people can get access to all of your funds. Okay, try not to type it onto a online computer software, like no Google Docs or anything like that. If you do, try to just keep it on a flash drive. You can do like a notepad, .txt file, something like that, and you can password protect it with 7-zip, WinRAR, anything like that too, if you want it as well. Just try to keep it as secure as possible. So if you lose this, your money is going to be gone forever. Okay, no support desk can help you. Okay, it's just going to be gone, out of existence. Okay, and it cannot be recovered. So make sure you guys are keeping your seed phrase secure. Keep it safe, because this is going to be your longevity. This is going to be your money, and this is what's going to take care of you. Okay, you guys don't want to be losing this. Okay, inshallah. So let's talk about the trade-off of everything. Okay, let's talk about CEX versus DEX. Okay, so CEX is going to be centralized. Okay, so whenever you're thinking CEX, think of the normal traditional bank system. Okay, so pros, right? You got some easy customer support. It's pretty easy to get your money back whenever things happen, but there's also going to be things that come into play. Okay, sometimes you might have random 3 a.m. maintenance. There's been times where my crypto had to come clutch because my centralized bank is doing maintenance. Okay, but my cryptocurrency was available, thank God. Okay, there's also been times where your funds can be frozen. Okay, and there's also going to be that Monday through Friday window in order to get paid. Okay, so times correlate versus when you get paid. On the decentralized network where cryptocurrency is traded, doesn't matter. Everything is based on the peer-to-peer transaction system. Okay, if I send 10K to somebody, it'll most likely be in their account within a couple, or their crypto wallet within a couple of minutes or hours. Okay, if I send someone 10K via wire transfer, okay, it would have to be via Monday through Friday, okay, and it would have to hit at like 6 a.m. or like 9 a.m. or something, some time like that. And keep in mind, the centralized bank, if they wanted to, could completely decline the transaction. Okay, decentralized, everything is peer-to-peer. No one can decline anything, but no one can also recover your mistakes if you make any. So it's decentralized, okay, giving you total privacy, you keep custody, and instant swaps are going to be available. But understand that there's no customer support. Okay, if someone says, yo, send me 10K Bitcoin, and you send them Solana, that's it, man. Okay, you have to understand that that's it. So there's an extreme responsibility. So make sure you guys are staying humble. Make sure you guys are staying focused. Make sure you guys are waking up and praying to God, most importantly, and keeping your head on straight. Okay, you don't want to be having a moment of franticness or having bad mental health and making an accidental decision where you just lose all your cryptocurrency. Okay, please don't do that. And let's talk about what gas fees are. Okay, and I'm not talking about gas that you put in your whip. Gas fees are going to be every transaction that has a tiny fee attached to it. Okay, that's going to be a gas fee. Okay, any crypto transaction that has a fee attached to it is a gas fee. So on Ethereum, this can be like $5 to $50. On Solana, it could be like 0.0001. Okay, so your gas fees will go ahead and fluctuate depending on what asset you're buying and purchasing. So let's talk about the dangers of everything. Okay, we want to make sure we're being as safe as possible. So the fat finger error, this has happened to so many people. Okay, if you send Bitcoin, okay, but then they're asking for Ethereum, it's deleted forever, or some random person is going to go ahead and get the money. Okay, crypto transactions are completely irreversible. Always send a small test amount, especially if you're sending big amounts. Okay, if you're about to send 10K, see if $5 goes through first. Okay, if they get that, then go ahead and send it again. Okay, take your time. Do not make fast, overzealous decisions, because you can very quickly destroy and lose all your crypto value on accident too, is really the crazy thing. Okay, so if you want to trade cryptocurrency, you say you're ready to be your own boss, be ready to stand on business, CEO. Okay, you got it. I believe in you guys. Manage your currency well. And social engineering. So hackers won't break the blockchain. Okay, what they'll try to do is trick you. Okay, they pose as support agents or send fake website links. Okay, or what they'll try and do is be like, oh, here's a 12 to 24 seed phrase, word seed phrase, and you can come in and try to log in and you'll get all this money. What they want you to do is deposit into that account. They have access to it, and then they go ahead and clear the account. Okay, do not log into anybody else's crypto wallet. It's not worth it. Stay logged in on your wallet. Stay focused on your bag. Don't try to rob nobody. Don't try to get no money from nobody else. Stay focused on you and yours and what God has planned for you. And bear markets. So crypto sometimes has winter cycles, just like the stock market, where prices can drop 80% for certain cryptocurrencies, especially if they're not valuable, and stay down for years. So only invest money that you can afford to lock away for plenty of years. Okay, you should be on the brink of almost death before you pull out your money from your cryptocurrency wallet. Okay, try not to pull out your crypto wallet. Try to live off your credit card. Okay, and invest all your cash into assets if possible.
inshallah. So the psychology behind everything, okay? So time in the market, okay, is going to be a lot better than timing the market, okay? So too many people are trying to time the market for exactly what it is every single time. But understand that sometimes you just got to be in the trade for some time. Some of you guys are closing your trades way too early and wondering why you're not profitable at the end of the year, okay? You need to have your life together outside of the markets so you can actually sit on your plays for some years and build some actual capital. So don't buy at the top. We're going to go ahead and go over some chart work too at the end of the presentation, just so I can go and let you guys know some quick sauce. So try not to buy at the top of all-time highs, okay? Wait for market to dip down, okay? And then catch the sweep back up, okay? But do not buy at all-time highs, because a lot of the times you're just going to go ahead and eat a pullback straight down. So the DCA strategy, DCA stands for dollar cost average, okay? So you can go ahead and set up an auto buy. You can set up a certain amount of money per week too if you wanted to. And even if you did buy at all-time highs, because your cryptocurrency is really going to be more like savings more than income. Yes, you're still going to be making great income after the years do pass, inshallah, but for the most part it's really going to be more of your savings. So even if you did buy at all-time highs, you can have that consistent amount that you're constantly investing in, okay? I don't care if you do $50 a week, $20 a week, $500 a week. Just choose whatever's comfortable with you for your income level, okay? And come back in 5 years, okay? And I'm telling you, most long-term investors who don't even look at the charts outperform 99% of day traders, okay? And that's a very, very, very true statistic. And you guys are going to be able to touch millions, okay, if God wills, without stressing yourself out by just making the right play, by just watering your seeds today, okay? So start growing your account, be patient, and keep going. So here's some golden rules for cryptocurrency. If it's not your keys, it's not your coins. Okay, if you have your cryptocurrency parked into a broker that's email password and doesn't have any recovery keys or secret keys, it's not really your cryptocurrency coins. If the broker shuts down, then boom, it's not really your true crypto in your hands. So I recommend like Phantom Wallet or anything like that, where you guys can digitally store your crypto very, very safe. You can also store them on a hardware physical device as well too, where it be the USB drive or whatever. And the golden rules of everything, right? Never share your seed phrase, okay? Your seed phrase is going to be that 12 to 24 word phrase, okay? That's going to go ahead and keep your account locked, okay? You do not want to be giving out your seed phrase, okay? You lose your seed phrase, things can get difficult, okay? No customer support you can call to just get your money back. So ignore direct messages. Don't log in with anyone 12 to 24 word seed phrase thinking that you're going to get money. Stop, okay? Purge any type of mindset where you're thinking about stealing or getting quick, easy money. Purge that, okay? Invest only what you can lose. Make sure you guys are paying your bills first. Don't think you're about to invest in a cryptocurrency and you can ignore all your bills because you're about to hit the best play ever. That's not how a real investor would play. Okay, structure your life, get it together, and then come onto the market, okay? And do your own research, okay? Don't just get in because your friend said, yo, this is going to be the best coin ever. Don't do that, okay? Because then you're not going to have enough conviction and confidence to hold through volatility, okay? If this is the play you've been researching for weeks, month after month after month, if price dips, you're going to have so much conviction and you might even re-add, okay? So it's going to be a lot of things when it comes to buying cryptocurrency. So let's go in how to read the chart. So reading the chart is going to be quite simple. What we're going to do is focus on our higher time frames. Okay, so what I'd like to go ahead and do is go for my monthly time frame. Okay, then from there, I'm going to go to my weekly time frame, daily, and then 4 hour. Okay, so we're going to go from the monthly to the weekly to the daily to the 4 hour. Okay, and when we do this top-down analysis, we're going to be able to get the full bird's eye view of absolutely everything, just so we can see the full perspective of the market. So always start off on your highest time frame first, then scale down. Okay, and the smallest time frame I'm going to go to look at the cryptocurrency chart is going to be the 4 hour chart. Okay, because cryptocurrency you want to be holding for weeks, months, and years. So focus on your higher time frames. There's no reason why you should be caught up on the 5 minute, 1 minute, 15 minute trying to trade cryptocurrency. It's not the wave. You need to have the full higher time frame picture so you know how many years, months, weeks to hold for, etc. Also, before we get into the chart, understand that cryptocurrency always wants to go in an upwards direction. Okay, most people can only buy, and this is the same thing for stocks too. Most people can only buy. Okay, most brokers don't let people short cryptocurrency, etc., unless they're trading crypto futures. So the fact that most people can only buy means that it's meant to go up year after year after year after year after year. Okay, so we do not want to be buying at all-time highs if possible. Okay, so what you want to do is wait for what's called a pullback. So pretty much buying anywhere other than all-time highs. So all-time highs is going to be up here at this current level of 126,000 right now at the time of this recording. I'm on my monthly time frame. I can see on the monthly time frame this chart goes up year after year after year after year after year. This is a bullish asset. So I'm going to go ahead and go to my weekly time frame. Okay, and I understand something about the market. I know market always wants to go in an upwards direction if the asset is going to be valuable. Okay, which means people are always going to be looking for an opportunity to buy. Okay, because they expect for it to go up year after year after year after year. So with that logic, I know that price always wants to go and head to break previous all-time highs. Okay, that way it can continue to keep going. Okay, you can see all price does is break all-time highs. Okay, and then it'll go ahead and fall below it. Okay, and then make some new all-time highs. Okay, we'll fall from there, and then one day, inshallah, we'll try and get above this all-time highs too. Okay, and then we continue to go in an upwards direction. But within the chart, we have to understand that price has to go up in order to go down, and price has to go down in order to come up. Okay, so price will always hunt an area of resistance above current price, or it's going to go ahead and hunt an area of support above current price. Okay, so always know that. Okay, price will always hunt an area of resistance above current price or an area of support above current price. So the strongest area of resistance on every chart is going to be all-time highs. Okay, so you want to also be focusing on things that trend too. So if I'm looking at Bitcoin here, okay, I can see Bitcoin goes up year after year after year after year after year. If it's not trending up year after year after year after year after year, it's a lot of the times it's going to be a lot more straining to make some profit within the decade's time span. Okay, so next thing you want to be looking for is the V structure. Okay, so all your setup should look like a V. So here's what I mean by this. So the reason why I say the V is because market will always make the left side of the V for you. Okay, the left side of the V is going to go ahead and be what's called resistance. Okay, so whenever you see market falling within a downwards direction, that's going to be called resistance. Okay, so market will always make the left side of the V. Okay, it'll always make the left side of the V, and it'll also make the bottom of the V. So many people try to predict where market wants to bottom out at, and here's how you know if the true area of support is real. Okay, make sure you're on your weekly or your daily time frame. Okay, and then from there, once you see market deciding to curl in an upwards direction after falling heavily, okay, how you confirm to see if the V is real. So here we have the left side of the V. Okay, we got market trying to make a bottom of the V here. Okay, but we want to see if the right side of the V is real. Okay, so the whole right side of the V, all this whole gap up here to the previous area of resistance is going to be money that we're just waiting to collect. Okay, all of this is just going to go ahead and be money. So all your setup should look like a V. Okay, try to buy when market is curling in a upwards V direction. Okay, all your setup should look like you catching the right side of the V. Okay, so that's how you know when it's time to buy. Try to buy at certain lows. Okay, let market make the left side of the V, and let market make the bottom of the V. Okay, let market make the left side of the V, and then let market make the bottom of the V. After you're on the daily, you start seeing like 2 to 5 candlesticks going in upwards direction. Okay, that's how you know the support is true. Okay, you don't want to just see one little wick, okay, and see it going up and be like, oh my gosh, it's going up from there. But if you see multiple days in a row, okay, price hitting an upwards direction,
the chances of this support holding is going to be really, really high. Okay. Especially after it dumped down for many, many, many days. Okay. So cool. So that's going to be the full guide on how to trade cryptocurrency. If you guys want some more one-on-one mentorship, head over to stackmode.net. Come on and book a free call. Or you can check out my free course and ebook. Stay prayed up to God. Keep grinding. I'm going to catch you guys in the next one. Let me know what you think in the comments below. Peace.
Class, let's talk about crypto arbitrage trading, the pursuit of risk-free profit in digital markets. Welcome to the lecture. Welcome to Stackmode, and let's jump into it. So the essence of arbitrage. Arbitrage is fundamentally the practice of simultaneously buying and selling an asset in different markets to profit from a temporary difference in price. It's the closest thing to a risk-free profit and opportunity in finance. And in the cryptocurrency space, this occurs because the global market is highly fragmented, with hundreds of independent exchanges that are not perfectly synchronized their prices in real time. This creates transient imbalances within the cryptocurrency community. So arbitrage is not about predicting the future prices, right? That's going to be speculation. It's about capitalizing on the current now price discrepancies for the same asset at the exact same time. So why do discrepancies exist in cryptocurrency in the first place? So latency and speed. Network delays mean that a price change on one major exchange may take a few milliseconds to reflect on a smaller, slower exchange. And this tiny window is the opportunity that people use in order to capitalize on some profits. So let's talk about some regulatory and geographic factors. Differences in regulatory frameworks or capital controls in various countries can cause persistent price differences. The community premium is a classic example. And liquidity differences. Exchanges with low trading volume might have larger bid-ask spreads, leading to minor price offsets compared to high volume exchanges. And we'll talk about transfer fees and withdrawal delays. The cost and time associated with moving capital between exchanges also contribute to price gaps that need to be larger to be profitable. So the foundation. Let's talk about simple exchange arbitrage. So the two exchange model. And this is the most straightforward form, involving just two exchanges and one asset. For example, Bitcoin, also known as BTC, BTC USD. The goal is to exploit a direct price difference. So step one, right? So this is how you do it. For example, you would buy low and simultaneously place a market order to buy one Bitcoin on exchange A, where the price would be $50,000, for example. And then step two, you would sell at high. At the exact same moment, you would place a market order to sell one Bitcoin on exchange B, where the price is $50,050. And result, a gross profit of $50, okay, and less trading fees and withdrawal costs. Okay, so the capital allocation challenge. For this strategy to work instantaneously, an arbitrage must have the capital prepositions on both exchanges. This is known as a capital risk or funding issue. So the required capital setup. You must have the fiat currency, for example, USD, okay, dollars, stable coins, etc., ready on exchange A to buy, and the asset, for example, let's say you're buying Bitcoin, ready on exchange B to sell. If you have to transfer the asset after buying, the price gap will likely close and the opportunity will most likely vanish. And due to razor thin margins, the speed required, this strategy is almost exclusively executed by automated trading bots that operate in milliseconds. So the advanced strategy, right? Triangular arbitrage. So 3-active cycle. Triangular arbitrage all occurs on a single exchange and exploits inconsistent pricing between 3 different currency pairs, creating a closed loop trade with a net profit. The core idea is that the implicit exchange rate calculated from 2 pairs does not match the exchange rate of the third pair. And the path. Example, using USD, Bitcoin, and Ethereum, and trade 1 to start it. Okay, so you would start by converting your crypto currency. Let's say, for example, let's say your starting currency would be USD to Bitcoin. Okay, so turn your fiat currency into cryptocurrency. Okay, so via the BTC USD pair. Okay, you could also turn your cryptocurrency into cash as well too, and do the same thing by whatever asset you want. Let's say you wanted to do Ethereum too. Okay, and the midpoint, you would convert the final asset, all right, or the first asset, that would be Bitcoin, to the second asset, for example, Ethereum, okay, via the ETH BTC pair. Okay, so you can use a cryptocurrency to swap it to different cryptocurrency pairs as well, or use your cash to do cryptocurrency and then buy the pair that you want. and you convert the second asset, such as Ethereum, back to your starting currency for your USD via the Ethereum USD pair. So the margin requirement and the speed of this. For the trade to be profitable, the final USD amount must be greater than the initial USD amount after all 3 trades and associated fees are deducted. And why this is faster? Since all 3 transactions happen on the exchange, the trade can be processed much faster than moving assets between exchanges. And this makes it a primary focus for institutional high-frequency trading. Okay, which can be a good thing and a bad thing because that can bring up bots as well. And this strategy is highly dependent on sufficient liquidity for all 3 legs of the trade to ensure that the bot can execute its large volume orders without slippage, which is the change in price due to the order execution itself. So the frontier, right? DeFi arbitrage and flash loans. So let's talk about DeFi pools and dexes. Decentralized finance, which is DeFi arbitrage, involves capitalizing on price differences between different automated market makers, also known as AMMs, like Uniswap and SushiSwap, or between a DEX and a traditional central exchange, okay, also known as a CEX. And let's talk about the liquidity pool inefficiencies. Prices on DEXs are determined by the ratio of tokens in liquidity pool. And when a large trade happens on one DEX, the ratio shifts, creating a temporary price difference relative to other platforms. And there's going to be a gas war, right? So gas in the cryptocurrency world equals fees. So when you see the word gas, think of fees. So a gas war. A significant risk here is the cost of gas, right? The network transaction fees. And arbitrage. Bots must bid high gas fees to ensure the transaction is included in the next block faster than their competitors, okay? And nice writing here. And the game changer, right? Flash loans. So flash loans are a novel decentralized finance concept that allow a user to borrow any amount of uncollateralized assets, provided liquidity is available, so long as the funds are borrowed and repaid within the same blockchain transaction. So let's talk about some zero capital arbitrage. Flash loans enable an arbitrator to perform a large-scale arbitrage without needing any initial capital. The bot executes the buy low, sell high sequence, and then repays the loan plus a small fee, all in one automatic transaction, okay? And if the transaction fails for any reason, for example, as part of the move, the loan is automatically reverted, eliminating the execution risk. So the automated life cycle of an arbitrage trade. So opportunity scanning, right? We can go watch it. So the bot, right? Having a bot, especially as AI progresses and things like that, the bot continuously monitors real-time price feeds across dividends exchanges, calculating the net profit after all fees for every possible pair or triangle. And it seeks a spread that's going to be wider than the combined cost of trading and transferring the funds. 2, trade evaluation and execution, the trigger. Once a qualifying spread is identified, the bot initiates the simultaneous execution. And for interchange arbitrage, this means sending API calls to both exchanges at the same moment. And the execution must be extremely fast to beat other bots. And let's talk about the settlement and rebalancing, right? The closer. So after the trade fails, the arbitrage now has an imbalance of assets. For example, more Bitcoin on exchange A or less on exchange B. And the final step is often transferring the net profit back to the seller account and rebalancing the capital for the next opportunity, which incurs more fees. So the necessity of automation for arbitrage, the bot stack. Manual arbitrage is essentially impossible in modern markets. An entire process relies on sophisticated low latency software, written primarily in languages like Python or C++, and the API integration. Bots communicate directly with exchange APIs, application programming interfaces, right? That's what API stands for, to retrieve real-time order book data and submit orders. This bypasses the slow web interface entirely. And collocation. Professional arbitrage often host their bots physically close to the exchange servers, known as collocation, and to shave precious milliseconds off their network latency. And high-frequency data. The bot must process tens of thousands of market data updates per second to stay. And algorithmic sophistication, the net profit calculation. A good bot doesn't just look at the price gap and must factor in variable market maker fees, taker fees, slippage estimates, and potential withdrawal transfer fees to calculate the true expected net profit before initiating trade to make sure that's worth it. And the competitive landscape is going to be fierce as more capital flows into arbitrage, and the profit margins are driven closer and closer to zero. And this creates an arms race of technology and speed and execution efficiency. So, one, the execution risk, right? The closure. So this is the biggest threat. The arbitrage opportunity often disappears before the second leg of the trade is filled. If you buy low on exchange A, but the price on exchange B drops before your sell order executes, you are now holding the asset at a loss. This intended simultaneous nature of the trade hasn't failed. So two, slippage in the costs, right? Arbitrage profits are often less than 0.5%. If an exchange increases the trading fees, or if a large order causes slippage, which is filling at a worse than expected price, the small profit can instantly turn into a loss. And arbitrageurs must strictly track their trading tiers and fee schedules to make sure that the trade is going to be worth it before they put on some size. So, withdrawal and funding risk, right? The weight. For inter-exchange arbitrage, the capital needed to rebalance the accounts, right? So moving the final asset back to the original exchange can be tied for minutes or hours due to blockchain confirmation times or exchange enforced withdrawal limits. This is known as going to be opportunity cost. So, walking through a hypothetical Bitcoin trade, right? Let's say on exchange A, you bought low. Okay, let's say the Bitcoin USD price, 60,000, you have 100K available, $100,000 available. USD, fiat currency. Okay, on exchange B, you would sell high. Okay, on exchange B, the Bitcoin USD price is 60,050. Okay, and you have one Bitcoin available. And for the fees and the spread, for the trading fee on the each side, right? So trading fee, 0.1%, and the gross spread would be $50, right? So the buy cost on A, be buying one Bitcoin for $6,000, okay? Take the trading fee times 0.001, okay? So 60. Sell one Bitcoin for 60,050, okay? And then same thing with the other trading fee, that'd be 60.05, okay? 60.05 plus 60 is 120.05 gross profit, okay? And that's just gonna be the total fees paid, okay? So that's the calculations you do to get the fees, and then your gross profit would be $50, okay? The gross profit minus the fees, then boom. You see the arbitrage fail due to fees, making the trade not worth it. So sometimes fees can destroy your profit. So keep it in mind about that. Even if you're a day trader, spamming trade and stuff like that, especially if you're losing, can increase your losses. And certain fees depend on certain brokers or exchanges. So check them out, depending on whatever you trade on. It's not going to be the same everywhere. And arbitrage is only profitable when the gross spread significantly outweighs the total cost, right? The fees and the slippage, and the threshold must be met first, okay? So the evolving landscape and the challenges ahead. So the market efficiency. The long-term impact of successful arbitrage is the increase of market efficiency. Arbitrageurs in the pursuit of profit automatically correct the price imbalances, forcing the market to converge on a single fair price. Okay. So reduce volatility. By buying low and selling high, arbitrage stabilizes prices and reduces unnecessary volatility caused by large temporary discrepancies. And fair pricing is involved. And ensures that retail traders, which means just non-bank traders, just individual traders pretty much, are less likely to buy or sell at an artificially poor price. And the competition and innovation. From HVT to MEV, the focus has shifted from simple inter-exchange arbitrage to complex, low latency strategies like miners plus maximal extractable value, right? MEV, arbitrage on the blockchain networks. Blockchain is going to be the cryptocurrency network where people can go ahead and trade. Okay, it's going to go and check all the transactions and manage everything via smart contracts. Okay, so unlike a bank system where money goes from person to the bank where they confirm it, and then the person, cryptocurrency, happens to work on a person-to-person system, okay, making it one of the most dominant systems in order to send money or receive money. And as global crypto markets mature and become more interconnected, traditional arbitrage opportunities are shrinking, and success now requires cutting-edge technology, faster network access, and highly sophisticated risk management algorithms. And the race for speed continues to define who profits and who loses in the zero-sum game of crypto arbitrage. So, summary of arbitrage trading, right? Arbitrage is the simultaneous trading of an asset to exploit temporary price differences for risk-free profit. It's not speculation, but rather a corrective mechanism for market inefficiencies. If you have enough capital, then inshallah it'll be profitable. And types and methods. Okay, so we covered inter-exchange markets, right? That's the two markets, triangular, three pairs, okay, and one market. And DeFi, which stands for decentralized finance, using flash loans. And they're all highly dependent on extreme speed and technological automations. And the reality of risk. While theoretically it's risk-free, execution risk, high transaction fees, and slippage can easily eliminate the tiny profit margin, turning a potential gain into a guaranteed loss. And automation would be mandatory for success most of the time, inshallah. Okay, so I pray to God, keep grinding. If you want to learn how to trade cryptocurrency, head over to stackmode.net. Peace. Class, let's get into stack mode. Let's talk about 401ks and Roth IRAs. Let's put that money to the side and let our money grow into more money. Inshallah. Let's jump into it. Let's talk about how. So we're going to be understanding the fundamentals of retirement accounts and how they function. And we're going to talk about the difference between a 401k and a Roth IRA, the difference between their rules, the benefits of them, and the tax implications. And we're going to talk about some real-world strategies to maximize returns and employer benefits, and develop a step-by-step plan to begin investment for retirement with confidence. So what is a 401k in general? Okay. So a 401k is an employer-sponsored plan that allows employees to invest a portion of their paycheck before taxes. So say you're about to get paid $1,000, right, to your bank account. Instead, a portion of that, let's say $200 of it, would go into the 401k, okay, which is going to be a place where your money can turn into more money. Okay. So again, a 401k is an employee-sponsored plan that allows employees to invest a portion of their paycheck before taxes, and is designed to grow your wealth until retirement, helping you build financial independence over time. Imagine you earn $50,000 a year and decide to contribute 6% of your income. That's $3,000 annually going towards your future. If an employee matches 50% of that, you're getting an extra $1,500 for free. So understanding the Roth IRA in general. The Roth IRA is a personal retirement account funded with after-tax money, and it gives you the gift of a tax-free growth and tax-free withdrawals and retirement extreme advantage. So instead of losing, let's say you had, so taxes go by brackets, right? So taxes go by brackets. So the more money you make, the more you're gonna get taxed, okay? So let's say you're about to withdraw, let's say you have 500,000, right? And your 401k, say you have a really good paying job, right? Say you've been putting a really, really good chunk of your percentage income into the Roth IRA, right? Let's just say hypothetically, okay? Then, and I know certain things are capped at 8K a year, okay? So a lot of them, you can only deposit 8K a year and stuff like that for certain of them. But let's just say, for example, for $500,000, let's say you're about to withdraw that, okay? Then you would have to pay 40% on that normally, okay? And that's just I'd say 37%. Around 37% of that if you are about to withdraw like 500K, for example, okay? So, but if you make a lower amount and you withdraw a lower amount, then you're gonna pay like taxes. But still, you don't want to pay any taxes at all if possible. You want to try and get as much money as possible, especially if it's from your work check. So yeah. So you can withdraw contributions, not earnings, anytime without penalty. Okay, because you know from our job we already lose taxes or money from taxes anyways. So building a solid retirement plan. So focus on clarity. Okay. Small, consistent actions lead to major outcomes. Keep stacking up cash. It's the whole reason why I'm Stackmode Chris. I want to teach you guys, one, how to keep God first. Make sure you guys are praying. Make sure you guys are staying humble. And make sure you guys understand that you don't need too much, okay? Especially not right now, okay? There's going to be times where you're going to have time to pop it, okay? If you want to know what popping it is, there's going to be times where you're going to be able to buy the cars you want, okay? You can buy the houses you want. Okay, you can get the clothes you want. Okay, inshallah, if God wills. But we got to make sure that we're investing first. Put that money to the side. Don't go buy the Jordans and the cars, the houses, and the clothes now. Invest into something that's going to make your money turn into more money. Okay? So put some money to the side. Okay? Instead of getting the whole check from your job, put some more into your 401k. Okay? Put some into your Roth IRA. Put some aside. Stack it up. Let your money turn into more money. Money's a tool. I cannot stress that enough. Money's a tool. Don't be too attached to it. Even if you go flat zero, God got you. All right, keep praying, stay consistent, you can run it back up again, and don't give up. Promise you, I've gone flat zero plenty of times. Okay, trusted God, stuck to the process, and ran it up. Okay, gone flat broke, in debt, was managed to clear it. Okay, and just keep grinding. Okay, wake up, keep praying to God. Wake up, keep stacking up that cash. Okay. And I've learned from those lessons, okay? Learned to live way below my needs. Only groceries. I don't eat out anymore. I don't buy clothes every day anymore. Okay? I'm not buying steaks like that anymore. Okay? I'm in stack mode. Okay? I'm praying to God. I'm working out. Okay? I'm not going outside if I don't have to. And I'm working hard. I'm mastering my craft. When I'm getting paid, I'm putting most of the money away. I'm investing. Okay? Being grateful for the opportunity that God gave us, okay? And our body can only take so much, so let your money turn into more money so you can enjoy life, all right? Take care of your mental health, enjoy a trip with your family, enjoy a trip with your wife, your husband, and do what you need to do. Stay consistent and stay praying up to God and just keep grinding. I'm telling you guys, it's gonna pay off. When you save the money and you put it away, act like you're broke, okay? But have it all invested, okay? I'm telling you, if you act like you're broke and you just invest, it's gonna be amazing for your mental health. It's going to make you stay consistent. It's going to keep you hungry. It's going to make you a dog, okay? You're going to keep going hard at your craft. You're going to want it bad. You're going to be asking God for help in each and every scenario, okay? Stay consistent. Put the money away, invest it, act like it doesn't even exist. And I promise you, you're going to be able to run up that big bag. Inshallah, you're going to be able to take care of your whole family. Inshallah, stay consistent, okay? Stay out the bar. Stay out the club. Okay? Don't be doing things you don't need to be doing. Stay away from people who aren't being consistent. And keep going. You got people to take care of. I promise you. You're going to be feeling like the one when it's all said and done. Stay down. It's going to all make sense. Whatever you're doing, stay down with it. It's going to make sense. And then I promise you it's going to make sense in the end. Stay down with it. So, I don't care if you guys have $50 right now. Okay? Put 25 of it away and stay down. Okay? Live off the other $25. Stop spending the whole check. When you get paid, put it away. If you make $1,000, right, a check, pay your bills, okay? Take care of your groceries. Take care of who needs to be taken care of. Your kids, your people, husband, wife, whatever. Do what you need to do, okay? After that, right, make sure it's straight things you guys need to be taken care of. Nothing but bills. If it's not bills, forget it. If it's not bills, you don't need to be spending money on it. Take care of your bills, take care of your groceries, and then invest. You gotta act like you're broke. Stay down, okay? Invest right now. If you got $5, invest $4 and stay down with that $1 until you run it back up. It's the mentality. And even once you start touching 6 figures, 7 figures, 8 figures, 9 figures, you're gonna be in that stack mode mentality. You're gonna wake up, pray, go work out, put that money in the stash. Even if you make 50 grand, you're gonna go ahead and put 45 of it away. Live off the 5 grand, okay? Stay in stack mode. It's gonna make you guys stay consistent. And it's fun, because you can go to the stash and go pull an M out at any time. Stay down. You could wear the same fit every single day. You could drive a beater car if you want. But you know what you have in the stash. Don't let anyone break you guys down. You guys are good. Okay? Wake up, pray to God, and stay humble. Stay humble. Keep grinding. If you're not where you want to be, understand it's a marathon. You're not going to get it overnight. It's not going to happen overnight. There's plenty of times I've been grinding 18-hour days, thinking things weren't going to work out. And I'm telling you guys, if you pray to God and you keep going, there's a great chance that you're going to get what you want. Inshallah. If it's good for you. All right. God's the best of planners. Just keep going. Keep going hard. Stay down. Even if you see your portfolio on the reds right now, stay down. Okay. Ask yourself, if this is a good investment, okay? If this is something I want to be invested in, okay? And just don't give up, okay? Don't give up. Stay consistent. I don't care if it's your 401k, your Roth IRA, or individual portfolio. Stay prayed to God. Keep grinding. Review your portfolio and just don't give up. I'm telling you, it's all going to play out in the end. Stay consistent. Peace.
Inflation is back, and it's eating your savings alive. A dollar today buys less than it did yesterday. Government prints trillions, central banks scramble, and everyday people, they're looking for an escape hatch. Enter Bitcoin, the digital gold, the inflation killer, or so the story goes. But is it really a hedge? When inflation spikes, does Bitcoin protect your wealth or just add more chaos to the fire? Tonight, we rip open the data, the history, and the hard truths. No hype, no slogans, just the numbers and what they mean for your money. This is the showdown you can't afford to miss. Let's find out who wins, and let's see if Bitcoin is a real hedge against inflation. Inshallah, if God wills.
Okay, so let's go and let's talk about inflation versus crypto. And let's answer the question, is Bitcoin a real hedge against inflation? And this is going to be an online, in-depth analysis. Let's get into it. So what is inflation in the first place? Inflation is going to be the sustained increase in the general price level of goods and services in an economy over a period of time. And the key effect, okay, it erodes purchasing power. Simply put, your money buys you less than it did before, meaning that it's going to cost you more money for certain things than it did within the past. That's because sometimes the dollar loses value. Okay, so this is why people invest in things such as diamond, gold, and now we have things like Bitcoin, which is going to be a representative of kind of like a online version of gold. Okay, we don't completely know how much gold is available. We don't know how many diamonds are available either, but we do know how much Bitcoin is going to be available. And Bitcoin has a cap of around 21 million of it. Okay, so you know how much of it is going to be left available to buy, and the scarcity is already going to be implemented and set in stone, unlike certain other things like gold or diamonds. So, for example, let's talk about some inflation, right? The power of your money. So in 1990, right, a cup of coffee cost $1. So that means a $20 bill will buy you 20 coffees, okay? And in 2024, the same coffee will cost you $3.50, meaning that a $20 bill would now only buy you 5 coffees. Significant difference, okay? It might seem like a slight increase, going from $1 to $1.50, but it's actually a big increase over time, especially when it comes to real estate, apartments, houses, etc. You know, rent, mortgage, and stuff. Back in the day, houses were a lot cheaper. Now things are a lot more expensive, a lot more lucrative, and just changing in certain ways. So the main causes of inflation, right? So inflation comes from multiple factors. One, it comes from the fiat currency, and the fiat currency is going to be whatever government that you're involved with. Say you live in Thailand, then you're going to be working with the baht. Okay. If you're in China, then you're working with China's currency. If you're in the US, you're going to be working with the US dollar, etc. That's what fiat currency is, your country's currency. So inflation comes from demand pull inflation. So too much money chasing too few goods. This happens when strong consumer demand outpaces the economy's ability to produce goods and services. Okay. And cost push inflation. Production costs rise. This occurs when the cost of raw materials, oil, or wages increase, forcing companies to raise their prices to protect margins. And built-in monetary, okay, expectations and money supply. So workers expect higher prices and demand higher wages. It also includes rapid expansion of the money supply by central banks. Okay, so we're keeping certain things in context, okay? We know things can get expensive. We know things progress over time, but we have to understand why and how we can protect ourselves from this, okay? Investing is going to be a strong way. When you're investing within the future, your dollar is going to be a lot more worth your while. Money is a tool to generate more income, whether you're investing in ads, buying stocks, crypto, etc. It's a tool to generate more income, and use it as such, not just to consume. So the problem, why we need a hedge, okay? It erodes savings. Okay, the value of cash saved in a bank decreases in real terms. A $10,000 savings account loses purchasing power every single year that inflation is high. Once again, this is why investing is going to be your good bread and butter in order to counter this stuff. Okay, and discourages investment. High uncertainty over future inflation can make businesses and individuals hesitant to commit to long-term projects and investments. Okay, because they're going to be worried about, well, are things going to just get more expensive? Are things just going to keep increasing over time in a way that I'm not going to be able to handle? Okay, so that's when inflation throws in the mix in. So it's really a question of, okay, what can we do to counter this? And once again, it's going to be invest, inshallah. So it redistributes wealth. It disproportionately hurts those on fixed incomes, like retirees, for example. Okay, say someone's living off dividend income, okay, like an ETF, crypto ETF, or even just profits, right? As things get more expensive, your dollar is worth less, okay? That big giant trade that you hit, or your dividend income that's coming every month is then going to be just worth less since the economy is just going in a different direction. Okay, so we have to come up with ways of how we can keep our income afloat and what we can invest in to keep the money cycle always flowing. Okay, so it creates uncertainty, makes long-term financial planning extremely difficult for families trying to save for college or retirement, buy houses, and for corporations planning new factories, for example, as well too. A lot of factors that go into this. Okay, so what is an inflation hedge? Okay, so let's talk about the definition, right? So an inflation hedge is an investment asset that is intended to protect against the decreased purchasing power of a currency that results from inflation. And how it works. So its value should in theory increase or at least remain stable during periods of high inflation, preserving one's real wealth. Okay. And some traditional examples, right? Gold. Okay. It's a physical asset with a long history of a store value where you can create jewelry with it. Okay. Create companies with it. Okay, whether it's going to be a gold lending thing for something like that. Okay, whatever you want to do. Okay, horseshoes, whatever. Real estate. Okay, it's physical property, and the rents it generates tend to rise with inflation. That's why you're going to see your rent get higher and higher and higher sometimes in certain cases. Okay, and tips. Okay, Treasury inflation protected securities are bonds specifically designed to offset inflation in a lot of cases and scenarios. So, let's talk about the argument for Bitcoin as a hedge, right? The digital gold thesis. So it's a finite supply amount of Bitcoin. Keep that in mind. So mathematical scarcity is going to be implemented. The Bitcoin protocol strictly limits the total supply to 21 million coins. Unlike fiat currency, which can be unlimited, central banks cannot simply print more Bitcoin to fund spending. As we know, Bitcoin is created by power, POWs. So it requires a very extensive and powerful computer with a good graphics card in order to mine the Bitcoin, which uses a lot of power, okay? And decentralization is going to be into place. No central control. And it operates on a global distributed network outside the control of any single government or financial institution, making it resistant to national monetary policy failures, okay? And global accessibility. It's a borderless asset, so it can be traded anywhere through all countries at any time instantly. Very, very useful. And it can be accessed and transferred 24/7 across borders, acting as a potential escape from a rapidly devaluing national currency. And the argument against Bitcoin as a hedge, right? The risky asset thesis. Extreme volatility. A hedge is supposed to provide stability, and Bitcoin's price regularly fluctuates by 10% or more in a single day. This is the behavior of a speculative asset, not a stable store of value. And high correlation with stocks too. If you check out the Bitcoin chart and you look at the stock chart, very, very similar in a lot of ways. Okay. In recent years, Bitcoin has often behaved like a high-risk tech stock, a risk-on asset. When inflation fears spooked markets, Bitcoin often fell with the stock market. Okay, failing its one job as a hedge. So sometimes it can mirror the stock market or the S&P 500 or NASDAQ a lot of times too. So, in the lack of long-term data. So Bitcoin is only about 15 years old, and gold has been a store of value for a millennia, and there's no data on how Bitcoin behaves during a prolonged inflationary period, okay? And we've seen certain times like COVID in the past where it took significant dumps, but what changes a lot of things is the government getting involved. Now that the SEC and the government is able to have control and own Bitcoin in a manner where they can benefit as well too, I can see things going in a lot more positive direction, if God wills. So some head-to-head comparison, right? Let's talk about Bitcoin versus gold in the first place. So scarcity, right? Bitcoin, it's finite, okay? It's not infinite, it's finite, okay? It's finite. So that means that it's capped. There's going to be 21 million Bitcoin available. And gold, right? Gold is going to be physically scarce, okay? So some new discoveries come in as we explore more land within the earth and stuff like that too. But for the most part, gold is going to be scarce. And Bitcoin, right? Bitcoin's 15 years old. Gold, we've known of gold for like 5,000 plus years. Okay. And the volatility of Bitcoin can be extremely high, which can be a very positive thing if you buy certain dips as well too. So not all negative. And the volatility of gold can be relatively low, but gold year after year seems to be going up in a very consistent uptrend. And storage, as far as holding gold, right? You can hold gold as well too. You can buy certain ETFs, buy certain shares, or buy the gold futures as well too. But you can, for the most part, buy physical bars, buy jewelry, buy Rolexes, any type of watches, chains, etc. as well too, can be melted for more gold. Okay. And Bitcoin's going to be held digitally, can be held on a USB stick or a cold wallet as well too, in case you don't want to hold any of your crypto on the internet. And portability is very, very high. You can put your crypto anywhere. You can spend your crypto on a card too. You don't even have to send it over to your bank account. You could just get a card, depending on your crypto broker, send your crypto and spend your crypto like that. And portability for gold, it's going to be pretty low. Okay, it's pretty heavy for a lot of the times, carrying all those gold bars, and you got to know where to sell it too. So Bitcoin's going to be online. You can use your online money anytime, anywhere, and really help you out. Inshallah. I know there's been times where my bank, for example, has been doing maintenance at the middle of the night, and I really needed it, and I had to come in clutch and use some crypto. So thank God that was an option for me. Okay. So the primary use case for Bitcoin is going to be for speculation. Speculation within the trading environment means that you're betting on a certain direction. Okay. And for transferring, okay, for spending your money too. And for gold, right? You buying gold bars for store of value, for jewelry, or if you're just in the industry in general. Okay. So here's a real world case study here. The 2021 to 2023 inflation surge, right? What happened? So from 2021 to 2022, inflation in the US and Europe surged to 40-year highs, driven by supply chain issues and stimulus. Okay. And what did Bitcoin do? After peaking in the late 2021, Bitcoin's price crashed by over 70% during 2022, precisely when inflation was at its worst. Now, granted, it's not the best example to look at this due to the fact that at this time, there was a lot of laws and regulations and stuff that hasn't been completely passed yet. So we got to keep that into manner in case too. Okay, so not everything was as proper as it should have been right at the time of all of this stuff was occurring. Okay, so keep that in mind. Okay, don't forget about that. So now the government has a lot more control over things. So things have changed. Okay, so conclusion. What is Bitcoin, right? A nuanced view of it. So it's not a reliable short-term hedge, for example, right now. So the data clearly shows that it's too volatile and too correlated with risk assets, like tech stocks, for example, and mirrors the NASDAQ to reliably protect purchasing power month to month. So it can't really fight against the stock market, but it is going to be a good source of value to have due to the fact that it's a finite resource. Stocks, for the most part, are going to be and an available resource in an abundance. Is pretty much who has like the most of it. But Bitcoin, there is a limited amount. And Bitcoin, it may be a long-term store of value, right? The digital scarcity argument remains compelling. And once again, it gives you the ability to send money instantly across the world. That's a huge plus. You cannot do that with normal fiat currency. If you try to send a wire transfer to somebody in another country, it's going to be pretty difficult. But if you send it very crypto, it's instant, just like that. Very, very simple, very clean, very, very useful within the future. So over a 5 to 10 year horizon, it has outperformed fiat currency. And this is a growth and scarcity bet, not a classic inflation hedge. Okay, so keep that in mind. So some key takeaways from this class, right? Inflation. It's a persistent rise in price that erodes purchasing power, driven by demand, cost, and a monetary supply. And a hedge. It's meant to provide stability and protect value during inflationary times. Traditional examples include gold and real estate. And Bitcoin's pro argument is based on its finite supply of 21 million and decentralization, meaning that it's not controlled by a government body or entity. Okay, it's free for everyone to use, person to person, peer to peer transactions, making it a digital gold. And Bitcoin's con argument, right, is that it's extremely volatile in certain times and has high correlation with tech stocks, making it a speculative asset. And the verdict. Bitcoin has not yet proven to be a reliable inflation hedge, since once again it does mirror the economy, but we got to give it time as more laws and stuff like that get regulated and passed, especially in the short term. So it's better understood as a high risk, high growth asset class based on the concept of digital scarcity. Okay. So leave questions in the comments below. Stay prayed up to God. Keep grinding. And head over to Stackmode.net for all trading mentorship. Peace.
So if you lost all your money, you're at zero. It's happened to pretty much almost every single trader before. Okay. And I don't want it to happen to you again. Okay. It's going to be important to lower your ego, humble yourself. And this is why it's really important to get with God. Okay. It's really going to help us build consistency, waking up, praying every single day. Okay. Let's wake up. Let's work out every day. Okay. And let's transmute this pain and let's work harder, whether at work and or your business. Okay. So you should either be having one job and working on your business, or you could have two jobs. Okay. And then on the weekends, work on your business. Okay. Do what you need to do to grind. Run it back up. Don't stop. Keep pushing. No matter in any situation, you have to keep pushing. You can't stop. You can't let things get to you. You can't let things break you down within your mental. Okay. If you say you want this, if you say you want to be a profitable trader, if you say you want to put your family in a better position, we got to lock in. We can't be getting broken down. We got to bounce back, inshallah, if God wills. Okay, so here's going to be the full guide to financial and psychological recovery. We got to keep pushing forward underneath any circumstance. We can't stop. We can't let our emotions break us down. That's all just the devil. Okay, the devil doesn't want you to progress, but God wants you to progress. Alhamdulillah. Okay, so turn to God. Okay, wake up every day, pray, get yourself right, lower your ego. This is why you're blowing up your account. Why can't you just accept the fact that you're losing? Okay, if you lost a trade, get off the charts. Why are you trading over and over and over and over and over again? There's no point to that. It's time to transmute all of that pain, okay? Put it into more work, put it into your business, set your alerts at your key levels, and go work on your work and your business, okay? Why are you sitting there trading over and over again? Why are you sitting there taking 10 trades in a day, blowing up your account? How do you expect to progress? Okay, take one trade, risk management, and have some long-term investments, okay? Invest in shares. Okay, cryptocurrency, some long-term investments so you don't have to sit there trying to day trade every single day. The reason why you guys are also blowing up your account so quickly is because you're trying to day trade. All the money you've been losing trying to day trade, one, you could have put it into mentorship. Stackmode.net, the first call is even free. Okay, so I give you guys a free first call. And on top of that, there's just no reason to be blowing up your account in the first place, okay? Because all that money you've spent trying to day trade, trying to make profit, you could have been putting in long-term investments. And your profit would most likely still be positive today, and you'd still have a large majority of it. And so you'd be up and you still have your money. Okay, so focus on long-term trading too. Okay, it's not just all about day trading, zero DTE, futures, etc. Don't let that prop firm mindset destroy you. All right, let's go. So the immediate aftermath, the psychological toll, losing a significant amount of money in trading is more than just a financial event. It's a deep psychological blow, and you may experience a range of emotions, including shock, denial, regret, shame, and even a profound sense of failure. And it's crucial to understand that these feelings are normal and a part of the grieving process for your financial loss. Acknowledging this emotional state is the first critical step towards healing and recovery. So acknowledging the pain. Do not suppress your feelings. Allow yourself to process the loss without judgment. And this is a necessary emotional release that has to happen. And combat cognitive bias. Your mind might trick you into a get it back quick. Okay? Get it back quick. Okay, so pretty much if you lost some money, let's say you lost $200, okay, you might think, okay, I'm gonna go ahead and risk even more money so this way I can go ahead and get my $200 back and I can go ahead and end up profitable on the day. No, man, you lost. If you lost, you lost. You get off for the day, you plot out an even cleaner setup, you come back with even more logistical analysis and more of a good reason to put on a good trade. And until then, you're gonna wait. I don't care if it takes days, weeks, or months. Okay, you wait for a good setup. Don't just come on here and burn your money trying to fiend for money. Okay, wait days, weeks, and months. It takes a long time to get profitable. Okay, but it can happen now if you just plant yourself in the right positions. Okay, invest in things that have future value. Invest in things that put smiles on people's faces. Okay, some stocks just go up in a straight line year after year after year after year after year. You just have to do your research. Okay, so don't get tricked within the get it back quick mindset, especially day traders. Day traders, you got to control your emotions. You got to think more long term. Even if you make some profit off a day trade, think about how you're going to reinvest that back into a long term play. And recognize that this is a cognitive bias, specifically the recency bias and loss aversion. and this resists the urge to jump back in. So, conduct a brutally honest financial audit. So before you can rebuild, you must understand the full extent of the damage. This is not about self-blame, but about creating a clear picture of your current financial reality. And these detailed audit will be your map for the road ahead. So identify the full loss. Tally up every dollar lost. And this includes not only the principal, but also any fees, interest borrowed on funds, or opportunity cost. And categorize your remaining assets. List every single asset you still have, from checking account balance to the value of a car or your home. Okay, be meticulous and document your debts. Don't run from your debt. Okay, don't run from your debt. You know you got to pay it off. Okay, certain things that you might have piling off. I pray that you guys don't have any debt, but if you do, let's tackle that. Let's pay it off. Let's stay down. Let's get in stack mode. Okay, stay down, stack mode. Okay, get in stack mode for the rest of your life. Okay, only spending 50% of our income, keeping the other 50% in the stash. This way, after we pay taxes, we're still gonna have money left over in the stash, inshallah. So document your debts, create a comprehensive list of all your liabilities, credit card debt, personal loans, mortgages, etc. And after a $50,000 loss, for example, a trader might discover they only have $500 in their checking account and $2,000 in their savings account. They also find they have a $10K credit card debt occurred trying to recover the loss. Okay, so while they were just trying to make up for the money lost in cash, they were just spending money on their credit card debt. Okay, something that's happened to me, and I don't want you guys to go through that. It can be extremely daunting, extremely frustrating, and scary when you start seeing your debt pile up like that. So be financially responsible before you start trading, and don't trade with any money that you can't lose. So their audit reveals a negative net worth, but it also provides a clear starting point for a new financial plan. So focus exclusively on earning and saving. Stack mode. Okay, stack mode is about being a God-fearing, righteous individual. Okay, and it's about staying down. Okay, saving up your money, because we got people that's protecting and provide for. We can't be spending all of our money on stupid stuff. We got to be investing smart, growing our money, and making sure our money is always making us more money. Money is going to be a tool. Okay, don't use money just to consume. Use money as a tool in order to generate some more money. This way you can work, okay, less. Okay, so as you get older, you're not going to be able to work the same, but you still got to be generating some money. Inshallah, still going to be people that need help. Still might be family that need you. Still might be people to take care of. So your money needs to always be making you money. So use it as a tool and set up your investments. So for now, all trading activity must cease. Okay, if you go broke, if you lose all of your money, trading is stop. Okay, pause it. Your number one priority is to rebuild your financial foundation with stable, reliable income. And this is a period of accumulation, not speculation. So work on increasing your income. So every avenue that you can explore, whether it's working harder at your business, okay, trying to get monetized on certain things, okay, creating certain programs, lots of things you can do to generate wealth. Especially with AI, it's extremely simple to just choose a niche and jump straight into it and just work hard. Okay, so this can mean working more hours, okay, freelancing, certain businesses. Just do what you need to do to generate some more income. So create a strict budget. So develop no frills budget that prioritizes essential living expenses. So stack mode, right? So when you're in stack mode, you got to really be staying down. When you get older, you can't work 16, 18 hours a day. Okay, you're going to be too old, but you got to be using money as a tool still. You still got to be investing. You still have to be generating income. Okay, so this is why investing is going to be so important, inshallah. So while you're healthy, okay, invest your money, so then when you get older and you can't work as long hours, you're still going to be able to survive. You're not going to be down bad. Okay, I don't want you guys to be broke, okay, with no options and just nothing to really just say that you did on this earth. Okay, so please save your money and get in stack mode. It's important. So every dollar should go towards building an emergency fund and paying down high interest debt, and eliminate high interest debt. So use strategies like the debt snowball or debt avalanche to aggressively pay down credit cards and personal loans. And this is a guaranteed return on investment. So a deep dive into education and risk management. So once your foundation is stable, okay, you started clearing your debt, you got your money back on track, it's time to re-educate yourself. Your previous approach failed, so a complete overhaul is necessary, okay? Lower your ego, and you have to completely change everything. Restart your mindset, restart how you think about everything, restart how you approach the charts in life, okay? Completely overhaul your mindset. Quit things that you used to do, okay? Start doing some new things, okay? And this step is about replacing reckless habits with a structured, disciplined methodology. Okay, so here's a market study. So dive into the market history, economic cycles, and different trading philosophies. You can go ahead and read books. I have so many videos too, okay? And you can go ahead and check out how to balance your account. Okay, do your research. Okay, I also have an ebook as well too, free course, many of free videos. Please just do your research before you hop onto the charts, trying to throw some money at it or trying to make some money. Okay, because you might just end up losing some money, and that's really gonna hurt. So do your research first, please. Master your risk management. This is a non-negotiable. Learn to calculate your position sizing, set your stop losses. That's an area where the price is gonna go ahead and close out your trade automatically if it hits that certain area, okay, causing you to only lose a certain amount of money. And never risk more than 1 to 2%, especially when you're a new trader. But as you get better, you can go ahead and bump that up to 1 to 10% of your account. And a well-defined plan is going to be your roadmap for everything. It must include your entry and exit criteria, your risk-to-reward ratios, and a detailed list of rules that you're never going to break. So instead of day trading with leverage, for example, a recovered trader decides to focus on a long-term swing trading strategy in a single sector they've studied for months. The new rule is to never risk more than 1% of their account on a trade, ensuring that a string of losses won't wipe them out again. Okay, you're coming onto the market to make some money. Why are you coming into the market and going back to zero? It's not making sense. So you need to be focusing on the trades that are going to keep your account alive, and not the account or not the trades that's just going to make your account money. Okay, money is not always everything. Focus on what's going to keep your account alive. Focus on the safety. Okay, and that inshallah will transpire to profitability. So conquer your emotional demons. Okay, trading is going to be 80% of psychology. I've seen it firsthand. You can give someone the best levels and they don't close at take profit because they think it might go further. Okay, so psychology is going to be extremely important, and your perspective. So your biggest opponent is not the market, but it's going to be your own emotions. Okay, and a lot of times it's going to be the devil trying to attack you. So just pray to God, and just understand that it's just evil trying to decept you. Okay, anything that you guys might want to do to tempt you to do anything bad, it's all just evil. Okay, don't do it, because when you're crying afterward, when you're sad afterward, that just means that the devil got you. Okay, so don't be weak, be strong. Okay, and keep your head on. So you must learn to separate your personal feelings from your trading decisions too. Okay, so even if you take a big loss, even if you just went down to zero, don't treat people bad. Okay, don't treat people bad around you. Don't talk to anyone bad. Don't get emotional. Okay, I know there's some times when you take a loss, you can't even speak to anybody. Okay, I've had those days. I've definitely had those days, but you can't let the trading loss affect your real life. Okay, you have a whole life that God has blessed you with. Okay, there's still grass outside, still fresh air, etc. Okay, so even if you lose all of your money to trading, don't get depressed, don't spiral, and just manage your expectations. And understand that trading is going to involve periods of drawdown. Okay, and especially when you're first starting, if you go down to zero, it's okay. Okay, many people fail with their businesses, have gone down to zero, failed businesses, and I wish you guys just know how much trial and error it takes to actually be successful. Okay, this is why God is important, so you don't go insane. Okay, it takes an extreme amount of trial and error. Okay, so winning every single trade, that's an illusion. Okay, in hindsight, kind of not really. You are gonna lose sometimes, but it depends what you're trading. You can win like 99% of your trades though. I can say that confidently. So focus on long-term probabilities of your edge, not the outcome of a single trade. So start a trading journal. Okay, document your trades on YouTube, Notion, Discord, whatever. Okay, coming out with the app, Stackmode app, where you guys can also track your profits and trades too. Okay, so document every single trade, your profit, your loss, your entry, your thought process, how you felt, and the outcome of it. This is going to help you identify recurring mistakes and any emotional triggers, and practice unwavering discipline. Stick to your plan no matter what, and do not chase trades, do not get greedy, and do not panic. Discipline is the bridge between your goals and your execution. So start with paper trading too. Okay, you can paper trade on TradingView. A lot of brokers too allow it. And don't jump back into the market with large sums of money. Wait. Okay, play with small percentages of your work check, your business check, whatever. Okay, pay your bills first, get some groceries, and then whatever you have left over, start investing with. Okay, let that grow over time. And by this whole time, while you're playing with small amounts of money, you're gaining info. Okay, so say your business, something like that blows up, when it's time for you to get into the big bucks, when it is time for you to throw it into the market, you're going to be well informed and you're going to be all good. Okay, so alhamdulillah. Okay, so it's a lot better being in this position versus being somebody who has a lot of money trying to come into the market with no education and then losing it. Okay, because that can hurt. And even if that has happened, it's fine. Just run it up again, inshallah. So start with the tiny account, scale it up. If you can't grow a small account to a big account, you can't grow a big account to a bigger account. That's just the truth. So increase your position size when your account grows through profitability. Okay, be disciplined and don't just keep adding more capital in your pocket whenever you're making bad decisions. Okay, you have to grow your account. Okay, let it grow through discipline. So losing money can be the most valuable lesson you'll ever learn. It's definitely taught me a whole bunch, got me closer to God, made me realize how unstable I was in certain emotional aspects. I realized I was just extremely greedy. Okay, there'd be times I just wouldn't be satisfied with my profit. Okay, and that was leading me to spiral over and over and over and over again. Okay, leading me to take more trades than I need to, trying to chase more dollars, instead of just realizing if I would have just stayed disciplined, been consistent, then I would have gotten to the position of where I wanted to at the same pace anyways. So instead of trying to make $2,000 in one day, if you make $500 4 days separately, that's still the same amount. Okay, so just focus on the long-term vision. Okay, get rich slow, focus on the discipline, and confront your weaknesses. Okay, and rebuild your strength and your wisdom. Okay, God tells us to be reborn. And the journey back is not just about financial recovery, but it's all about personal transformation. And you're no longer the same trader who took on too much risk. You are a new, more disciplined, and more resilient individual. Okay, rebuild yourself back up and become a boss. Every boss has taken a major loss, and it's about bouncing back. Do you have that hustle in you? Okay, it's really gonna determine if you're built for this. Okay, if you have that hustle in you, you'll run it back up. All right, God got you. Don't give up. You got people to provide for. I love you so much. Head over to Stackmode Network for all trading and business education. Catch you in the next one. Peace.
Future trading can be a little tricky if you let it be. You only want to buy when buyers are buying. Try not to ever buy when sellers are selling. In this video, I'm going to teach you guys exactly how to trade pullbacks and how to buy when the buyers are buying and what to identify and look for. Let's go and let's jump into it, inshallah. All right, so here's going to be buying at the right time. You want to buy after sellers are done selling. So sellers need to sell first, and you want to buy when buyers are buying. If you buy when sellers are selling, you're going to go ahead and just get destroyed. Okay, if you're looking to buy at the right time, we have to wait for pullback. We have to wait for price to form an area of support. Okay, so playing pullbacks is going to be really, really important. And here's going to be the things we have to look at. Okay, one, you need to make sure that you're trading in a trending market. So if we're going to trade pullbacks, which is just price coming down, lower, and then going back up. That's all it is. So if price goes up, comes down, and then goes back up, that's a pullback. So you want to get on your weekly time frame ideally, or be on your higher time frames, such as your weekly, daily, or your monthly. And then we need to analyze the full chart. So I'm going to start off on my weekly here and get the full bird's eye view of absolutely everything. So I can see here on my weekly that price decides to trend upwards year after year after year after year, no matter what. Okay. We're still ending up at new all-time highs, regardless of how many dips that it's made. Now, the way that price works within a staircase manner. And in order for price to progress, it has to make higher lows. So that means that the new low that price just made is going to go ahead and be higher than the previous low that it made. If that's happening, then that means price is trending within an upwards direction. Okay. And you need to buy when price makes these areas of supports, also known as the higher lows. Okay, so I'm going to break down how we can time and what we're looking for. So you want to buy when market is down, so then you can profit on the sweep up. Once again, buy when market is down, so you can profit on the sweep up. So in order to do that, you have to be trading something that's trending in an upwards direction anyways. Okay, so get on your higher time frame, start off on your weekly, and look at absolutely everything. So on my weekly here, I can peep. We have this low starting from 2020. Okay, and I could see here, we have not stepped back here since. And I'm on my weekly here. So I can start marking from the bottom of this low. And I'm going to go through and mark all the higher lows up until current price, just to show you that price is trending. So I can start seeing price trending in upwards direction after it hit this 21,000 area here. Then price bounced super duper heavy. Okay, made another higher low here near this 26,000 area. Price came up, topped out right here. Okay, when price tops out, all it is making the left side of the V.
Then once price makes support, it's making the bottom of the V. Our job is to catch the right side of the V. So even right here, you could see price come up, top out at this area, and then come down. After it come down, stopped right here, then bottomed up. Okay, price stopped up here. Price came down, and then bounced up, stopped right here, came down. Okay, so this is going to be a whole area in itself. Got price coming up here. Looks like price stopped towards this top, bottomed out right here, and then kept going. Right here, came up, stopped at this red candlestick, pulled down, made a low right here. Stopped up here, pulled down, made a new low right here. Okay, then over here, price decided to get underneath the lows. Okay, made a higher low right here. So even though we fell all the way down right here, it's still higher than this low right here. Okay, so that's good. So this higher low is still valid. Price was deciding to come in the cut here. Decided to bounce at the same area twice. We just still see price just trending, doing this thing. Trying to make a low here. Kept trending up, kept trending up. Price came down. Okay. And this low is still higher than this low here. So we're still in an uptrend, regardless of how hard we're dipping. We're still in an overall uptrend. I have this low right here, this low right here, low right here. We can see price heading in upwards direction. Okay. Now, what is price hunting? Price is hunting these areas here. These areas of resistance. These are going to be the areas that price are hunting. Price can't make new all-time highs unless price breaks previous areas of resistances. So after market decides to pull back, okay, your take profit, ideally a lot of the times, is going to be an area of resistance above current price or an area of support above current price. So you want to wait for price to pull back, wait for sellers to stop selling. And once you've identified sellers have stopped selling, which you'll see, and a good indicator to know that sellers have stopped selling is going to be on either your daily or your 4-hour candlestick. After you see a candlestick make an abrupt stop on your daily and 4-hour, pay attention to the next candlesticks. If you're looking for a long trade, if price action decides to randomly stop in the bottom, and then you start seeing multiple green candlesticks going in upwards direction, then you know buyers are going to be buying. And ideally, you're going to be looking for around 2 to 6 daily or 4-hour candlesticks after an area of support was created. If you see 2 to 6 daily or 4-hour candlesticks going in an upwards direction after it makes an area of support, then that's how you know it's going to be true. Okay, and you want to be looking on your daily or your 4-hour. And you're going to be looking for 2 to 6. So even take this low right here, for example. Price decided to make this super low right here. Okay, and so here's the super cool thing. Market does all the work for you. You don't got to do too much. You just got to chill. Be patient. Okay. Pray to God and just live your life. So boom. Market made the left side of the V for us right here. Market came down. Sellers were selling. Boom. Made an abrupt stop. Okay. And here's how you know if it's true. The candlesticks afterward were multiple green candlesticks. So after that abrupt stop, I have 1, 2, 3, 4. Okay. So I went 4 green candlesticks on my 4-hour here. Okay. And then even on my daily, I would have had 2 green candlesticks at the bottom, and then I had 1, and then I could have entered on this candlestick here and caught the rest of the resistance fill. So let market make the left side of the V. Let market make the bottom of the V. And you can see if the bottom of the V is real, knowing and seeing what candlestick come afterward. Okay, take this example. You see price trending in a higher low scenario here. You see this low right here. Okay, price bottomed out. I'm on my daily candlestick right here. Okay, I'm on my daily. After it bottomed out right here, I'm looking for 2 to 6 candlesticks, either on my daily or my 4-hour. So I can see price made the left side of the V up here. It's about patience. It's really about patience. Market decides to come up, top out right here, and then fell all the way down right here. This is how I know that the bottom is real. Okay, I paid attention to the candlesticks afterward. Okay, so after this bottom got created here, and sellers were done selling, you could see 1, 2, 3, 4. Okay, 4 candlesticks. And as soon as we got to like this upwards direction, I would have liked that. So I probably would have entered around like right here. Stop loss below the daily candlestick supports. And then take profit at previous resistance from where price decided to fall down from. Okay. Because I could see price already made the ultimate support, and all I did was catch the higher low entry. So let's go and let's do a fresh example here and see if I can find the setup. So I'm going to pull up the micro Bitcoin. Let me analyze from start to finish. So I'm going to get on my weekly time frame here. Okay, great looking thing I'm looking at here, because we're not at all-time highs. So that's why it's a great looking thing. If you're at all-time highs, you can't long. Okay, you cannot long at all-time highs. Don't do it. Okay, because price always wants to be chasing an area of resistance above current price. That's going to give a reason for buyers to step in. If there's no resistance above current price, there's no reasons for buyers to step in. So only play pullbacks, okay, because then you're going to be buying when buyers step in. It's going to be extremely, extremely simple. So buy after sellers have sold. So I can see here from all-time highs, heavy aggressive selling has been coming into place these last couple of weeks. Okay, extreme selling to the downside. We met up near this area of support here. Okay, met up near this area of support here, and we're going to go ahead and see what this is going to entail. So on my weekly here, we have a red candlestick. Get on my daily here. So on my daily here, start seeing price try to curl up, but it's a lot of mixed match candlesticks. A lot of green, red, green, red, green, red, not the same color. Okay, if these were just straight green candlesticks for the most part, heading in upwards direction, then it'd be a lot more definitive. But in this case here, it's very, very spotty, not direct big candles. Right after like this low, for example, okay, heavy green candles, 1, 2, 3, 4 heavy green candles. Even after this one, kind of, we had a heavy green candle here, had to run one. But then after this higher low, straight green candles. This one here, we hit this low, and then a green candle, then a red candle, a green candle, and then kind of a doji, and then a red candle. So this one, I don't believe is fully ready yet. We could see this could be a higher low in the formation, and then we could see if maybe this low wants to hold or something. This low right here. Price seems to be trying to find itself some support here. Okay. So this is why we scale down to our smaller time frames, just to see things a little closer. So we're going to go ahead and have this. We have this super low here. We got a higher low than that. So as you can see from this higher low, the V did get filled in from right here. So that's really good. So we'll see about this V. All right, because we're looking for a setup right now. So on the 4-hour here, I see price. I actually like this a lot, honestly. Even if I don't take it to all the way up there, this area of resistance will be fine. Same thing with this area here. Okay. Even if I wanted to just take it to this one up here, that'd be fine. So I like this a lot, actually. This is what I've analyzed. Is price making higher lows recently? Yes. Bottom, up, pause, down. Okay, and the pause that it made down is higher than the previous pause. So this high is higher than this low. Higher lows mean staircase trending in upwards direction. Okay, and we're buying after sellers sold. We're buying after all-time highs dump. So I like this a lot. Okay, I see higher lows being in place, And I think this is a new low being in place. Why? Because I have one area of support here. And guess what? I also have a whole nother candlestick. Has me so excited right now. Boom. Whole nother candlestick. Boom. And I'm on my 4-hour here. Here we have 1, 2, 3, 4. 4 green candles headed in an upwards direction. So get on my daily here. I could wait for one more daily candlestick to be green. Like if this daily candlestick closes green, then I would feel comfortable for sure taking it up to maybe like at least this resistance up here. Honestly, I won't be scary. Play big, take profits. I would at least take it up to this resistance up here for sure. So I need at least one more. I'm going to be patient though. Patience is everything. Don't just get in and be like, oh, higher lows, because sometimes your lower time frames could be your worst enemy. So on my 4-hour, do I like it? Yes. But we don't tunnel vision. You know what I'm saying? We need the real thing in life. So boom, have this super low being made, higher low being made, and then another higher low being made. Okay. So I have 4 green candlesticks on the 4-hour. I like it a lot. Okay. I'm going to decide I'm going to close all the way up here at these 2 areas of resistances. Right here. This is where I want to close. Okay. This is the strong area of resistance. You see how price marked it and hit it twice? Definitely not for no reason. So strong area of resistance, price has beef with. So what I'm going to go ahead and do is you can either do this too. But yeah, you can analyze your higher lows. And I can get on my 15-minute here. Four-hour. Okay, so either going to be looking for like a tiny little 4-hour wick. Okay, because right now the 4-hour candlestick is red. So right now selling is in place. Okay, so I only want to buy when it's buying. Okay, so right now it's making a little mini V. So I believe this is the top of the V right here that it's making with these 2 resistances. Let's get on to the 15-minute. You see these 2? Okay. So you want to remember, you do not want to buy when price is selling. So you would not buy right now on the 15-minute and the 4-hour. Price is heading in a downwards direction. But overall, we're in an uptrend. Okay. But you want to be buying at the right time, though, is the thing. You want to be buying at the right time. So right now, sellers are in place. But overall, buyers are in place. Okay. So to get that specific entry, you can scale down to your 15-minute. Be like, okay, I could see these 2 areas of resistances. That's why price is falling down. Once you start seeing green candlesticks, or once you start seeing a green candlestick on your 4-hour or your 15-minute, then a lot of times that's how you know buying will be ready. But right now it's falling down from an area of resistance. I need to wait for these, wait for this candlestick to go from red to green to show me that buying is real again. Okay. I do not want to buy when selling is occurring if I'm trying to buy a pullback. That's just not what I want to do. It's not what you're going to be looking for. It's called a pull back for a reason, because you're expecting it to go back up and it's just pulling down for a second. So right here, sellers are in place. Red candlestick, price is heading down even on the 15-minute. Okay, now if I'm on my 4-hour and I get a red to green candlestick, then I would feel a lot more comfortable going ahead and to enter. Because price might want to honestly fall down a little bit lower. I could get a little bit lower entry and save myself on some drawdown. But if this red candlestick were to go from red to green, that means buyers were to go ahead and be in place. And then from there, I should be able to go ahead and you can have your target all the way up there, for example. And then, you could do your stop loss under here. And this would be, give me about a 1 to 3. Okay. So this would be about a 1 to 3 here. Extremely profitable trade. Really nice trade. So catching your setups is about taking your time, really. It's about just seeing what you need to see. So I'll do one more setup here. So I head on my weekly. Now mark out all-time highs, because this is going to be the most obvious place that we've recently fell from. So I'm on my weekly. Okay, not quite all-time highs. It's going to be over here. It's exactly what we get on the weekly. You want to zoom all the way out, see all the price action you can. That's going to be all-time highs. Then from there, I'm going to go ahead and put a line down at this new area of resistance here. Okay, the area of resistance where we're recently falling down from. I could see price making higher lows. Price has a super low here. And I could see higher lows being put in over time, which means that we are headed in a upwards direction. Okay, we're trying to get up here to all-time highs. So this is what I analyze here on my weekly. So on my weekly right here, the current candlestick is red. So we would not be buying right now. Okay, we would not be buying right now because we're currently selling at the moment. So we want to see if there's any reason why. Yep, I can see exactly why we are selling. So try and analyze why price is doing it, what it's doing. It's the price doesn't just do stuff randomly a lot of the times. As you can see on the weekly, I have this area of resistance here. You'll be able to see it a little clearly on the daily. This area of resistance is linked to this new area of resistance that just got created. So that's why price is falling in a downwards direction, logically. Now let me head over to my daily here. You're going to be able to see the curl a little bit closer here on the daily. Okay, price at the area of resistance that it matched with over here. Okay, price did some break and retest. Price came down and then wicked back up to the specific black line and then tanked down. Okay, so this is a very, very nice area of resistance that price likes. So we need to get back to this area though. So now this is so simple. It's the easiest way to play pullbacks. Just wait for sellers to sell first. So you can see that's why sellers are selling. Price at an area of resistance. So right now sellers are selling straight red candlesticks on my daily time frame with it right now. I'm waiting for price to bottom out. Okay, and this is the easiest way to not get faked out. So people got faked out on this candlestick, for example. And let me head over my 4 hour. Okay, so this candlestick right here, people bought this. The price decided to wake up and people probably thought they caught the ultimate bottom. You never want to try and catch the ultimate. Okay, you want to catch the higher low entry. So check it out by staircase. You see how this low is here? And then you have this low. Then you have this low. If I zoom in, I have this low. This low. This low. This one. Okay. So we could see price dumping in and making each of the higher lows. We'll go ahead and start it from all the way over here. Got price all the way down here. Support. Higher low. Another higher low. Price continues to just go in an upwards direction. Okay, we got these areas of support here. Mixed with this one. Mixed with this. Trending. All we're doing is buying the bottom higher low entry. Exactly, yes sir. That's all we got to do. Just buy the bottom entry. You see how these two supports over here are correlated with each other? Very, very cool. Let's check this out. Check out this higher low right here with the recent higher low that we just did. And then we're still trending in the upwards direction here. I'm on my 4 hour right now with it. You can see we came down a little bit. Still, this low is higher than this low. And then we decided to trend up again and continue the higher lows. As you can see, we're filling in multiple of these. Each one of these pullbacks are a trade. Each one of these pullbacks are a trade. Boom. Pullback. Pullback. And it's the same parameters every time too. No. So boom, pullback. So now we just need price to bottom out at an area. And we need 2 to 6 green candlesticks. And once I start seeing that and price filling in the right side with some green candlesticks going up, I'll catch the right bottom. Okay. But right now, I'm going to wait. I'm going to wait. People probably got burned right here with these candlesticks. Yep. But if you get on your daily here, we only have 1 candlestick. So this is why you need your daily. This is why I say 2 to 6. So that's why your daily and your 4-hour is really important. You can't just tunnel vision on your 4-hour. You need 2 to 6 candlesticks on your daily and or your 4-hour. Okay, so right here, it was only what, 1 green candlestick on the daily probably, and then another one open red. So if we have 1 green candlestick on the daily and another one open green and we're heading in an upwards direction, I'm taking that. Stop loss below the lows, taking it to the highs. Gotcha. So a lot of the times I'm overnighting. So I'm always overnighting actually. So each one of the setups I'm overnighting because I can just focus on my higher time frames, which is the real bread and butter. And yeah, and that makes it really, really easy. And that's going to be how you can play pullbacks.
Here's what a smart contract is, and here's how it applies to the cryptocurrency world. Let's go and let's jump into it. The fundamental concept. It's a digital agreement. At its core, a smart contract is a self-executing contract with the terms of agreement between the buyer and the seller being directly written to lines of code. The code and agreements contained therein exist across a distributed, decentralized blockchain network. Decentralized means that it's pretty much going to be a network with no middlemans involved. So say you start to send currency from one person to another, typically with the bank system, the bank would have the jurisdiction to confirm the transaction or decline it. On the blockchain system, transactions go from one person to another, and everything is autonomously done via the smart contract system. And this simple yet powerful mechanism removes the need for a central authority or intermediary to enforce the contract. Think of it as an if-then statement, but one that is enforced by a network of computers, and if X happened, then Y is automatically executed. And this logic is hard-coded and cannot be changed once deployed. For example, a simple smart contract might say, if a product arrives at the buyer's address, then release payment from the escrow account to the seller. And this transaction happens automatically and without any human intervention, contingent on verifiable data. So some key characteristics, why they matter. So the properties of smart contracts give them significant advantages over traditional contracts. And these characteristics are fundamental to their value proposition. So they're smartless and trustless and transparent. Okay, so parties don't need to trust each other. They only need to trust the code. And the code is publicly visible on the blockchain, so anyone can audit it before engaging. And immutable. Once a smart contract is deployed on the blockchain like Ethereum, its code cannot be altered. And this ensures the integrity of the agreement and prevents tampering. So this prevents anything like from hacks, database stuff, everything works a lot differently due to the fact that everything is done by code. Okay. And it's autonomous. The smart contracts are designed to be self-sufficient, and once the conditions are met, they execute automatically without any human intervention, and they're essentially digital agents. And secure and enforceable. The cryptographic principles of the blockchain ensures that transactions are secure and the terms of the contract are enforced. It's computationally impossible to break the agreement. So how do they work? Here's a step-by-step breakdown. So understanding the flow is crucial to grasping the power of smart contracts. Here's a simplified view of the process from creation to execution. So step 1, coding the agreement. So a developer writes the terms of the contract in a programming language like Solidity for Ethereum, for example. And they define the rules, conditions, and actions of the contracts. So then they deploy it. The code is then compiled and deployed to a blockchain network. And this costs a small fee, also known as the gas fees. And this makes the contract code and public address public and immutable. In step 3, it awaits the execution. The smart contract now lives on the blockchain and it passively awaiting an event or an input that triggers its logic. In step 4, say something triggers this event. A specific event such as receiving a certain amount of cryptocurrency or data from an oracle, also known as a data feed, it triggers the contract's logic, for example. And then step 5, autonomous execution. The code will then run automatically based on the if-then logic, just like in code, and it'll perform the predefined action, such as sending funds, issuing a token, or updating a record, depending on whatever was requested by the user. In a practical analogy, the vending machine. The best way to understand a smart contract is to compare it to a real-world vending machine, and the parallels are striking and make the concept very easy to grasp. Thank God. So you and the user, so you represent the counterparty in a transaction and your money. Okay. So practical. So this is the currency that you send to the smart contract. Okay. And the vending machine. The vending machine is the smart contract itself. It's a programmed autonomous machine. Okay. So think of the vending machine, okay, displaying out cryptocurrency snacks, okay, and controlling everything. So one vending machine controls all the cryptocurrency transactions, distributes everything, and controls all the funds and the money flow. So the if-then logic. So if you put $2, then the machine dispenses the soda can, for example. The machine will automatically perform the action without an intermediary, okay? So it's automatic, okay? It's no someone being like, okay, you want a soda? It's not the drive-through. Be like, can I get a soda? Yeah. And then if they don't have it, they don't have it. Okay, the vending machine, if it's right there and you put in that dollar, you're going to get what you want. And that's why cryptocurrency is so powerful, okay? It's really innovating the future, giving us our instantaneous dollar and giving power back to the people, okay? So the machine automatically performs the action without intermediaries, okay? If you try to pull out 100K from the bank, most of the time they won't have it. If you try to withdraw 100K crypto, it'll be pretty much instant, okay? So, inshallah. So it's a self-enforcing agreement. So you don't need to trust the human to give you your drink. You just trust the machine's code, and this is exactly how a smart contract works. So real-world use cases beyond cryptocurrency. The smart contracts are no longer a theoretical concept. They're being implemented across various industries to automate processes, reduce cost, and increase security. So finance, let's talk about DeFi, also known as decentralized finance. So smart contracts power decentralized finance, and they can be used for automated escrow services, lending protocols, and creating financial derivatives. For example, a loan contract that releases collateral if a user defaults on a payment. Okay, and let's talk about some supply chain management. Smart contracts can track goods from manufacturer to consumer, and when a product reaches a certain location, the contract can automatically release payment to a supplier, ensuring transparency and reducing fraud. In real estate, they can automate the transfer of property titles, removing cumbersome paperwork and expensive intermediaries like lawyers and brokers. A contract could automatically transfer ownership once all conditions like payment are met. In healthcare, they're also beneficial here. Small contracts can also manage health data with heightened privacy. A patient can grant a specific doctor temporary access to their records via a smart contract that automatically revokes access after a set time, so they don't have unlimited access to the information. Voting systems. Secure and transparent voting can be implemented using smart contracts, and each vote is recorded as an immutable transaction on the blockchain, making it impossible to tamper with and allowing for a verifiable count. So advantages, the benefits of automation. So adopting smart contracts offers compelling benefits that address many of the inefficiencies of traditional banking systems. So efficiency and speed, this is going to be my favorite portion of cryptocurrency. I like how fast everything is. I like how you can get your money instantly. I like you can withdraw. I like you send it to whoever you want, whenever you want, as quick as you want. Okay. And all you have to do is wait for it to get confirmed on the blockchain. Okay. Once this is confirmed, a lot of the time, it's going to go ahead and be on its way to the wallet. Okay. And once it's in the wallet, whoever has received the funds can go ahead and do whatever they want. Okay. Whether they want to go ahead and withdraw it to their bank account for fiat currency, or they even have what's called like Coinbase cards, for example, okay, where you can go ahead and spend your cryptocurrency on a card. Okay, so many different things you can go ahead and use in order to spend your cryptocurrency. It's a really beautiful time. God is great, and it's time to take advantage of the future. So smart contracts eliminate the need for manual paper-based processes and intermediaries, dramatically speeding up transactions and business operations. So if you're trying to send money from somebody in another country, say by PayPal example, sometimes the funds might get put on hold, okay? And sometimes that might affect you, okay? And the whole can be normal that they're trying to verify transactions and stuff. But cryptocurrency, say you have really tight bills to pay, okay? You got to pay it right now. Cryptocurrency, you're going to be able to get your whole funds amount, okay? And you can potentially pay with your crypto card. Okay, so it can really help you and save you in situations where fiat currency isn't going to be the best of situations as far as certain hold times and wait times. With cryptocurrency, you can also get paid on the weekends too. With fiat currency, unless you do Zelle or Cash App or something like that, you're not going to get like a deposit really hitting your account. That's not Monday through Friday a lot of the times. Sometimes Saturday. Most of the time, most people, most banks, deposits will hit your account Monday through Friday. Okay? So security and trust as well too. The decentralized immutable nature of the blockchain protects against fraud and data manipulation. And once an agreement is coded, it's enforced by the network, not by a single party. And cost reduction. By removing middlemen like lawyers, banks, and brokers, smart contracts can significantly lower the cost of transactions. And we're talking about accuracy and transparency. Automated execution reduces human error, and the terms are publicly visible, and the outcome is verifiable by anyone on the network, creating a fully transparent system. So lots of uses with autonomous contracts, and under the cryptocurrency world has definitely been a big use to me, thank God. So limitations and challenges, the path ahead. So while powerful, smart contracts are not without their limitations, and it's important to understand that these challenges come with their own ballgame. So let's go and let's understand it. So they can come with bugs and vulnerabilities sometimes. Code is law. It's a double-edged sword. If there's a bug in the code, it's immutable. And what a bug is, it pretty much just means an error. It's immutable and malicious, okay, which means it can be susceptible to hackers, okay, which means people could potentially lose money, which is definitely bad. And actors and hackers can exploit it, leading to irreversible loss of funds. Famous examples include the DAO hack, for example. So legal uncertainty. The legal status of smart contracts is still evolving, okay? The SEC has definitely been working on stuff, and the future of cryptocurrency is looking bright, though. So, and can they be enforced without a traditional court of law? You know, the government, as of recent, as far as the United States, has been purchasing cryptocurrencies and stuff like that. So I do believe the future of cryptocurrency could be strong, inshallah. Some scalability issues. Many current blockchains like Ethereum can only process a limited number of transactions per second. This can lead to network congestions and high fees, making some smart contract applications pretty much impractical. And Oracle problem. Once again, these are things I think that can go away within the future, inshallah, especially as the networks decide to get bigger, more people collaborate on it, and the whole space just grows. An Oracle problem. Smart contracts can only access the data on the blockchain, and to interact with the real world, they need oracles. Secure third-party data feeds, and if the oracle is compromised, the entire contract can be compromised, okay? So oracles are secure third-party data feeds. So the future of smart contracts. This technology is constantly evolving, and future developments are focused on addressing current limitations and expanding their capabilities. So some layer 2 solutions. Technologies like optimistic rollups and ZK rollups are being developed to improve scalability and reduce transaction costs on networks like Ethereum. And cross-chain functionality. As more blockchains decide to emerge, more people decide to innovate, smart contracts will be able to interact seamlessly across different networks, unlocking new possibilities. Okay, so God is good, okay, creating a system in order for us to just trade all our currency all across the world simply and easily. Inshallah. So self-evolving contracts. Researchers are exploring ways for contracts to adapt and upgrade themselves in a decentralized way to fix bugs and add new features. So always innovating, always working on it. And that's what smart contracts are. If you guys are struggling with trading, head over to Stackmode.net. If you just want to learn how to trade cryptocurrency, stocks, futures, whatever. Or if you're just struggling with discipline, whatever, head over to Stackmode.net. Stay prayed about God, keep grinding. I'll catch you in the next one. Peace. All right, class, we've all heard about passive investing, how we can live off our money, just making this money infinitely and forever. Let's talk about one of the most popular ways of how to invest and how to live off passive income through what's called dividend investing. Let's jump into it. So let's understand what the core is and what are dividends in the first place. So let's break down the definition and the mechanics of a dividend. So a dividend represents a distribution of a portion of a company's earnings decided upon by the board of directors to its shareholders. And it's essentially a reward for owning a piece of the business. So shareholders pretty much get rewarded for investing into whatever ETF they invested to, whether it be SCHD, BTIC, QQQI, any dividend that you invest to, which is going to be a bundle of stocks essentially. And instead of just investing into one stock individually, you could buy a ETF which pays out dividends, and certain stocks pay out dividends as well too. And they pretty much give you your money back for investing it. They say, hey, thank you so much for investing into us. Here's some money back. Okay, so you can use that into an infinite loop and invest into that and live off the passive income. Okay, so it's essentially a reward for owning a piece of the business and the investment. So it's a source of income. So unlike capital gains, which is required when you're selling a stock or when you sell at the highs, Dividends are going to be more of a direct cash flow, and they're often paid quarterly. And this creates an immediate tangible return on your investment. And they're on a fixed payment schedule. There's some dividends that pay annually, once a year, quarterly payments, which are going to be between January, April, July, and October. Okay. Some companies and ETFs pay monthly, and some pay semi-annually or annually. And the key is going to be consistency, depending on the type of income that you're looking for. Do your research before you invest in any type of dividend ETF or stock to see what type of cash flow you're going to be getting. Okay, you don't want to be investing in something and see one ETF or dividend pays out every month, and then you invest into something that pays out once a year, and you're not getting the cash flow you expected. All right, don't just ride somebody else's wave. Make sure you guys are doing your educated research. There's so much free information out there. Head over to Stackmode.net if you need some more investment education. So let's talk about some tax implications, right? So even though dividends can be reinvested, right? So let's say you are getting $5,000 a month from a dividend, right? That dividend money is still taxed. So even if you reinvest all $5,000 of it back into whatever stock or ETF you invested into to get the money in the first place, it's still going to be taxable. Okay, so keep that in mind. Break down your income. Make sure you guys are putting a percentage away of your dividend income away so you don't get taxed, Uncle Sam. You pay your taxes by the year. So let's talk about some declaring dividend dates, right? So the crucial dates include: 1, the declaration date. The declaration date is going to be when the board announces it, and the ex-dividend date. Okay, the cutoff to buy and receive the dividend. That's what that date is. And the record date. That's the shareholder list check. And then we're going to have the payment date, which we're all looking for. Okay, the payment date is going to be when the funds hit your account, and you can go pay your bills, pay your debt, or go ball out, take your family on the trip, do what you need to do. Okay, and you must own the stock or dividend ETF before the ex-dividend date to qualify for the payment in the first place. So the power of compounding, right? Your wealth engine. All right, so look, if you're in your bag for, say, a couple of years, you're grinding hard, okay? You're waking up, you're praying, you're working out, you're grinding your business. Say you run up a couple of M's within, I'll say, 5 years, 1 to 5 years, you run up around 1 to 5 M's. You could put 2 of those M's into an ETF, stock, etc., and potentially live off of that passive income forever. You'll be getting around $5,000 to $10,000 a month. There's no reason to ball out, start spending $100K a month. There's no reason to live that, that crazy. Stay down, you can still take your nice trips, and you could pay all your bills and live in a pretty nice house for $10,000 a month. And that's just that income alone. Okay, so you can leave your business income alone, leave it for your kids, leave it for your family, your husband, wife, family, grandma, whatever. Okay, and then stay down, pay your bills, make sure you put money away for taxes though. Pay your bills, do what you need to do, pay your mortgage, rent, whatever, with that dividend income, okay? Because we're only getting older day by day. Tomorrow's not always promised, God forbid, there's gonna be things like sometimes people go disabled, So we wanna make sure we can still feed our family if any situation occurs. So what we're gonna do is plant these seeds now, today, okay? So even if you go disabled, even if you die, your family can still be eating, because of the fact that you planted your seeds. Okay, so stay down, you don't gotta pop it. Save, save a little bit. Sometimes it's not time to pop it. It's not time to be outside. Okay, if you work outside, eat at your job. Okay, if you can, any type of food court, try not to spend any type of external money. Okay, try and get what you can, any type of discounts, go back in the house. Okay, if you work in the house, no DoorDash, no Instacart, no none of that right now. Okay, let's try and stay down. And if you are gonna DoorDash, don't DoorDash individual meals. It's something my wife really helped me out with, okay? I was realizing how much money I was spending on individual meals, wasting my time, wasting my money, when that could have been going into some Bitcoin, going into some dividends, etc. Okay, making that income grow. Okay, get some groceries, buy 1 bundle of groceries, okay, a couple times a month, and your income is gonna be spread out a lot more strategically, I promise you. All right, so think about it. Reinvest your dividends as well too. Okay, so once you start stacking up some cash flow, don't get fancy in life right away. Okay, that's something that could really hold you back. Okay, once you start getting financially free, once you clear that debt that's been haunting you down, as you guys been waking up praying to God to just go away so you can increase your income. All right, once you pay off that car, okay, once you get the debt off your back, please don't immediately go get fancy with your life and put yourself right back in the hole. Okay, use the dividend income and stack up. Okay, stack up, get some reserve for yourself. Okay,
and take that dividend income and replace the bills, even if that's the case. Okay, even if you guys are getting $400, $300 a month from dividend income, that's your car note now taken off. Now you have $400 extra to either A, put it into some business. Okay, you can go donate, do what you need to do, take care of your mom, take care of your family. That's some more grocery money, or put it into some Bitcoin options, futures, Forex, whatever you want to do. Okay, just the fact that you have that money stacked away though into something paying you out a consistent dividend, you're not going to get bills chopped off. The more bills you have chopped off, the more free cash you're going to have to play with. Okay, the more you can help your family out, do what you need to do, and just stand on business. Okay, if you want to go put some money into your business, do that. Okay, get some more income flowing, then take that income, increase your dividend income, and that way you guys can pretty much live off of doing nothing. Okay, if you have a month where you know what, say be like, I've been hustling hard, I just want to focus on myself, I just want to get closer to God, I want to work out, okay, I want to start just working on myself. Okay, you guys can do that. Okay, you could take 3 months off because you're going to be good. You planted your seeds in the dividend income. Okay, you're getting that money every single month. Okay, you could take time, get closer with your family. If any situation happened, okay, you guys are feeling like you're not as close as you need to be, you could take a break. Okay, you could pause, and rent's still gonna be paid, mortgage is still gonna be paid, and you're still gonna be putting money in the stash because of the fact that you had that money planted in the dividends. All right, so make your decisions. Okay, do you guys want to go ball at the mall? Okay, or put that money into some dividends. Okay, because I'm telling you, if the more you invest today, the more you stay down today, your future self is gonna thank you. Okay, because sometimes life's. Okay, God definitely throws some curveballs. Okay, there's going to be times where, God forbid, people lose jobs. Okay, things like that, stuff happens. Okay, sometimes businesses crash, websites shut down, etc. Okay, certain TikTok bans, certain creators couldn't post then, and that was a big major source of income. So what we want to do is prepare for any type of situation so our family and ourselves are not in jeopardy if things hit the fan. Okay, so saving money and investing, it's not just trying to make money, it's survival. Okay, it's survival. Because not everyone has family they can depend on. Not everyone has people they can depend on to go to their house if something hits the fan, or if they happen to not have a place to stay. Okay, so what we want to do is always protect ourselves. All right, so money is going to be survival. Okay, don't just think of it as luxury and leisure items. Okay, protect yourself and protect your family. You don't want to have them starving or have them getting fed by somebody else's accord because you're not hustling, because you're not staying down. So be the one who stands on business. So dividends are also going to be extremely effective during flat or declining markets. And dividends provide a consistent positive return, and they help mitigate overall portfolio losses. And they offer psychological and financial cushion to keep you invested. So you guys can honestly just stay down, invest in the dividends, stack up your cash flow. Okay, if you feel like market's at all-time highs, you can buy some dividends. Okay, you can buy some dividends and you're still going to be stacking some type of cash flow essentially. Okay, and the power of compounding, guys, I'm telling you, okay, the power of compounding is going to be extremely, extremely essential. Do something every single day, stack up those wins. Okay, and we're going to talk about drips, right? Drips are going to be extremely important, and that's pretty much just taking the dividends and reinvesting it back into the dividends. And they just automate the process of buying low, fostering consistent investments, and taking those dividends and reinvesting it back into those stocks, ETFs, whatever you bought. Okay. And the inflation hedge, right? So investing in companies that constantly raise their dividends, which means they're getting paid. Okay, if a company's raising their dividends, that means one, they're putting smiles on people's faces because one, people are using their products. So the more people know that companies using their products, one, the more taxes that go to the government, the more the United States government benefits, the better. Okay, so everyone wins when these stocks go up in an upwards direction. Okay, don't just think, oh, stocks are just going up to go up. No. Okay, a lot of these companies, Amazon, for etc., okay, that you can go trade right now, employ hundreds of thousands of people, Microsoft, Google, etc. Okay, so these are really, really important companies that put food inside of people's stomachs. Okay, these companies pay people salaries, help them live. So think about that. Okay, that's also why we don't really want to ideally short the stock market in a lot of times. A lot of ETFs you'll see will be very, very consistent, especially if they pay out consistent dividends. Okay, they're going to consistently go up in an uptrend due to the fact that the economy is just a lot more beneficial as long as stocks are going in an upwards direction. That means more jobs for people, less homelessness, less government downfalls,
due to the fact that we don't have enough money to pay certain funding, things that need to be paid, such as government branches like the CDC, etc. Okay, which would mean less jobs. Okay, so the more money the government has, the better. Okay, because the less scientists we have, the worse for the world in general. Okay, we got to figure out what's going on. So understand that stocks, the higher they go up, the more it literally affects how the world functions. Okay, so thinking of things logically and extremely literally is really going to change your perspective. So evaluating stocks, right? The essential dividend metrics. So how to determine health and sustainability beyond the yield. So before investing, you got to assess a company's ability and commitment to pay and grow its dividends. And these metrics are fundamental screening tools to avoid yield traps. All right. So dividend yield percentages, annual dividend per share / the current share price. So while it's tempting, never let your yield be your only factor. Don't just be only looking at it. Okay. You got to focus on, is it consistent? Okay. You can't just focus on how much it's paying out, because it could pay you out a lot in a 3-month span, and the next thing you know, it's gone. Okay. And then your reliable source of income is not dependable anymore. Okay. So high yields are often a warning signs. Careful. Focus on the payout ratio. That's going to be a big safety check. So automating growth, right? Dividend reinvestment plans. Let's talk about DRIPs again. So leveraging the power of zero cost reinvestment. A DRIP is a service offered by companies or brokerages that allow you to automatically reinvest your cash dividends back into the same stock. So you don't got to worry about nothing. Okay. Money's going to go right back into the dividends, making your cash flow infinite. And it's often commission free, including fractional shares. And let's talk about fractional shares, right? Maximize. So DRIPs ensure that every penny of your dividend is put to work immediately, maximizing compounding efficiency by buying tiny portions of shares you normally couldn't afford. And automated dollar cost averaging, right? DCA, dollar cost averaging, is really going to be just the good way to stack cash, guys. Okay, put a good amount away that you have after your bills, groceries, etc. Okay, and just keep stacking cash, keep dollar cost averaging, keep stacking up, get into stack mode. So since shares are bought at regular intervals, right? That's the payment date. Regardless of the price, DRIPs are automatically implemented into the dollar cost average, okay? Reducing the emotional risk of time in the market. So you know how much you're going to invest. Okay, just put yourself on a consistent plan, because I promise you, a lot of the times within like a 5-year span, yeah, you'll see positive returns. Okay, now buying at all-time highs though can be a little bit different, but if your goal is just dividend incomes, then just keep reinvesting. So exponential share growth. The number of shares that you own grow exponentially over time, which in turn accelerate the growth of your dividend income stream. And you literally get paid to increase your ownership stake. Okay, so think about that. So most brokerages allow DRIP commissions fee. You go into the settings. They can be a little hidden sometimes, but you can find it, I believe me. And they make it a highly cost-effective way to build with over time compared to manual purchases. Okay, so instead of going back, depositing over and over and over, it'll just automatically put everything on cycle. So imagine you receive $50 in dividends. Instead of taking the cash, right, instead of having to have it settle, okay, or if it goes automatically to a bank account and then deposit back into the broker, okay, either way, the DRIP is just going to go ahead and buy some more shares. And next quarter, you're going to earn dividends on your original shares plus the new 0.5 shares, making your next payout slightly larger. And so the cycle repeats, and investing and increasing your base constantly. But please make sure you guys are looking out for your taxes. Okay, take care of that. Put some money away. Don't spend everything. So mitigate the risk, right? The downsides of dividend investing. Okay, so they can be dividend cuts sometimes. Okay, no investments can be without risk. And high dividend yields can be trapped sometimes. And tax implications must be understood to maximize the after-tax returns. We must be cautious investors, right? So the dividend cut is the ultimate risk. A dividend cut signals financial distress or a major strategy shift, often leading to a sharp decline in share price. Okay, that's why checking the payout ratio against the free cash flow is going to be essential, making sure it's profitable. And the yield, right? A very high yield, which is often above 8 to 10%. It's a pretty good range to check out. And it's frequently a sign that the stock price has collapsed and that the market expects a dividend cut. And when you buy the stock, the dividend is cut and you lose money on the stock price and the income stream, okay? And that could really hurt. Okay, so keep that in mind. So opportunity costs. By focusing on only mature dividend payers, you might miss out on certain high growth companies, like many in tech, that reinvest all their earnings back into the business, leading to higher capital appreciation and of income. Okay, so they're focused on like the super end game plan. okay, which is ultimately the smarter plan. And there's going to be sometimes some new ETFs that are dividends that you can invest to, instead of just focusing on the super old ones. So do your research, okay, depending on any time period that you're watching this, okay. Some things are going to be more popular than others during certain time periods, and focus on whatever sector that's pushing the future forward is my best recommendation. So taxation, all right, understand the difference between the qualified low tax rate and the non-qualified ordinary income tax rate dividends. So use tax advantage accounts if you want to, like an IRA or 401k. Downsides of those though, they're capped out. So I believe 401k only holds around like $23,000 a year, and you could put way more money than that away, okay, in the stash, especially if you're in stack mode. And a Roth IRA, if I'm not mistaken, I believe it's $7,000, and then when you're 50, it goes up to $8,000. So that's not nearly enough money. You could put that money away in a single month. Okay, it's people who spend $50,000 a day on ads. Okay, so it really just depends. That's not enough money. Those can be traps, so don't really focus on those. Get in your bag and believe yourself. You can run up M's, I promise you, inshallah. So geographic risk. So international dividends often carry foreign withholding taxes, which can be partially or fully recovered, but add complexity and potential cost to tax filing. And they always investigate the specific tax treaties for international holdings, making sure that everything is proper before you just buy into something, okay? And you can construct your income portfolio, okay? So successful dividend portfolios, not just a collection of high yield stocks, but a balanced machine designed for stability and growth across various sectors and time horizons. So sector diversification, okay? Get some different sectors in there. If it's tech, maybe power, maybe it's healthcare, okay? Whatever is important within the time period you're watching this video, do your research first, okay? And go ahead and invest. Take your time. So spread your investments across stable sectors like utilities, consumer staples, healthcare, crypto, etc. Okay, there's gonna be a lot of different sectors you could check out, okay? And strong industrial companies, etc. This ensures that if one sector struggles, another could be doing extremely well, okay? Or if the US does a deal restructuring the power grids or something, then maybe power sectors might be doing well, okay? Things like that are going to be put into play depending on what's happening in the economy today. So apply what's happening in your current society and just go to the stock market and make the right decisions. And inshallah, you'll make some good money. So look for companies with high cash flow, low debt, consistent earnings growth, and a history of raising the dividend, not just paying it. And consistent growth is going to be your key to beating inflation. So the ETF, right, and mutual fund usage. So use dividend-focused exchange-traded funds like those tracking the dividend aristocrats. For example, Noble or high-yield funds. For example, BYM, to gain immediate diversification with minimal effort. And this can form the stable, low-maintenance core of your portfolio and your income calendar strategy. Okay. Strategically select companies with different payment months. Some pay in March, June, September, December, others in January, April, July, October. And this can smooth out your monthly income stream, giving you a more consistent passive income flow in general. So do your research, invest in the sector that's going to pay you out consistently and make you some good income. Okay. And cultivate passive wealth. So key takeaways. So dividend investment, it's not about getting rich overnight. It's about building, once again, passive income. But what people don't know about what's called passive income means you got to hustle for the income in the first place. Okay, so you got to be hustling for as much active income as possible. Then once you invest, then you earn passive income. Okay, everything in life has to be earned. Okay, you have to understand that there's no such thing as just chilling. No, you got to earn it and then you could chill. All right, so go hustle, go get some money on, then invest and you could chill, live off your passive income. Okay, but right now, if you're in stack mode, you're staying down, you're grinding, get to it. So focus on safety and growth. So prioritize dividend growth and safety. Okay. So look for a low payout ratio and low debt. Okay. Especially after you just got in this stack mode for years, however long you just took grinding your company. Okay. Scaling up your job, doing whatever. Okay. Putting money away. You don't want to invest into a dividend that you expect to pay you out stably to just crash. Okay, so do your research, make sure they don't have a lot of debt. Okay, even God talks about debt for a reason. Okay, debt can really be a sinkhole. Okay, if you get into debt, it's like your money pretty much gets negated for no reason. You make money, but then it has to go to debt. So it's like you get nothing in your pockets. You can't put it into investments, and you're just in debt. Okay, so debt is extremely trash, and it pretty much cancels out your money. Okay, so focus and see. Okay, did the company pay it off yet? Okay, is the company drowning? Is it a fresh new company that just took a big loan from someone? Okay, and if they fail, then they're going to be drowning. Okay, that might not want to be something where you want to invest your hard-earned active income into. Okay, so take your time, do your research, and then hop into something. Okay, avoid Euro traps. Don't just focus on that. Okay, sometimes there's things way bigger than the direct active income. Focus on the stability. And you can use drips and monthly contributions to take advantage of compounding and other cost averaging automatically. Okay, pay your rent, groceries, do what you need to do, give your money to whoever you need to give. Okay, and then put some money away into your dividend investments. Okay, keep stacking cash and watch it grow quickly. And utilize tax advantage accounts if you want. If you have a job, then do a 401k. I don't recommend a Roth IRA, just do a normal tax account. Okay, once again, believe in yourself. You can do way more than $8,000 a year. Okay, putting away that money is something that everyone could do. All right, and $8,000 a year, you can definitely put way more than that a year away. So do a normal account, individual, taxable, and just take care of your taxes. Not that bad. Okay, and your growth isn't going to be stopped. But if you have a job though, and they pay out 401ks, I would take advantage of that. Just put a piece of your check away, and then if you want, as soon as you're older, you have that money there, and then you can pull it out tax-free if you even want it. So, and you can maintain diversification like this too. Okay, you can invest into certain ETFs that have a bundle of stocks, so you don't have to just rely on single stocks. Okay, and you could use, once again, different ETFs to build a robust, diversified foundation. Okay, so that's how passive income is going to be formed. Stay prayed for God, keep running. Head over to Stackmode.net for all trading education. Mentorship slots, they're getting filled up. Class has been getting booked up. So yeah, if you want to book the next call, go ahead and book before all the slots are filled up. Peace. All right, let's talk about what liquidity is in crypto. Let's make it easy. Liquidity refers to the ease to which an asset can be bought or sold in a market without significantly affecting its price. And in crypto, it's critical due to the market's volatility and decentralized nature. Volatility means quick price action. Crypto is always going 24/7, so the market never slows down. There's going to be spikes that can happen in the middle of the night while you might be asleep, stuff like that. And it's also decentralized, meaning that everything is done on the peer-to-peer transaction system. Okay, and there's going to be no middlemen involved, no banks involved, and no one to approve whether or not yes or no the transaction is going to go through. Just as soon as it goes through, everything's automatically done via the smart contracts, and then the cryptocurrency can be sent from one party to the other very, very successfully, inshallah. So trading volume. Higher volume indicates better liquidity, okay, and volume is pretty much going to indicate money. Okay, so the higher volume something has, the more money something has, which is going to equal the more people playing it a lot of the times. And major coins like Bitcoin and Ethereum are more liquid than small cap tokens due to the fact that they have more money involved in them since more people trade them, and there's going to be big companies, governments, and hedge funds putting money into it. Okay, big whales. Whales are going to be people who have large amounts of money, and when you have whales investing into something, something's going to have way more liquidity than other things, depending on how popular it is and how heavily invested something is into. And centralized, it's going to be Binance, and something decentralized is something like Uniswap, and the type of exchanges impact the liquidity. For example, Bitcoin on Binance has a high liquidity due to its large order book, allowing large trades with minimal price impact. So why does liquidity matter in the first place? Liquidity affects trading efficiency, cost, and strategy. Low liquidity can lead to significant price swings and higher cost. Price stability. High liquidity reduces volatility for large trades, meaning that if someone puts on a long, prices are going to burst into oblivion, or if someone puts in a sell, prices are going to dump down into the ground. Okay, and execution speed. Liquid markets allow for faster trade execution. Since there's going to be more people trading, there's going to be more of that asset, whatever you're trying to trade, available. Okay, so the more volume means the quicker you're going to be able to get filled, and the faster you're going to be able to trade. And lower cost. Tight bid. Okay, a lot of the time the bid is going to be what you sell at, and the ask is going to be what you buy at a lot of the times. Tight bid and ask spreads in liquid markets reduce trading fees. Okay, so you want your bid and ask spreads to be as close as possible. Okay, you don't want your bid to be way like lower than your ask and stuff like that, vice versa. Okay, because you don't want to buy something with a high ask and then you try to sell it and then the bid is super duper low because there's not enough liquidity. Okay. And risk management. Liquidity ensures that you can exit your positions quickly. So I'm not too sure if you've entered into something with low liquidity, but if you ever tried to sell and price is just pausing, not selling, not doing what you wanted to do, that's most likely because the liquidity is low. Okay. So when you're trading things with high liquidity, you get to avoid that and you get to really just trade how you want quickly and almost instantaneously. For example, Bitcoin versus a low cap token. Trading 100K of Bitcoin on Coinbase has minimal price impact, okay, because there's so many people with millions of dollars worth of Bitcoin. While the same trade in a low cap token on a DEX might move the price 10%, okay, because you're going to be a lot of the liquidity, you're going to be a lot of the volume, you're going to have a lot of the money controlled in it, you're going to be one of the largest investors. So what you do can move the market, okay, but when you invest in things with high volume, okay, it's not going to have big impact because as it's going to be other whales too. So understanding slippage in the first place. Slippage is the difference between the expected price of a trade and the actual executed price, often due to low liquidity or market volatility. And what impacts slippage? Larger orders in low liquidity markets cause significant slippage, okay? So that means that when you try to sell, there's going to be no one to fill you. Say you buy like 60% of a random coin, who are you going to sell it to? You own majority of it, okay? So it can be a little difficult sometimes when you own a majority of it. And yeah, timing. Slippage increases during volatile periods like the news events, okay? And order types. Market orders face more slippage than limit orders. And you could still own, like, it's a little bit different between the stock, okay, because there's going to be a lot of legal processes and stuff in place to have shareholders buy like all the stocks on the back end and stuff like that. I'm going to make sure I detail how stock shares work and stuff like that more in depth again and again. But cryptocurrency, you can pretty much be centralized by owning a large percentage of it and just being a large investor. Okay. And automated market makers, AMMS, like Uniswap, can calculate slippage based on the pool swap. So on Uniswap, swapping $10,000 in a small pool might cause 5% slippage, meaning you get 5% less value than expected in the first place. And how does liquidity affect slippage? Liquidity and slippage are inversely related, and higher liquidity means lower slippage due to the fact that there's more orders, okay? So when there's more orders, there's going to be less slippage, okay? Liquidity pools. In DeFi, larger pools, okay? USDT, Ethereum, for example, they have lower slippage, okay, due to the fact that they're very popular. Market participation. More traders increase liquidity, which stabilizes prices. In thin markets, low liquidity tokens can see 20% plus slippage on moderate trades, okay, due to the fact that there's not enough orders, once again. And a 1 million USDC ETH pool on Uniswap has low slippage, okay, for a $1,000 trade. But a 10K pool for a small token might see 10% slippage, okay? Which means you're gonna go ahead and receive less money when you sell, and yeah, it's pretty much what it's gonna mean. And factors influencing crypto liquidity. Several factors determine liquidity in crypto markets, impacting strategies. So think of slippage kind of like fees. So exchange type. Centralized exchanges often have higher liquidity than DEXs, and high market cap coins often attract more traders due to the fact that people know it's going to be a solid value investment, okay, and they can go ahead and get some APY, some annual percentage yield returns on their dollar, which means that year after year they expect their dollar to go ahead and increase by just buying and holding in something with value. And trading volume. Higher volume correlates with better liquidity as well too. And market maker activity. Bots and institutions provide liquidity on major platforms, which help move the market. And 24/7 is how the crypto market moves, and the markets enhance liquidity, but they vary by region. For instance, Binance's Bitcoin USDT pair has a high liquidity due to its global user base and market maker activity. And let's talk about managing slippage in trading. Traders can minimize slippage through strategic approaches and tools. Using limit orders. Limit orders specify your price to unavoid expected limits, and with limit orders, you won't get your price filled until price comes in contact wherever you have your limit order. Check the liquidity. Review order books or pool sizes before trading and check out the volume. Make sure it's decent. Okay, don't be trading small stuff and then you have a large percentage of it you try to sell and then you can't get out. That goes for the same thing with options too. And smaller trades. Break large orders into smaller chunks to reduce the price impact. Okay. And timing. Trade during high volume periods to leverage better liquidity. And on an example, on PancakeSwap, setting a 0.5% slippage tolerance for a $500 trade ensures you don't lose more than $2.50 to slippage. So some tools for assessing liquidity. You can use CoinMarketCap, CoinGecko, okay, to check the trading volume and the market depth. TradingView shows you as well too, whatever you want to use. Check out the order book. Platforms like Binance show you the bid-ask spreads and what whales are doing and stuff like that too. You're going to be able to see some programs where you can check to see how large amounts of money are flowing in whatever token that you're researching. And the DeFi Pulse. It tracks liquidity in DeFi protocols, as well as DEX analytics, like Dune analytics to show pool liquidity. Okay. And we're not going to make that. Forget that. And Dune analytics can reveal a Uniswap's pool liquidity depth, helping you predict slippage for a $10,000 trade, for example. So low liquidity tokens on Uniswap saw 20% slippage during hype-driven trading, costing trader thousands of dollars in fees kind of for no reason. And high liquidity during the 2023 rally allowed $1 million in trade with 0.1% slippage, showcasing centralized exchange efficiency. So things with higher market caps, okay, are going to go ahead and have less slippage a lot of the times since there's enough orders, value, and enough back end, okay? And liquidity in centralized versus decentralized exchanges. Centralized and decentralized exchanges handle liquidity different, impacting slippages. CEX, this is centralized, is high liquidity via order books and market makers, okay? For example, Kraken's BTC/USDT pair, okay, or ETH/USDT, okay, something like that. And a DEX. And liquidity pools vary by size, and they have small pools to increase slippage. And trade-offs. CEXs offer lower slippage, but they require trust. And DEXs are trustless, but riskier for low liquidity tokens. For example, $50,000 on Binance has less slippage than a small Uniswap pool. So monitor the volume, use stop loss limits so you know when it's time to close your trades. Make sure you're doing your research on what you're investing into, okay? Batch your trades, split large orders to minimize price impact, okay? And for instance, splitting a $100,000 trade into 10 $10,000 trades on Uniswap can reduce the slippage from 5% to 1%, for example. So little tools and tricks you can use to go ahead and reduce your slippage fees. And exercises for understanding liquidity and slippage. You can check the BTC USDT liquidity on Binance, okay, for 30 minutes, okay? Just study the charts, okay? You can simulate a $1,000 trade on a DEX and calculate the slippage. And you can analyze the low liquidity tokens, order book on CoinGecko as well too. And go ahead and check out the trading forums, Reddit and stuff like that, and just do your research. And comment below, how have liquidity and slippage affected your trades? Did you lose any money to it? Talk to me about it in the comments below. What strategies do you also want me to cover? Head over to Stackmode.net. Catch you guys in the next one. Stay prayed up to God. Keep grounding. Catch you in the next one. Peace. All right. Discipline in trading is the ability to stick to a well-defined plan, manage your emotions, and follow your risk, even under pressure. So even if you're performing extremely well, you're in your bag, you're making bread, it's really important to always stay humble, okay? Know what we're doing and stay focused on the system, okay? If you're a break and retest trader, you stick to that. If you're a breakout trader, you stick to that. Whatever you were doing to get you to that bag, you can't change it up. You shouldn't switch it up. and understand that consistency is going to be the most important aspect of where we're trying to succeed at. So consistency is going to come from treating trading as a business and not a gambling casino. Okay. So when we're treated as a business, we're understanding that the goal of a business is trying to use our money to make some more money. Okay. So you're going to be putting your profit away, breaking your profit down, and understanding like, okay, I'm not just going to go ahead and withdraw and go blow all my profits. Let me withdraw a percentage of my profits, keep some in my account after wins, and let me go ahead and invest into certain things like long-term plays, like crypto, shares plays. Okay. Invest your money into making more money. Being structured and disciplined is going to take a lot of pressure off of you over time. Okay. The more disciplined you are today, the easier time you're going to have in the future, inshallah. So create a rule-based system. So whatever you like to trade, whether it's break and retest, breakouts, know what criteria you're looking for. Break and retest, for example, okay, you're going to be waiting for an area of resistance to be broken and then turn it to support, okay? Or if you're going to be waiting for support to be broken and turn it to resistance. Or if you're a breakout trader, make sure you stick to your 4-hour close rule, okay? Depending on what type of trader you are, follow your system. And your emotional control is also going to be a big factor in real life and the charts too. Avoid impulsive decisions driven by fear or greed or just any type of idiocy. Okay, we're all humans. Sometimes we all make mistakes. There's plenty of times I would make impulsive trades, okay, causing myself to just lose. But then I realized, I'm like, you know what? This isn't going to benefit my future. This isn't going to feed my family. This isn't growing my account. I can't be making mistakes like this, okay? And over the years, things got a lot cleaner and was able to just finish off the years profitable. Alhamdulillah. So risk management, okay? Stick between 1 to 10% of your account per trade. This way, you're not going to be able to blow up your account in just a couple of trades, which can be detrimental. Okay, there's times I put in a whole check and destroyed it in one trading session, okay? And I don't want you to go through that. And this is why you need to have your trading plan in place, because no one can stop you from clicking buy and sell, okay? You're in full control of absolutely everything when you sign up to be a trader, okay? So it's a great thing, but it can also be a bad thing too if you lose yourself. So stay focused, okay? This is why God is really going to be important too, okay? Keeps us humble, keeps us disciplined, keeps us focused. Okay, so if a disciplined trader runs up a bag and they stop hitting certain trades that they want, okay, they might get emotional. They might be like, what? I was just winning for a whole month. I was just hitting every single trade. How am I losing? Okay, taking multiple trades a day, oversizing, trying to make some money back. We can't do this. We can't lose ourselves due to ego, due to any type of emotions that we're feeling. Okay, we got real people to protect and provide for. Okay, we can't fail. Okay, and failure is just not going to be an option, especially when we're going to hop in on the charts trying to succeed. So let's be structured, let's keep ourselves together, and let's keep ourselves composed. So why discipline is going to be your shield. Without discipline, traders risk wiping out their accounts, and discipline protects you by enforcing structure and rationality. Okay, when you know what you're trading, okay, you know, okay, I know why I'm trading this. Okay, this is going to be a good investment because of X, Y, and Z, fundamentally and technically. When you know where you're going to trade, okay, when you know where your entry is, when you know why you're going to enter the trade, it's going to be an important piece of succeeding, okay? Making sure you're not doing absolutely anything on the block is going to be a big part in whether or not you succeed in trading or not. Why am I closing at this place? Why am I entering at this place? What are my parameters, okay? And keep yourself on a strict, structured plan depending on whatever you play. If you're a crypto trader, okay, focus on how you want to trade crypto. If you're a Forex trader, focus on how you want to do that. For stock traders, etc. Okay, be the best at whatever sector that you trade in. Play whatever strategy you like to play. Okay, and become the master of it and stick to it. Find your consistency. Okay, whether through paper trading or on your actual account. Once you find that edge that you like personally, whether it be a break and retest, breakouts, whatever, stick to it. Journal each of your trades and stick to it. Stick to it. Over 90% of normal traders, retail traders, non-hedge funds, or large bodies of money pulled together, included just individuals, lose money due to a lack of discipline. Okay, and discipline prevents catastrophic losses from overtrading or ignoring stops. Okay, it's like real life. For example, when you're putting money away in your savings account, if something hits the fan, you're going to be good because you were disciplined. Okay, you were holding back from certain things that you wanted to buy immediately. Said you were in stack mode, you were staying down, putting bread to the side, and you were growing your wealth. Okay, and you were able to handle situations if something were to happen. And emotional stability, it keeps fear and greed in check, reduces panic selling or FOMO buying. Okay, panic selling can sometimes happen. Let's say you're up in a position. If you don't know where your stop loss is, which is an area where you should exit your trade, then that can be a problem. Okay, if you don't know where you want to close your trade, which is an area where you want to take your money, your take profit, that can also be a problem. Because if you're getting reversed on at a place where you should have already closed, then you might just close at a loss, and then price might break it out, and then you might be emotional, like, oh man, price stayed up in the same place. This is why it's important to have a strategic plan. When you have a strategic plan, you know where you want to buy, you know where you want to exit, etc. That type of stuff just does not happen. And disciplined traders with stop losses exited early, while others held losing positions, losing 50+% of their account in a single trade because getting emotional. Okay, so if price hits your stop loss, you gotta close. You just gotta close. Okay, there's no fighting, no nothing. If price hits your stop loss, that's it. Okay, that's it. We're gonna be on to the next trade. Okay, God is good. Just grateful we had the opportunity to even put down some size in the first place, and we're gonna come back stronger. Okay, just come back stronger. That's it. That's all we can do. Some common ways that traders destroy their accounts. Undisciplined behaviors can lead to account blowups. Let's talk about some dangerous pitfalls. 1, over leveraging. Okay, over leveraging, putting on too much size. Okay, playing with too much money and using excessive leverage or margin can amplify losses. So for example, 100x leverage, and leverage is going to be when the market makers or whoever you're trading on with the broker is going to give you pretty much money to play with as long as you meet a minimum amount of money. Okay, so you can in turn play with like $100 margin, but you're playing with like $10,000 worth of size, for example. Okay, but if you're not careful with that, it can wipe out your account in one move very significantly and quickly. And revenge trading can happen. So that can double down after losses to recover after a decision like that. Sometimes traders can double down, okay, putting on more size than usual. Be like, you know what, I'm trying to make this back and be on the profits. Let me put on the size. Okay, then it just leads to gambling in a downward spiral, all because you got into an emotional situation, you lost your discipline, and you lost your footing. And holding losing trades, hoping for a rebound. And chasing hot trends without research. For example, buying meme coins at peaks during the 2021 bull run. And excessive trades increase feeds and emotional fatigue. Discipline counters these by enforcing rules and limits, keeping yourself structured, and making sure you don't lose yourselves. And building a disciplined mindset. Discipline starts with mental preparation, and you can help cultivate habits to stay focused and rational. And sets you clear goals. You can set realistic targets. For example, 1% monthly returns with like a 5% drawdown. Okay, so don't just have straight profit goals though. I recommend just trading. Okay, it's really just going to help you just grow your structure over time. And routines. You can begin each day with market analysis and trading checklists. And for example, you can review the news and technicals for 30 minutes, see what's going on within the markets, be hip, get updated, and do your thing. And continuously learn. You could read books like Trading in the Zone by Watchlist, Stackmode for key steps of probability. It's going to be a lot of books you can go ahead and check out to go ahead and get informed too. Okay, and accountability. Accountability is going to be extremely important. Okay, be accountable for whatever you do. Okay, if you make a mistake, own it. Okay, if you like, you know what, I overtraded today. No, the market's a scam. The market didn't do anything. Okay, if you made a mistake, you gotta own up to that. You gotta take it to the chest, and you gotta really let yourself progress from that mistake. Take that loss as a lesson, and then go ahead and progress. Go forward. So risk management, it's gonna be your first line of defense. Risk management is discipline and practice, and it ensures that you never risk more than your account can handle in the first place. Never trade with rent money, grocery money, or any type of bread that you're clenching your butt cheeks if you lose. Okay, just don't do that. Especially if you're a beginning trader, risk only 1 to 2%. As you get better, then it's going to be 1 to 10%. And always set a stop loss if you're a futures or forex trader as well too, due to the fact that you can get margin called, and if you lose money on the margin, you can get sued by the broker. So be careful with that. Options, your stop loss can be the contract, so it's a little different. So diversification. You can spread risk across different assets to avoid single point failures as well too. And a risk to reward ratio. You can aim for 1 to 2 or better. For example, you can risk $100 to gain $200. So that's a 1 to 2. 1 to 4 is you risking $100 to gain $400. Okay, so things like that. So you can also backtest strategies in the worst case scenarios too, like certain crashes, and see how the market developed during there too. See how people bought the dips and see how the market trended afterward. Risk management prevents a single bad trade from wiping your account, even if a crash and stuff like that happens, or bad news and stuff. Okay, so choose what you want to do. And crafting a bulletproof trading plan. Trading plan is going to be a roadmap to disciplined trading. Okay, you can write it down and follow it strictly. Okay, make sure you have your entry and exit rules once again. Okay, define your clear signals. No, you know what? If I'm a retest trader, I'm going to wait till resistance gets broken and turn it to support. And then trading hours. Okay, you can limit trading to high focus periods to avoid fatigue. Okay, or set your alerts. Okay, set your alerts on your phone at your levels that you want to play, and then you can go ahead and get in your trades just like that. And track your performance too. That's going to be important and imperative to succeeding. Track your performance on Discord or journal or whatever. And don't deviate from your trading plan. If you hop into a trade, don't go try to hop in something else immediately. Okay, take your time. Okay, be structured, be disciplined. If you tell yourself, you know what, I'm going to take these type of trades, then take those type of trades. Okay, don't deviate outside of the plan. And there can be some updates in your trading plan too. If you notice you're just losing consistency, okay, be like, you know what am I doing wrong? Okay, but once you catch your edge, once you catch your consistency period, okay, you're good. Stick to that. Do that over and over again until you never trade again. Okay. So if you feel like you're about to crash out, if you feel upset, that can really derail how you feel. Okay, your discipline, and that can definitely derail your P&L. Okay, hop off the charts. Okay, you can go pray, be grateful that you can just make money by clicking buttons and looking at a screen in the first place. Okay, you're good, you're blessed. Okay, you're blessed. Understand that you're even blessed to even have internet and have an opportunity to just make money virtually. Okay, people back in the day used to have to slave, move rocks, all types of stuff. Okay, so just be grateful in the first place and put a timeout. If you got to take a week from trading with actual bread for a week or two, do that. Okay, go paper trade, sharpen your edge, journal, take it serious still, and let's see where you're at. You can also use trading bots to enforce rules on certain platforms too, okay, like Binance. And you can join trading communities to share certain experiences. Yeah. So journal. Okay. Apps like the Stackmode app, which is going to be coming out soon, or Edgewonk, Notion, Discord, notes on your phone. Okay. In-person journals. You can go ahead and journal every trade, and that builds accountability and reveals patterns to strengthen your discipline. What you want to log is your entry and exit prices, rationale, emotions, and your outcomes. Okay. And do weekly reviews. Check everything out. Identify your undisciplined trades. See what you did wrong. See how you could have learned. Okay. And see if you took any trades outside of your plan. Calculate your win rate. Okay. See how much you win. Okay. If you're noticing that, okay, I have a 90% win rate. It's not meaning increase your size significantly. Okay. Just take your time. Be patient, and let's just stay locked in. Don't P&L trade and get averted from the plan. Okay. See how much you lose. Okay. If you're losing extremely often, see what you're doing wrong. See if you need to change your edge and stuff like that. If you notice you're too much on the smaller time frames, then go to the higher time frames and play your edge there. All candlesticks formations still work the same. Just depends on what time frame you're on. Okay, and learn from your mistakes too. Don't crash out. Okay, every time you take a L, really take it as a lesson. Okay, so for instance, if you did overtrade, for example, don't come on the next day thinking, okay, I need to make up from yesterday's loss and make some more bread. It's a completely new day. It's a completely new day. Just run it up again, start over. And the whole reason you're in that situation is because you weren't disciplined in the first place. So fix your discipline, get restructured, come back stronger. So disciplined traders with stop losses preserve capital, while others lost 70% holding through the dip. Okay, so stop losses, especially for futures and forex, can just prevent you from getting margin called, owing the broker money, or going through any hard financial situation, sending you back further from running it up. Okay, so set your stop loss, play wisely, be aware of margins, and be careful for news too. If you're a futures or forex trader, when news comes out, your margin can go ahead and increase. So be aware of that too. And don't chase and copy trade other people too without understanding. Okay, if they're dropping in form notes and stuff like that in the signal channel, that's fine. Okay, like when I give my signals, I always try to make sure I give you guys timestamps, reasons why, because I don't want you guys to be trading the signals forever. Okay, I want you to eventually get off of that. But disciplined traders like to just copy trade people without any correlation or understanding, and you can really lose some bread like that. Just because someone put bread into a position doesn't mean that they're going to be a solid or disciplined trader, okay, causing you to lose big. And that's definitely not what you want. So discipline prevents emotional decisions that destroy your account quicker than it definitely needs to be. So instead of you growing money positively, having a positive APY, annual percentage yields per year, you're destroying your account, destroying your future. Okay, and it's not worth it. It's not worth it at all. Okay, don't put yourself in debt. Don't set yourself back. Don't destroy the bread that you're working hard for due to emotional decisions. It's not worth it. So when market is stressful too, you have the ability to also not play. Okay, you don't have to trade every single day, especially my day traders. Some of you guys think that you have to trade every single day. Not true. Don't have to do that. Okay. If market's too much, if it's not setting up how you want it to, you can hop off. Take a break. Set your alerts at levels that you think are confident in. See if there's closes at those levels and go ahead and play them. Okay, volatile markets really test your discipline the most. Okay, stick to your plan. If it's not how you want, you don't have to trade just because there's volatility and price action going on. If it's not the setup that you want, you don't have to play it. Okay, reduce your risk too. Okay, if you feel like market's too volatile, it's too much going on, you don't trust it, play with less size than you normally would have. Okay, this way you're not going to be shaking in your boots whenever size is down. And monitor the news. Stay informed, won't react impulsively. And take a step back. Take breaks during extreme volatility to reset. And there's some exercises to build discipline. Okay. Number one, write a trading plan, okay? Do that, figure out what you want to do. Paper trade if you need, journal, and go ahead and see if you can find a mentor, okay? If you need a mentor, head over to Stackmode.net, okay? See if you guys just want to talk to one of your friends who might invest, stuff like that, okay? Someone around you could talk to about trading. So let me know what discipline struggles that you face with, and we can go ahead and talk and fix all these issues. Okay, this is going to be the lesson on buying dips within the stock market and the crypto markets. So buying dips is going to be pretty simple, and buying a dip is pretty much just going to consist of buying a low whenever the market dips down. Okay, so we know that the goal of the stock market and the cryptocurrency market, okay, if I go ahead and pull up a profitable stock, for example, okay, I can go ahead and see from left to right how chart starts small. Okay, Nvidia stock started at $2 a share, let's say around 6 years ago. Now we're trading at $177 a share. Okay, large percentage increase on our funds. Okay, if you were to go ahead and hold shares for a couple of years. Okay, and same thing with the cryptocurrency markets. Okay, the goal of it is to just hold, and for the company or crypto token creators to keep innovating with the future. That way it's going to go ahead and bring value to whatever it is, and value is going to equal more people investing, and more people investing is going to equal more money, and more money is going to equal a higher share price, inshallah. Okay, so buying dips at the right time is going to go ahead and be an ample way for us to make money. So let's talk about it. So one, in order for us to buy dips at the right time, we need to be using our higher time frames. So the time frames we're going to need to be using in order to analyze everything is going to be our daily time frame. The daily time frame is going to be our eyeballs. We're going to be able to see everything we need to see on the chart. Okay, and one screen you could see 6 years, 10 years with the price action on one screen. Versus if I get caught up on the 5-minute time frame, I can only see a month worth of price action on one screen. Okay, so it's not nearly as much price action. And the reason why we're using our higher time frames as our guidance is because this is where the whales, okay, and whales are going to be players with large amounts of funds, okay, hedge funds, okay, people collectively putting money together in order to trade in the markets, and banks and institutions. Okay, so people who are pooling large amounts of money together, we want to be trading when they're trading, and they're going to be trading at dips that are visible on the higher time frames. Okay, so this is why we're going to be using our daily time frame. When you're under higher time frames, let's say I'm on the daily, each one of these candlesticks will represent 1 day. If I'm on the 4 hour, each one of these candlesticks will represent 4 hours. So And also, like we know, just like we talked about, the goal of the stock market and cryptocurrency market is to go in an upwards direction. And only way price can go in an upwards direction is if it breaks what's called an area of resistance. Okay, resistance is an area where sellers come in, causing price to go in a downwards direction. Okay, so once again, resistance logically makes sense because this is a left to right chart. So if someone got in from way over here at $2 a share, of course they would go ahead and take profit at this resistance up here at $32 a share. Okay, they're going to go ahead and sell some shares. Okay, go take a nice trip, do what they want to do, reinvest their profits, pay off their house, rebuild their kitchen, do whatever you want to do with your profits. Okay, but eventually people are going to take profit. Okay, because they got in way back here. Some people. Okay, so this is why we are understanding why resistances gets created. Okay, people are selling because they're in from way over there to the left. So when you see resistance get created, all it is people selling. Okay, so resistance equals selling. And we know that price cannot continue within an upwards direction until price breaks resistance. Okay, if price is trying to go up and break out and future innovate and be one of the biggest stocks of all time, areas of resistances have to be broken out of, or an area above, an area of support above current price can also be broken too. Okay, for price to go and progress in an upward direction. And sometimes support